that they provide in all of their interactions and in how they get work done. And when we look at the usage of AI and cloud, I think it is especially going to accelerate also not just us, but how our clients are going to go on their digital transformations. And this, I believe this crisis is only going to accelerate that as we go over the next few months.
Okay, Arvind, now I want to ask you about changes. You have outlined some. You put out a letter to employees this morning where, for example, Jim Whitehurst is president at IBM, now leading corporate strategy, as we knew was going to happen. But also, Bridget Van Krelingen is going to be senior vice president global markets. Paul Cormier takes over Jim's old role at Red Hat. You're bringing over an executive from Bank of America to run cloud. But what's the timeline on you telling us about further changes, whether they're going to be structural changes? Maybe you're not going to do that now on your first day in the midst of this pandemic, but what should we expect as far as the rhythm of that as the year progresses?
Look, I've been quite clear, and you referenced the letter. There are two fundamental journeys that all our clients are on, the journey to hybrid cloud and the journey to AI. With Jim Whitehurst's announcement and Howard Bovell's announcement, you kind of got what we are doing on the assets that we're going to put in there, with Jim leading software in addition to strategy, as well as Howard Bovell leading cloud and being a new member of the team. As we're going to take these assets forward, Bridget has a wonderful empathy with all of our clients and a lot of expertise in industries and in providing these services to our clients. So you can see that is being put in place over there. This combination is then going to allow us leveraging all the Red Hat technologies, because we do believe that as people embark on this transformation to cloud, there is going to be an architectural war. And that war, we believe the winning architecture is going to be Linux, containers, and Kubernetes, which is part of Red Hat's portfolio. And as we bring the Red Hat portfolio with Paul Cormier into what Jim and Howard build to provide to our clients, delivered in place by Bridget, this is going to be a huge victory for us as we go both into and emerge from the current pandemic. Now, you also asked about structural changes. Structural changes will come about in response to performance. As we look at what's happening and how our different units and geographies perform, that's how we are going to react, as any business has to, in order to both be strong and be able to emerge stronger from this current crisis.
I love how you just got right down into the gears of the business right there. Let's keep talking about it, because you did point out artificial intelligence, hybrid cloud as being two areas where you said you need to, quote, deepen our understanding. Now, hybrid and AI, crowded fields right now. Google is trying to say the same thing with Anthos, pushing that message. What are IBM's key assets you think that allow you to beat them there?
Yeah. Look, I think I go back to, and it's always, what is the correct word? I think sometimes a market needs more than one player to form a market. I think we came out about a year and a half ago, October of 2018, and talked about that hybrid is the way that people are going to be able to go from going 20% into the cloud for the remaining 80%. And that's based on the mission critical nature of the work that is left to do. It's not work that is easily isolated and done. So it's no surprise to me that many others are coming after the hybrid market, given that that's where we believe the money is. By our estimate, about over $1 trillion, $1.2 trillion per year worth of opportunity. So then you say, what are our special assets? So if I go into, I think people accept that Linux is the operating system that is going to be the majority in the future. Containers is the correct way to exploit the portability of workload, as well as the right ones run anywhere, depending on where it's appropriate, be it a private or a public cloud. And Kubernetes is the way to do automation and to really bring a lot of complexity reduction or simplicity into how you get the work deployed. We believe that with Red Hat and IBM, those three pieces are the correct architecture to go succeed. And with the number of people we have working in both the upstream open source, as well as hardening those technologies into products that can be easily consumed by the enterprise, Those are some of the special, kind of the special sauce that we bring to the mix. But then, even if you have all of the technology, many of our clients are going to require expertise to help them. Which of the applications should I migrate? Which ones should I modernize? Where is the return in terms of those applications that may need to scale up and down and give me greater intimacy with all of my clients? And we bring a lot of the expertise to do that with our services teams, as well as help our clients then run this new infrastructure in a much more effective and efficient way than they could.
Right.
Really providing both resiliency and modernization with the cloud.
Now, Arvind, please put the past in perspective for me so that I understand better the future that you want to head to. I know that you and certainly others at IBM have said IBM doesn't get the credit yet that it deserves for the work that you are doing in the cloud. But tell me, over the past couple decades, I'm sure everyone would admit that IBM has not led in the cloud, at least initially, the way that you wanted to. What were the mistakes, the things that IBM missed in the past couple of cycles that perhaps were reflected in the stock not doing what investors might have wanted it to? And how do you do something different over the next cycle?
Look, John, I'm not actually going to dwell on the past today. We are in the middle of a global health crisis. We're going to focus on both our employees and our clients, as I just got to say that as a paramount thing that we have to get done. Now, that said, we're going to help our clients through this crisis by focusing on what I described on both hybrid cloud and AI. I believe that will allow us to emerge even stronger from this crisis. And then, since hybrid cloud is the way of the future, it's going to allow us to use both those technologies and services to grow going down the road. Now, by the way, as I said, cloud, we're only about 20% in. If I look at AI, the world has only exploited, we believe, 4% of the potential productivity of AI. That's a long ways to go. And building both the assets and the services to be able to help our clients do that gives a lot of opportunity. You've heard us use Watson, and the way Watson is really helping in this current crisis, I think is a great proof point. Our Watson Assistant for Citizens is really making a difference, being used across many states, California, Texas, New York, Georgia. I mean, a really quick example. At the Children's Hospital in Atlanta, we are using Watson Assistant to conform to the hospital's guidelines, but do a pediatric assessment because the number of parents calling would overwhelm the medical staff. So being able to maybe take 1,000 of those into a digital assistant, but sticking to the guidelines to do a quick assessment of is more help needed or not, is something that's a great, great example of how AI is going to be able to help in this crisis, but then really paints a picture of what we can do post the crisis also.
Finally, Arvind, a number of companies have talked about the need to have assets closer in the United States as a result of this crisis. Over the past several years, IBM has done more global expansion, moved a lot of jobs in other areas around the world. Do you see IBM reversing that or growing more in the U.S. As a result of this crisis, or no?
Actually, John, we tend to follow wherever we can find talent and skills. So we hire or have been always hiring tens of thousands of people a year. It's based on where we can find talent with the right skills. It's not a question of globalization or going to any specific location. And the ability to do remote work has been a fundamental part of what we've been doing for 20 years. So if we have a great pocket where we can find talent, we are probably going to go there and be able to do that, whether it's the top universities in this country, the universities in Europe, worrying about people which we call sort of new collar, or really being able to go after the skills which don't need a college degree per se. And we've been hiring lots of those also in, you've heard us talk about the PTech schools in the past. So it's that basis of where do you need advanced degrees, where do you need people with a little bit more than a high school education, and being able to go to the pockets where you have enough people who are able to be employed. Well,
what a time to be starting a big job. Arvind Krishna, CEO of IBM, joining us exclusively on his first day. We appreciate you being with us, giving us the time, Arvin.
Thank you, John. My pleasure.
Look to talk to you soon. Morgan?
John, that was a great interview. Thank you for bringing that to us. IBM stock is up nearly 6% on today's broader market rally as well. Meantime, European markets are set to close in just a moment, and Seema Modi has the breakdown of that action overseas. Seema.
Morgan, early signs that Europe is turning a corner with the number of cases rising at a slower pace in Italy and France, suggesting that the quarantine measures, including social distancing, are working. Some nations like Austria are looking to ease those measures following a decline in cases. Chancellor Sebastian Kurz is saying the nation is cautiously planning to reopen smaller shops after Easter, followed by larger stores and malls, including places like hair salons, by May. Meantime, EU finance ministers set to meet tomorrow to construct a rescue package for European nations. Despite opposing views from German and French ministers, on the table, easier access to loans for small and medium-sized businesses, an EU-wide unemployment insurance scheme, and a fund to promote investment and reconstruction. Back to the markets, best performing sectors right now, transports and travel. Rolls-Royce scrapping its financial targets and its dividend in an effort to shore up some capital as demand for engines has waned, with more airlines canceling flights. Guys, back to you.
All right, Seema, thank you very much. Let's get the latest on the coronavirus outbreak. For that, we'll go to Sue back at HQ. Hi, Sue.
Good morning, Carl. Good morning, everyone. The White House economic advisor Larry Kudlow says the administration has been discussing ways to pay for the fight against the coronavirus.
This is a time, it seems to me, to sell bonds in order to raise money for the war effort, in this case, the pandemic effort, in this case, the effort to keep families and individuals and businesses afloat. I am all for it.
Hilton and American Express are donating up to 1 million hotel room nights across the U.S. to frontline medical professionals, including doctors, nurses, and paramedics. The offer begins next week. It will run through the end of May. And a tiger at New York's Bronx Zoo has tested positive for the coronavirus. The zoo says 6 other large cats are showing symptoms, including a dry cough. The chief vet at the zoo says the positive test surprised everyone. All of the cats are expected to recover. As always, for more on the coronavirus coverage, you can head to CNBC.com. But, Carl, it's being watched very carefully because we did not know before this whether or not the virus could be spread from humans to animals or whether it spreads from animal to animal. So it's very much a test case here in our backyard.
Yeah, we're going to watch that one closely, Sue. Thanks very much, our Sue Herrera. The president did warn yesterday that he could impose substantial tariffs on oil imports. Take a listen.
If they don't get along, I would do that. Yeah, I would do tariffs, very substantial tariffs, because we're independent now. We have our own oil. And if I did the tariffs, we essentially would be saying we don't want foreign oil. We don't want any foreign oil. We're just going to use our oil. And that would help to save an industry.
For more on this, let's get to our Brian Sullivan, who has a very special guest this morning. Hey, Brian.
Hey, Carl. Good morning. Yeah, we do. Let's bring in now Harold Hamm. He is the founder and executive chairman of Continental Resources. He was at the meeting at the White House on Friday. Harold, it's a pleasure to speak with you again. Do you believe that tariffs, we know the president says he will do them. Do you believe ultimately we will tariff imported oil into the United States?
No, the president sure has that authority. He has a lot of authority. What do you say in his toolbox? He can ban their oil. There's a lot of things that the president could do, and certainly tariffs is one of those, and he very well could use that. So our industry's had a double whammy. First of all, with them dumping their product at a very inopportune time. How atrocious was that timing? And into the market, just as this COVID-19 is sweeping the globe. So we've had COVID-19 plus the dumping. So the president has taken sure action on this, and they promised they'd stop, and we'll see if they do it.
The Saudis have done something unusual, Harold. Yesterday, they delayed announcing their selling prices for oil for the month of May. Effectively, maybe a feather out there, some kind of peace offering. Did the president indicate that he believes that the Saudis and Russia can make up their differences and that U.S. producers will also come together and we will be able to get a 10 to 15 million barrel per day cut done globally?
Absolutely, Brian. I think their numbers are exactly right. They'd done the math. They knew that between the Saudis and Russians that cutting 10 million barrels was exactly, we've had a 30 million barrel demand cutback. That's what's happened. And so if you took their production together, 21 million barrels, and multiplied by 30%, that's 7 million barrels, plus the 3 million that recently added, that's 10 million barrels. So the rest of OPEC cutting another 5, they knew the math, and that's exactly the numbers that they should cut. So they're right on, and I believe they'll make those cuts. So they're going to have to shut in. We know that because there's not storage capacity in the world to handle it anyway.
Hey, Harold, it's Carl. Once there's some kind of resolution on imports, on Russia, Saudi, how do oil companies domestically think about debt differently? How do they keep it from being a key point that makes them vulnerable into the future?
Well, we are vulnerable into the future, and it's something to be considered. And, we all have some debt. Most of us do, at least. And so ours is out 2.5 years almost to the next tranche. But, we all have some debt that's out there. We hope this is long gone before that can do. But it's something to think about. We need access to the financial markets just like we've had in the past. And so we need to cross that bridge, Carl.
Harold, this is Morgan. I wanted to get your thoughts. You just touched on the storage piece of this, and obviously oil is in contango right now. So for those producers that can get their hands on storage and keep it there for longer term, that does seem to be like a very viable option right now. But as we see that capacity fill up, the U.S. government offering the strategic reserves, I think 30 million barrels worth of capacity. Is that going to do enough to help alleviate the stresses, at least here in this country?
It won't be enough. But Morgan, you touched on a very important point. I think that's certainly good that DOE is doing that. Leasing that out to the industry is a very good solution here for a little bit. That's 89 million barrels, that's less than a week's production. So operators are shutting in production. Don't get me wrong. We're doing it. Every operator is cutting back production quickly. And so we're going to have to, and that's just what we do.
Harold, it's Brian again. Sir, you talked about a 30 million barrel a day demand cut. We're talking about 10 million barrels a day in supply cuts. That's still an additional 20 million barrels outside of the SPR that Morgan just referenced. How soon will we run out of oil storage in the United States? And do you believe that negative prices, in other words, you pay me to take your oil, will come if we reach that point?
Brian, that would be the case if people didn't have the ability to shut down production, but we do have, and, we've done that before. We did it in 2008, 2009. We've done it at other times when demand was low. So that's what you do. You take it offline, and, storage will fill. Might take 30 days to fill it, but it gets full quick. And so you just take the pressure off the purchasers and start shutting in production and take it offline, and that's what we all do as operators. So that's why we manage through this.
But it is tough though, Harold, and I think there's a misunderstanding. I mean, I get people that write me, I'm sure you hear it, and people say, why don't we just turn off the tap, so to speak? There are 9,000 oil producers in the United States. Some of them are like a family with one well in their backyard, the Continental, all the way to ExxonMobil. Explain, though, to our viewers why it's not just that simple. It is expensive and can be environmentally difficult to cap a well or to completely shut down production, can it not?
Well, first of all, you don't cap them. You just, if you got a 2-barrel well, you fill up your tanks on location. You turn it off for a little while until demand comes back, and then you sell your oil. So that's what you do. You have field storage, and we have a lot of that. And then you have storage and Cushing and at major terminals around the world. And some people even put oil in barges and ships and things like that. International shippers do. So all those things. So eventually you fill storage and you shut down production. So you don't cap wells. If you did that, that would be very, very expensive. So you take off the highest cost production, and then you shut down what you have to. So we keep some going. We still got 70 million barrels a day of demand approximately that's left. Diesel is still selling good. All the trucks are running. You just don't have airlines flying as much. That's down 50%, and gasoline sales is off as well. So eventually, the storage gets full of product.
Mm-hmm. All right, it appears there's some of these feeds there. Listen, Morgan and Carl, we're not perfect there, but I think everybody's doing a great job. I think Harold made some good points. I saw data this morning. Gasoline demand in America is down 50%. Basically, it's just trucks that are out there. Truly a stunning time. By the way, we got Scott Sheffield, a pioneer on Fast Money tonight. He's asking Texas to demand, Morgan, that they limit output. Kind of a mini OPEC in Texas, if you will. The irony is not lost on people.
Yeah, and certainly Texas has emerged, and I know you've been reporting on this so closely, Brian, as a hot spot in terms of the regulatory debate around whether a state like Texas, whether the country should step in terms of curtailing production here in the U.S. Great stuff. Thank you for bringing it to us. We're going to take a quick commercial break, getting a quick check on the markets as well. You got the S&P above 2,600, the Dow back above 22,000. We're at session highs right now. Stay with us.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
This is Dr. Sanjay Gupta. Join me for CNN's new podcast, Coronavirus, Fact versus Fiction. We know you have questions, and we want to help you find answers. And send me your questions on social media at Dr. Sanjay Gupta.
Make sure to search and listen on TuneIn today. Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raised Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
Works.
Welcome back. We are getting some breaking news on Carnival, the cruise line company. Let's get to our Seema Modi here at headquarters for the latest. Seema.
Hello, John. Just looking through a recent filing, the Saudi Sovereign Wealth Fund has disclosed an 8.2% stake in Carnival, the embattled cruise line operator, which of course has suffered as of late as sailings have been suspended. With this 8.2% stake, this would make the Saudis the third largest shareholder in Carnival. This is the first time I believe they've invested in the cruise line, and it certainly makes for an interesting time given the losses they have seen related to WeWork investments as well as the sharp decline we've seen in oil prices. Now, on this news, we're looking at shares of Carnival up about 21% on the day. Of course, this has certainly been a volatile stock. If you take a look at a year-to-date chart, still sitting on some big losses, but certainly a big move in today's trade. Morgan?
Seema Modi, thank you for that update. Medical tech company Becton Dickinson ramping up its efforts to test for the coronavirus. Joining us now is on the CNBC phone line, is Becton Dickinson CEO Tom Polen. Tom, thanks for being with us today.
Thanks for having me.
So you're working on several different tests with several different companies as well. I think first let's start with the work you're doing with diagnostics company Biomedomics on a test that can detect current or past exposure to the coronavirus within minutes and could be used in doctors' offices, other settings. Tell us a little bit more about that and how quickly we could actually see that start to reach offices and be used on potential patients.
Sure. So we have a whole portfolio of assays that we're launching. So the first is to help diagnose coronavirus, and that we're shipping that today. And then the second is the assay that we'll begin shipping this week, which is the test that you mentioned. There it's a simple finger stick. A drop of blood goes onto the test strip, and in 15 minutes you can determine whether or not a patient has built immunity to the virus and is therefore no longer as susceptible to infection and risk. And so still to be determined how that test will be used broadly. There's a lot of discussion around it even being used as a screening test to help people get back to work. And we'll see how that evolves over the coming weeks.
Yeah, and then on Friday, you announced that you did receive approval from the FDA for another test that you've been working on as well for hospitals that would produce results on whether someone has coronavirus or not in under 3 hours. And of course, what's so notable about this is the fact that hundreds of hospitals across the country already would have the infrastructure in place to basically be able to start using this test. Talk to us about that one.
Yeah, so that's on our BD Max molecular platform. And as you mentioned, that's used to help determine does someone have the virus. And it takes about 2 to 3 hours to run that. We just got emergency use authorization last week and are shipping that to hospitals around the country. We actually just filed for a second test as well that will go on our BD Max that will further expand our capacity. And so one of the things that's really unique about BD is, of course, we have tools that are being used in drug discovery on how the immune system responds to coronavirus so you can get the right treatments out there. Obviously, we've got a whole suite of products now used to diagnose coronavirus and determine if someone has immunity. And then, the last area is, of course, we have a range of products from infusion pumps to IV sets and other solutions that are used in the treatment of coronavirus. So working across the whole healthcare spectrum to help combat this pandemic.
Tom, John Ford here. Good morning. Last hour, we had former Fed Chair Janet Yellen on, and she was talking about how critical it is to get people back to work as a way to get the economy going again when it is safe, and how testing is going to be an important part of that. It seems to me like this test that you've talked about that's going to detect antibodies would be a key part of that, because if people have already been exposed, it's more likely that it's safe for them to go into an active workplace, get back to work. But we would need millions of tests, it seems. How quickly can you scale the production of this test, and how widely will it be available?
Yeah, so we'll be shipping beginning this week. We have the capacity to produce millions of those tests per week and can ramp that up even further. And as you mentioned, we've seen countries in Europe already begin discussing actually have cards for people that would indicate that they actually have built immunity immunization and can go back to work. We'll see how that evolves in the U.S., but certainly we see that concept that you just mentioned starting to gain traction around the world.
To that point, the UK government today admitted that none of the 17 million antibody tests that they were going to order and send home maybe work well enough to be used because of the high number of false negatives and false positives. I mean, what can you tell viewers about the reliability of all the tests that we're looking at in terms of providing reliable results?
I can't comment on other technologies that may be out there. I know we've certainly validated the products that we sell and are very comfortable in that. And I would say that the test quality has gone up over the duration. We know, for example, that the tests that we're selling today are multiple-fold more sensitive than some of the early technologies that were available to detect coronavirus. And I think that's probably true across the industry, that things are more robust as some of the more advanced technologies are hitting the market now.
Tom, just to dig into, I guess, the testing process and how that's unfolded in general, there have been a number of reports out there discussing and dissecting and analyzing why it has taken so long for widespread accessibility to tests here in the U.S. specifically. Do you feel like it has taken a long time? And what are the lessons that can be learned from some of those delays we saw early on that could be put into practice for future situations?
Yeah. In a situation like this, of course, it can never be fast enough. I mean, that's the first thing that you'll have to recognize. And so when you step back, what normally takes years to build these tests and get them to the marketplaces has happened in a matter of weeks. I think what you saw the White House enact back on March 13th, I was at the White House meeting with the staff there along with a cohort of executives from across the diagnostic and reference lab industry. And you saw the public and private partnership come together to accelerate this in a way which it hadn't happened up until that point. And I think since that March 13th date, you've really seen a stepwise increase, certainly in the number of tests being run across the country. And we're seeing every week now that number continues to go up in a very notable way. So I think getting to that public-private partnership sooner is probably a big lesson from this situation that we can apply going forward.
Tom, conceptually, do you see this when this is available at scale, that it's something we will administer to ourselves at home? I mean, is it sort of the equivalent of a pregnancy test, or will we have to get in our cars and either go to a drive-through or to a clinic or a hospital to do this at scale?
It is simple enough, but I would expect it'll still be done in a physician office. It's basically, if you've ever seen someone do a finger stick to test for glucose, for example, if they're a diabetic, it's the exact same finger stick, and then it goes into a test. It looks very similar to a pregnancy test, as you said. It's extremely easy to run. Takes about 15 minutes. We actually have another assay in our pipeline that will actually diagnose coronavirus with the same ease of use in about 10 minutes. That's still under development, but the ease of these tests will continue to improve. And as I mentioned, the new test that's looking for whether or not someone has built antibodies and is now immune to the virus, it is very simple. It does only take 15 minutes, and it can be run in basically any care setting.
Tom Poland, thank you for joining us today. Of course, time is of the essence. We appreciate you breaking down the latest on some of these tests and diagnostics offerings that are coming out of Becton Dickinson right now. Thank you.
Thank you so much.
Just want to get a check on the markets because we are at session highs right now. The Dow is up 1,078 points, or about 5%. The S&P and NASDAQ both up 5% as well. Every sector is in the green in the S&P, led by utilities and materials, actually. And every component in the Dow is also higher, led by American Express and Raytheon Technologies. And Carl, of course, we're seeing this market rally as we've seen some of the cases and some of the data within some of the hot spots like New York, like places in Europe, like Spain and Italy. We've seen some of the numbers start to come down a little bit right now. But keep in mind, we had the U.S. Surgeon General over the weekend say this is basically Pearl Harbor week, at least here in the U.S. This could be the hardest, saddest week. And so it's one that Americans need to I guess, hunker down and buckle their seatbelts for as we potentially peak, at least in some of these places like New York?
Yeah, we'll certainly hope so. I mean, there's been some theorizing, guys, that the testing numbers we get over the weekend may vary from the ones we get during the week. So we're going to definitely listen closely to the briefings that we get, especially out of New York today. But John, a lot of these sort of big data, alternative data models are suggesting that at least New York could be within days of peak hospitalization, which is why I thought that IBM interview was so key.
Yeah, Carl, and it's so difficult to look at the market and figure out what really matters at a time like this. The toll on human life, of course, is primary. You do hope that we get to a peak soon. Of course, we got to come down then on the other side and continue to take precautions. It's useful to hear from people like Tom just now about tests that could be in the market that would help us to have more confidence and assurance on what happens next in getting the economy going again and people's livelihoods saved once their lives are saved as well, Lord willing. But, we continue to track it.
Yeah, it's already been a remarkable morning of news from IBM to Starbucks. Howard Schultz, obviously Yellen and Kudlow on our air. That's not even 12 o'clock noon on the East Coast. We'll take a quick break here and continue our coverage. Squawk Alley's back in just a moment.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Hey everyone, it's Tremaine Lee, MSNBC correspondent and host of the new podcast, Into America. In our latest episode, Republican giant and longtime Senator Lindsey Graham is for the first time ever facing a real challenge to his Senate seat. Can a relative newcomer to the scene, a black Democrat in a red state, win this fight? I head to South Carolina to find out. Search for Into America wherever you're listening right now and subscribe.
This is Dr. Sanjay Gupta. Join me for CNN's new podcast, Coronavirus, Fact versus Fiction. We know you have questions, and we want to help you find answers. And send me your questions on social media at Dr. Sanjay Gupta.
Make sure to search and listen on TuneIn today.
Yap. Welcome back. Let's get to Rick Santelli in Chicago. Rick.
Thanks, John. I'd like to welcome my guest, Johnny Fine. Johnny Fine is one of these guys at Goldman that really understands the corporate market. And all I'm going to say, Johnny, is if the Fed builds a policy or a program, usually investors and especially supply will follow. Boy, hot in corporate land. Why don't you tell us what you're seeing?
Well, Rick, we've seen $290 billion of supply in just the last 3 weeks. $290 billion is a pretty good quarter in our market. So to get that done in 3 weeks, especially with almost all the financial ecosystem working from home, is pretty remarkable.
Yeah, it really is remarkable. And Johnny, the Fed really hasn't put one penny into any of these corporate programs yet. And we still are seeing close to $530 billion year-to-date supply. What's driving this?
So I think a couple things is that, firstly, obviously, the signaling impact of the Fed using investment-grade credit as a policy tool for the first time in its history is immensely powerful. But there's one other part of what happened on March 23rd that I think also was critical. And that is effectively the Fed moving to QE infinity and unlimited purchases of treasuries and mortgage-backed. What that did is that stabilized the treasury market and allowed liquidity to flow back into the treasury market. Prior to that, there had been real concerns about liquidity in US treasuries. And ultimately, if investors are challenging the liquidity of the risk-free instruments in our market, how can we ask them to actually take risk?
You know, Johnny, if you were to tell a viewer that's just a small to mid-sized investor how he should deal with when the Fed says they're aiming for a sector like corporates, we've learned from the ECB that once they made announcements, of course, corporate securities rallied, yields went down, spreads tightened. But the backside of that is that sometimes these programs just end or run out of gas, or the Fed loses the ability to hold up markets. How long should investors give the central bank to hold the sector up as they plow into it?
Well, importantly, I'd like to see the Fed actually start to use these programs. They've used the money market liquidity fund, and that's actually been helpful for stabilizing the front end in commercial paper markets and others. We know the commercial paper funding facility will be online mid-month, but both the primary and the secondary corporate market facilities, as you point out, Rick, have not yet been used. I'd like to see those come online. I think that can ignite the next stage of the rally in the corporate bond market, especially the lower end of our market and the less liquid elements of our market too.
Excellent. Thanks for your thoughts, Johnny. Listen, we all wish that all of these sectors could stand on their own, but when you turn the economy off, the Fed's liquidity certainly does help. Thank you for your thoughts today. Carl Quintanilla, back to you.
All right, good stuff, Rick. And even as you guys are talking about commercial paper, some headlines that registration for the commercial paper funding facility begins today, and that purchases will begin on the 14th. So we'll watch for that as well. Thanks, Rick. Let's get to the half and the domino.
All right, thanks very much, Carl Quintanilla. And gang, our breaking news coverage continues right now. Welcome to the show. I'm Dominic Chu in for Scott Wapner today. Front and center this hour, stocks soaring on optimism about slowing death rates and cases from the coronavirus in key world hotspots, including right here in New York. Our investment committee today, Joe Terranova, Josh Brown, Steve Weiss, Shannon Saccocia, Chief Investment Officer at Boston Private Wealth, and Michael Farr, CEO of Farr, Miller & Washington. Let's get a check on markets this hour. Right now, you can see here we are just about near the highs of the session, up over 5% for the Dow Industrials. That's 1,069 points. The S&P 500 up a similar percentage amount. That's up 125 points. And the NASDAQ up 367 points as well. The Russell 2000 small cap, interestingly enough so far today, outpacing all of its large cap cousins, up over 6.5% for the Russell 2K, now at a level of 1,121. Let's go through our investment committee so far today, and perhaps we will start with Shannon Saccocia at Boston Private Wealth. What exactly has you excited or a bit more cautious about today's price action? It is a considerable green day so far.
I think this is a response to what happened last week, Dom. I mean, we saw really a great week in the markets, and then last week we traded in sort of this sideways range. I think we mentioned on Friday's show that, you know, the most important data points were going to be from the virus. That's not necessarily because it's the only data point in town, but if you think about this week, we have a couple of economic data releases. We're prior to earnings season. So really, there's a bit of a vacuum or a void in news right now. So this positive news that we received over the course of the weekend about the stemming of the virus, as far as infections, ICU, hospitalizations, all of that lends itself to some stronger sentiment. And I think that we will continue over the course of this week to be very focused on what we're seeing on the virus side, given the lack of other catalysts from a data perspective.
So Josh Brown, let's bring you into the conversation here. The idea is that the markets are trading pretty much in tandem, lockstep with any of these coronavirus headlines. If they're positive, sentiment turns positive. If they're negative, sentiment turns negative. Is that the way that people should be navigating this market right now? Or is it only that we're watching coronavirus headlines?
Well, I think what Shannon said is correct, and it's impossible to disentangle the two things. So I would argue that the progress that we're making in terms of getting to the apex and then getting through it, if, God willing, that's what happens over the next week or two, that's way more important than the stuff that former Chair Janet Yellen was talking about this morning, where this could be a 30% drop in, or you have 30% unemployment, or this much drop in GDP. Those things, it's not that those things are completely unimportant. I don't think the market cares. The market cares about where is the light at the end of the tunnel. I think on this show specifically, all of the traders have done a great job reinforcing that idea that we are going to react on virus headlines first and foremost. So look at today. It's almost a reverse of what we saw on Friday. The XHB is having a monster day, up 10%. That is directly related to consumer confidence about this thing having an end in sight. XRT, huge day in the retail names. Again, a complete reversal from Friday. What is that about? That's not about backward-looking unemployment data. What that is all about.
Steve White.
Consumer is going to leave their house once again and potentially buy something in a store. So I think that that's the way we want to think about it. Totally agree with Shannon. The progress against the virus is more important than looking at the traditional economic data that we used to. And that'll probably be the way we are for the foreseeable future.
Joe Terranova, is there anything about today's pricing action that gets you a little bit more excited? Is this a rally that we can believe in? Many of the names that are helping to lead the way higher so far right now, I'm just looking at these screens, are names that have been on some of the shopping lists that you and other of our investment committee members have put on over the last couple of weeks. Does that mean that it's going on everyone's shopping list? And should we be happy about that?
Well, Dom, I think the most important thing for the capital markets is the improvement in terms of liquidity and functioning. And it takes us further away from the uncomfortable 2191 March 23rd low. Over the last couple of weeks, that sense of urgency that the investment community had to seek safety in the Treasury market, that has lessened dramatically. I'm going to give it as an example. The week of March 9th through March 13th, the U.S. 10-year Treasury had an 80 basis point range. That's a very heightened, urgent environment that you're trading for safety. Last week, the U.S. 10-year Treasury only had a 16 basis point range. So we're seeing compression in terms of that urgency. You're looking at other constructs of the capital markets like the VIX, which found its peak on March 19th at 85. It's at 44. And lastly, technicians will point towards the improvement in the construction of the S&P 500, the way it's trading. You now have two really nice price gaps to utilize as point of references, 25.38 to 25.74. Of course, that's on the gap opening higher and the improvement in the flattening in Italy and New York that we're potentially seeing. And then coming off of that March 23rd low, you've got a gap at 2300 to 2344. So high yield market, we're seeing some offerings there. Just overall, the way these capital markets are trading, it's a much calmer environment, and that kind of takes you away from the perilous position you were trading near that 2200 low on March 23rd.
Sure. I mean, and kind of those panic lows that we talked about back then maybe lead us, Steve Weiss, to this idea that maybe the worst is behind us. I'm looking right now, Mike Wilson over at Morgan Stanley, frequent guest on this show, talks about this notion in his note to clients today that perhaps maybe a lot of the forced liquidation in assets in these markets over the past month is now largely behind us. This will take time to fully develop. We recommend a barbell of quality stocks on sale, cyclicals in net mix, also more defensives there as well. So if you take a look at the way that Morgan Stanley and Mike Wilson are looking at this market, Steve, what kinds of stocks would you be looking at in this kind of environment, knowing or assuming, we should say, because nobody knows the future, assuming that the worst flush is now behind us?
Well, a couple of things. That's a self-fulfilling prophecy when you talk about forced liquidation, because if you get another panic sale, then you're going to see more forced liquidation from people who put money back into the market. So I'm not putting all that much credence into it. My view has been that we've seen the bottom. I do believe that we're not going to go up in a straight line. I'm going to make it very easy for the viewers. The only thing you have to listen to there are two things. The first is Andrew Cuomo, Governor Cuomo's press conferences. Ignore the White House, ignore the marketing, ignore the misinformation. You can even, frankly, ignore Anthony Fauci, even though he's phenomenal, because Cuomo is at ground zero on this. So as New York goes, that's going to be the experience. Actually, the experience should be slightly better in the rest of the country just because of the high population in the U.S. and the way it's dealt. So in my view, the market is up today for two reasons. It's up because Friday has traditionally been a risk-off day. We saw that again, so there's some bounce back from that. And because of Cuomo's statements over the weekend that we're very close and that mortality rates have been improving. So that's why we're up today, and just general optimism coming out of that. So I do think there'll be some follow-through. I can't tell you it's going to be tomorrow or when it's going to be. But I think you want to go into the names at that point. I'm not buying today for the, just took a little, bought a little more Akamai, which I had. But I think you want to go with growth. We got the 10-year numbers. Other numbers on value continues to underperform. So it's going to be the solid companies. Microsoft is going to continue to be a leader. So it's the big cap growth companies that'll do well. Not surprising, Russell's bouncing back. It was hurt the most over the last week.
All right, Steve, you bring up a good point. And the reason why I want to kind of interject here is because we know that Andrew Cuomo is in the middle of making comments right now. We want to get you to some of the numbers. He just spoke moments ago about the update on New York State's coronavirus situation. Let's take a listen to what he's saying.
We're up to 8,658 new cases. Overall, we have 130,000 people who tested positive, 16,000 people in our hospital system. 13,000 people have been discharged. Number of deaths are up once again. Number of people we lost. Number of New Yorkers, 4,758, which is up from 159, but which is effectively flat for 2 days. While none of this is good news, the possible flattening of the curve is better than the increases that we have seen. New York is still far and away the most impacted state. New Jersey is having real difficulty. And been speaking with Governor Murphy from New Jersey, and anything we can do together, we will. Michigan also. California has leveled off. And Louisiana is having a difficult time, so they're in our thoughts and prayers. Total number of hospitalizations are down, the ICU admissions are down, and the daily intubations are down. Those are all good signs, and again would suggest a possible flattening of the curve. The number of discharges is down, but that reflects the overall reduction in the numbers. Big question that we're looking at now is what is the curve? And we've been talking about cases increase until they don't. When they stop increasing, then what happens? And the projection models have a number of alternatives. Some suggest basically the curve goes up and then drops precipitously. Some suggest there's a slight pause at the top. Some suggest there's a longer pause at the top, which is effectively a plateau effect. Or again, the straight up and straight down precipitous drop, which is the peak effect. No one can tell you which will occur. They say any one of the three options. You study other countries, you've had a combination of the above. We are studying it as we have used the projection models from day one to determine actually what we do. How do we set policy and program? By following the data. Dr. Malatras has been working on the numbers, working with the statisticians and the projection models, and helping us incorporate that into an operational model. And Jim, if you want to just take a moment and speak about the projection models here, please.
Great. Thank you, Governor. As the governor said, we have been looking at projection models from the beginning to determine the size and scope and severity, and the governor has mentioned this over his briefings. We've been working with many organizations and using the data like Imperial College, the Institute for Health Metrics and Evaluation, Cornell, McKinsey, and others. And some of the initial projections that we first saw at the beginning of this was at least 100, up to 110,000 beds for COVID patients alone. And the peak would come at the end of April. Those were some of the earliest modeling from many organizations, that it would be at the end of April, around 110,000 beds just for COVID patients. There are other models, too, that we were tracking, one being lower at about 55,000 COVID beds, but again, peaking at the end of April. We follow now that we have a pretty robust data set to go by for the last several weeks. The bottom line there, the purple line, is sort of where we are tracking today, which suggests it's a little lower. And the question was, what could you do to lower those initial projections from 110,000 and from 55,000? So a lot of the activity was, we saw where the statisticians and the folks looking at these types of models said it was going. So what activities and actions could you take to aggressively lower that overall number? And the answer really was, and what the governor has been doing, was aggressively enforce and enact social distancing to lower the overall number. And this number and the current data suggest that that is exactly what's happening. And it's not settled yet, because we are going day by day, and the numbers, as the governor says, has changed a lot over the time based on what numbers come in. But this could suggest that we are indeed potentially at the apex, or beginning to be at the apex at this moment. Like the governor has said, there's been a range of models, 7 days, 14 days, 21 days, 30 days. It looks like we're towards the earlier side of that time frame based on the current projections and modeling that we've been looking at.
Thank you, Jim. But you also see on these, you see on this slide where we are now, right? And it can still go any way. We could still see an increase. So it is hopeful, but it's also inconclusive. And it still depends on what we do, right? These models all have a coefficient of what we do and how successful we are at social distancing, et cetera. And from our decision-making point of view, it doesn't really matter if we've hit the plateau or not, because you have to do the same thing. If we are plateauing at a very high level, and there's tremendous stress on the healthcare system. And to say to this healthcare system, which is at maximum capacity today, right? This is a hospital system where we have our foot to the floor, and the engine is at red line, and you can't go any faster. And by the way, you can't stay at red line for any period of time, because the system will blow. And that's where we are. We are at red line. People can't work any harder. The staff can't work any harder. And staying at this level is problematic. And if we are plateauing, it's because social distancing is working. So we have to make sure the social distancing actually continues. On the relieving the pressure on the hospital system, which is unsustainable at this rate, we're continuing what we call our Surge and Flex program, where we get all the hospitals on the line on a daily basis. They're all doing inventories. They're all doing data sheets. They're all on the telephone, and we're shifting among the hospitals ventilators, PPE equipment, who has gowns, who has masks, and that happens on a daily basis, that adjustment. Also, to relieve pressure on the hospital system, the Javits coming online is a very big deal. That is the relief valve for the entire downstate system. The 1,100 military personnel started to come in. 300 were sent to New York City public hospitals to help the New York City public hospital system, the H&H system, which has been under stress. The rest will be going to Javits to bring that up and running to full capacity. That transition is happening now. Is a COVID center now, started as non-COVID. It's now a COVID center. The majority of the military personnel will be coming in tomorrow and the next day. But that Javits Center is going to be a major relief valve. Second, the United States Navy ship Comfort. The original plan was that would come in for non-COVID people. The original plan was it would also be a relief valve on the hospitals, but not for COVID people, that it would take all the non-COVID patients, if you will, from the hospital system. That was the plan. As it turned out, there's not a lot of non-COVID people in the hospital system, which is a separate story, happens to be a good news story. A byproduct of shutting everything down is you have fewer car accidents, crime rate is way down, fewer trauma cases, so there is not a large non-COVID population in the hospitals. I'm going to call the president this afternoon and ask him to shift the Comfort from non-COVID to COVID. Then we would have...
All right, what you were listening to just now is the daily press conference by New York Governor Andrew Cuomo with regard to the update on the latest figures for the coronavirus. We're looking through there right now. In essence, the takeaway so far from his comments, the fact that the cases per day in terms of death and those confirmed with the virus appear to be at least plateauing or trending lower in some instances, depending on which metrics you look at. That is leading the governor and his experts to say that perhaps we are at or near a peak with regard to the overall cases within New York. For obvious reasons, you cannot predict exactly where this is going to go. However, with the social distancing efforts that have taken place in the state and the surrounding areas, it appears as though the initial projections for the number infected and the number who would be ultimately succumbing to the virus have now dramatically shifted to the downside, and that could be the reason why we are seeing continued moves in the upside in the market. I would note now the Dow is up about 1,150 points, the NASDAQ up 394 points. These do represent the highs of the session so far for stocks, so they are accelerating their gains, due perhaps in part to some positive commentary from New York Governor Andrew Cuomo. With that in mind, let's get back to our investment committee right now and find out exactly how they feel about the comments they just heard. As you can see there, all 11 sectors in the S&P 500 are higher. Notably, though, utilities leading the way higher, up about 8% right now. Meanwhile, consumer staples up only 3%, the biggest laggard there. Michael Farr, perhaps we'll go to you on this one. Is there anything that you just heard from New York Governor Andrew Cuomo that makes you feel as though that this rally that we have has substance or is validated in some way?
Dom, I think it's validated for a lot of the reasons that the rest of the investment committee have been saying, particularly Josh, who said that we're following the disease first and perhaps the economy second. So with good news and encouraging news about the disease, as horrible still as the news is, that it might not be getting any worse, is certainly encouraging to markets. And markets are having a relief rally today, feel good. Also, I think the investment committee for the past few weeks has been right in that volatility is here to stay. We've seen Mohamed El-Arian in the mornings talk about these days that go up a good deal and then you have a few down days and then up days. Volatility is with us, and nobody minds upside volatility. We all kind of snarl when we say volatility, and what we mean when we snarl is the down drop of 500 or 1,000 points or more. But volatility's still here. So while I think markets are probably rightly and thankfully showing some relief today, to think that we're not going to see those down days doesn't make sense. And I think investors continue to have to focus on fundamentals and strong balance sheets, because while we may have some good news, the long term for investors is still going to be kind of a rocky and I think perilous road.
Well, what's interesting, you bring up a very interesting point here, and Joe, will send this one out to you, because we have a bevy of of analyst calls and strategist notes coming out right now, because everyone is asking their advisors whether or not the bottom is in, the process is playing out. A couple that I want to highlight here express a little bit perhaps more caution in this whole upside move that we are seeing. One of them is Canaccord's Tony Dwyer. In a note to clients, he says, "We continue to believe the bottoming process should take more time because the economy remains largely shut down through the end of April. The fiscal stimulus has yet to hit the pockets of those that need it, and the credit markets remain highly stressed despite the Fed's historic infinity QE." Also, RBC Capital's Lori Calvasina keeping an open mind about whether the S&P saw its coronavirus low. But we remain skeptical and would not be surprised to see the index retest its 2020 low and perhaps even make a new one. So, Joe, this is a very big upside move. There's a lot of strength behind it. How exactly should you approach trading or investing in the next few days, knowing that we're seeing this today, but that there is a prevailing interest in whether or not we test the all-time or the year's lows again in the coming days and weeks?
So I'll share with you how I approach it, and I'll share with you how I've been advising clients to approach it. I'm going to borrow two words from what Tony's saying. They're incredibly relevant. First is process, and second is time. Get used to, as an investor, that this is going to take time. This is not going to be your typical price correction of the last 5 to 10 years where we go down 20% over the course of a short duration of days and quickly recover. This is going to be about time. But also understand this is about a process, a series of events that are needed to occur for the capital markets to find liquidity and a recovery once again. And we are in the process. The process is unfolding. The focus right now in that process, as Josh began the show talking about, is on the healthcare numbers right now. That's the important thing. We've got the infinite Fed. We're comfortable with that. We've gotten the fiscal support. I believe personally we need more than 10% of GDP, and hopefully we'll get that. But we're getting a flattening in Europe. We're getting a potential flattening in New York. The process now takes you to a point where the capital markets are going to want to hear, okay, how are we going to reopen economies? What's going to be the process in reopening those economies? That's where the relevancy is. Be patient, understand the environment, and understand you're going to get constructive, positive developments that are going to contribute to this road to recovery.
All right, so Shannon, I want to circle back to a note that we hit on a little bit earlier. That is Morgan Stanley and Mike Wilson and his team looking at their universe of stock coverage as well. They're out with that list of what it says are good companies at relatively reasonable, levels right now. A number of those names stand out. Just looking at some of those stocks, they have a fresh money buy list that includes names like Amazon, also Walt Disney, Humana, Johnson & Johnson, Linda, the gas company, MasterCard, Microsoft, Procter & Gamble. I mean, those are all part of that list. These are all perhaps potential opportunities, as well as the names that you're seeing up on the wall right now, including Microsoft, Stryker, BlackRock, Home Depot, Xilinx, and others, including Comcast, the parent company of this network. I mean, let's talk a little bit about, Shannon, what exactly is on the shopping list for you and how exactly you're arriving at those names. What factors are you looking at?
I mentioned last week that my belief that, contrary to what we see historically when we're moving into a recessionary period, we actually see outperformance. Generally it's a rotation from stocks that have outperformed prior to a recession to those that will outperform post-recession. And so that would lend itself to, an emphasis on a growth to value rotation. And I just don't think it makes sense here. Number one, we don't have the imbalance that's caused by growth. We really had an exogenous shock that is causing this recession. And so I go back and I take a step back and look at the type of companies that we liked, in December and January, which are high quality businesses with strong balance sheets, free cash flow, dividend payers, and those that can operate in a competitive environment that continues to grow and change. So if you think about innovation, if you think about what Disney has done with Disney Plus, if you think about Amazon and their commitment in both cloud and being able to deliver e-commerce better, faster, cheaper, those are the types of names. You look at Microsoft, market leaders, and these are the stocks that, 3 or 4 months ago, people were still buying these stocks at at much more expensive valuations. Now there's an opportunity. Perhaps you're not bottom fishing them. They haven't declined as much as some of the energy, industrials, the more cyclical stocks. Perhaps that's okay because we're not necessarily relying on those more cyclical names to pull us out of this particular environment. And so, I like this group of stocks. We own a number of these names, and I would agree that they're likely to outperform and insulate us better amidst this uncertainty that we've been talking about during this show.
All right, so Microsoft is key on that list, and Shannon just made a case for that one. Steve, you've been active in Microsoft before. What are you doing with Microsoft now, given what we've seen in the market over the past few days now?
I'm enjoying it now. I had added during the decline a couple of times, not adding today. We recently switched over from another vendor to Microsoft OneDrive. It fits with new Microsoft products. It's more efficient. It's less costly. Microsoft continues to hit it on all cylinders and own the enterprise network. To me, this is a really good time to have upgraded your portfolio. You may get another chance to do it, but here's how I see it playing out. And I was thinking that we'd have a much longer recovery, but over the weekend I came to the realization, I had this before in part, that when we're done with all this, that short's going to take the economy a little longer to get back up to speed, particularly the service areas where you're going to keep social distancing, hopefully. But we'll have zero interest rates or near zero. Now the other element is whether it's going to be stimulus 5 or 6. The handoff to fiscal stimulus is going to be powerful as we look to get the economy back on track. So it's not going to be the White House facing re-election and Trump being somebody who grades himself on the stock market in particular and the economy second. We don't get re-elections of presidents when you're in a recession, no less a depression. So number one focus is going to be on stimulus plans, and the government's going to continue to be generous, and that's going to take the market, shorten the pace of recovery of the economy. So I think if you have dips in the market, again, I'm not buying today, except for very, very selectively in stocks that didn't recover as much today, and that's narrow, but buy the dips. If we retest the lows, so what?
Okay,
but buy the dips, and I think you'll do well.
All right, so let's say you're buying the dips. Josh Brown, let's bring you back in here. The names that we saw that were dipping over the course of the past couple of weeks now are the ones that are bouncing perhaps the most now. It's maybe not that counterintuitive given a day like today, but travel and leisure stocks, beaten down retail. I'm looking at this screen right now. All of these are bouncing tremendously today, in some cases by 10, 15, 20% or more. What exactly does that tell you about what's happening in the market right now?
I don't know that it tells you anything specific because, a lot of things that happen in the stock market aren't directly related to any fundamental change in a business. It's sentiment shift, it's positioning. So I would always hesitate to take one day's activity and say, this is the start of a new trend. Talk to me if we see retailers and cruise lines as market leaders a week from now, and then maybe I'll concede the idea that there's something bigger happening. So I would put that aside. The fundamental question for me, and one of the things that we're talking about with clients right now is how long does it take earnings to rebound, and do stocks have to do what earnings have done? And I think one of the most dangerous things you could do right now is take the drop in earnings that everyone agrees is coming and then try to draw this linear distinction between, well, then stocks have to repeat that. There are 3 different scenarios that we've seen, and any one of them is still possible. In the first scenario, earnings fall less than stocks, and we actually saw that during the Great Depression. Earnings only fell 74%. Stocks fell 90%. We're rooting against that outcome. In the 2000 to 2002 bear market, earnings fell by 50%, and so did stocks. So they actually were perfectly matched. But then in this last experience we had during the Great Financial Crisis, earnings fell by 90%, and the stock market only fell 57%. So the point I'm trying to make is the earnings recovery could take a very long time. Could be 5 years before we get back to 2019 earnings. And we don't know where multiples will settle out. But just because you know that earnings are going to be horrendous for the rest of this year, that doesn't tell you what stock prices necessarily have to do. So I want everyone, when they're hearing all of these superlatives, the biggest drop in earnings ever, a total wipeout of 2020, that does not tell you where stocks will be trading as we go through that process.
All right, I mean, it's important context because we know that oftentimes that there are factors beyond just the headline earnings numbers that drive a lot of these things, or the revenue numbers. With that in mind, I mean, we know that our investment committee members are making moves in this kind of a market. Michael Farr, for one of them, I see here, you're selling one position out and adding to another. Take us through what your playbook is right now and why you're doing it.
Well, Dom, one of the things I think that investors need to do on a day like today is think about what they're going to sell. This is an up day, and I would say sell your speculative, sell that this is going to be a longer process, as everybody that we're on the investment committee is sort of suggesting this doesn't just have this V-bottom thing, so that it might endure. Make sure that your portfolio can also endure, and you do that by trimming those things that have been speculative, that have questionable cash flow, that have too much debt. Those are companies that can face insolvency. When you hear that retailers and cruise lines and hospitalities are rallying, maybe if you have some that are less solid, more speculative names, those would be areas to sell. We reduced and sold J.P. Morgan to reduce our banking exposure. But J.P. Morgan of the banks is a terrifically solid bank, but had a pretty good premium on a price-to-book basis. Its business is a little more opaque than a lot of the regional banks that you kind of get some clarity into lending and borrowing. And I think most of the government support is going to go to a lot of those Main Street banks.
Sure.
It was sort of a positioning reduction there. Starbucks, we added. China has opened those stores. China is a huge growth opportunity for Starbucks. Down 35% with 13, 14, 15% earnings growth seemed like a good entry point. We may nibble some more. Bought some Mondelez. It's a very solid kind of a old school company. They sell Oreos and Tang and Triscuit crackers, those sorts of things. I like buying these solid balance sheet names with good management, good cash flow, and a little bit of a dividend that can be maintained, never offends. I think you've got to watch those companies, too. Going to have to start cutting dividends and eliminating stock buybacks. There are going to be more of those.
All right. So interesting that you're a little bit more bullish on the Chinese thesis here. Shannon, you're making some moves as well. And one of them, at least, a headliner name is a Chinese e-commerce giant that plays into some of the trades that you're making right now.
Yeah, so I would agree with Michael. I think one of the names that we sold, Royal Caribbean, we really liked this stock over the last couple of years. We think that the lifestyle experience and cruising has certainly grown. We do think that cash flow will just be impaired to a point over the next 12 months, and it doesn't seem like there certainly are better opportunities right now for our cash. And we added to Alibaba. I think if you look at Baba, if you look at the resiliency of e-commerce over the last 2 months in China, if you look at the need for continued growth in the cloud and cloud computing, this has been a stock that has seen its ups and downs over the last couple of years, but we felt like this was a good entry point, and it's exactly where we want to be situated.
All right, Shannon Sakosha, Michael Farr with some trades there, as well as the other investment committee members. Well, airline stocks are seeing a pop today, but down nearly 50% in the last month. J.P. Morgan analyst Jamie Baker will join us with his latest calls on that beaten-up industry. That's coming up straight ahead on the show.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving, soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
You love listening to ESPN Radio live on TuneIn, but did you know you can also listen to favorite ESPN shows on demand? Get the latest takes from Stephen A. Smith,
dynamic duos all over the place,
Dan LeBatard, and Garlic and Wingo when it fits your schedule. And listen to episodes of Pardon the Interruption.
Pardon the interruption, but I'm Israel Gutierrez, and I love hosting the show with my humble...
Around the Horn and Highly Questionable as podcasts anytime you want. Search ESPN to see all the podcasts on TuneIn.
This is Dr. Sanjay Gupta. Join me for CNN's new podcast, Coronavirus, Fact versus Fiction. We know you have questions, and we want to help you find answers. And send me your questions on social media at Dr. Sanjay Gupta.
Make sure to search and listen on TuneIn today.
Not all heroes wear capes, but most wear tights.
And here we go, now it's underway. Cover on Rowan, win seconds.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building. But
For these and more, search sports and scroll down to the world of wrestling.
It's TuneIn Sports on this day. April 6, 19...
Influence.
All right, as you can just see, there are session highs for stocks right now. Let's get the latest headlines on the coronavirus and others with Sue Herrera. Sue.
Thank you very much, Dom. Hello, everybody. The new death tolls just announced by New York's Governor Cuomo puts total U.S. deaths above 10,000. That is according to the Johns Hopkins count. New York schools and businesses to remain closed until at least the end of April. American consumers, on average, see an almost 19% chance that they will lose their job in the next 12 months. That is the highest reading ever seen in the New York Fed's survey. The organizers of the Masters are now hoping to hold the golf tournament in November. It had previously been postponed from this month. The PGA Championship has been pushed back to August 6th. Several other tournaments also announced new dates. A bit earlier today, this year's British Open was canceled. The United Kingdom's death toll has passed the 5,000 mark, but the daily toll has slowed for a second day. Confirmed cases are now above 50,000. And here is proof that adversity brings out the best in us. A young cancer patient who couldn't celebrate his last IV treatment at the hospital got a surprise from his neighbors. Instead of bell ringing, 6-year-old Jackson Perkins instead got a parade by his house with dozens of cars, honking horns, and people waving signs. We're in this together. We'll get through this together. As always, if you want more on the coronavirus, go to CNBC.com. Dom, back to you.
I'm smiling because, Sue, we need to hear more stories like that
I'm looking
amidst
for
this
them.
whole thing. So keep looking for them, please. We would
got it.
always love to hear them and see them. Sue Herrera, thank you very much for those updates on the coronavirus. Well, JP Morgan making a call on the airline saying, quote, "We are growing increasingly convinced that industry recovery to 2019 levels will take a number of years." Joining us now on the CNBC Newsline is the analyst who made that call, Jamie Baker, JP Morgan. So Jamie, what's the idea here? How long is it going to be before we see any kind of even hint at normalcy in these airline companies?
Well, look, what we're thinking is that the industry is ultimately going to emerge smaller from this crisis, and that it could take until 2023 before the industry is the same size as it was last year. That means a lot fewer flights, fewer airplanes, fewer employees, and so forth. So for now, our base case is that next year, 2021 results and the overall size of the industry will be down around 20-25% from what we witnessed last year.
What do you think the lead time will be? We know the business will be bad, the numbers will play out for possibly years, but that doesn't necessarily mean these stocks will go along with it in that front. Do you expect a turnaround in these shares? And if so, which ones are best positioned to outperform?
Well, we do for some of them. In fact, we upgraded Alaska Air to an overweight rating this morning where it joins Delta and United. Those are our only three overweight rated names. Barely anybody is flying right now, but we do believe that we'll start to see a gradual recovery this summer. We think it's actually business travelers that will be the first to return. At some point, your boss is going to want you to come back into the office. Your boss is going to send you out on the road, maybe not quite as aggressively as you were traveling pre-virus, but basically we think companies are going to put employees back out on the road before families. Have that same level of confidence.
And those business travelers are potentially lifeblood, right? They're the ones who bring that higher margin business to these airlines. So which ones then are the ones that maybe don't weather this storm as well, and why?
Well, look, fares are going to remain low for quite some time. And when you're starving, you'll eat anything. American, Delta, and United are starving for revenue at the moment. So we don't think that they're going to leave any stone unturned in their hunt for ticket sales. So that makes it really tough for spill carriers, opportunistic skimmers like Spirit. Theirs is a business model that during headier times, does really, really well. In good times, big airlines knowingly leave some revenue behind and the discounters scoop it up. But that's just not the environment that we're in right now. I think it's very tough to be a spill airline at the moment.
All right, Jamie Baker, Senior Airlines Analyst over at JP Morgan. Thank you very much for those thoughts. We appreciate it. Let's trade it now. We're going to start with you, Joe Terranova. Is there anything that you want to do with these airlines, or are you pretty much staying away from them at this point?
So I made my contribution to the airline's P&L by buying Delta way too soon, got out of it very quickly, thankfully, but lost money and led the viewers who followed me in the wrong direction. The problem for the airlines is that they are going to face a secular challenge. This is not a cyclical challenge. And one of the things that Jamie said that I somewhat disagree with is I don't think corporations are going to rush to send employees back on planes. There's a liability issue in doing that. So I think they're going to be very judicious in returning their employees to travel. I question whether airlines will have the tailwind behind them that they've had in years prior, where they're able to rely on raising fees. I don't see them being able to do that. You have several airlines in this environment that are going to be incredibly challenged and ultimately will be gobbled up in consolidation. And I think that's where the airline industry ultimately goes. But we're talking about something that is completely secular in its nature. And we look at this entire crisis of preservation. There are very few sectors, I think, that are troubled by that. Airlines are at the top of the list.
All right, Shannon, just a few moments left here. Over to you. You own Delta Airlines. Is there anything that makes you feel as though you want to alter your position on DL?
We're certainly not adding to Delta here. I think Joe makes a great point about kind of secular headwinds and the tailwinds that increase the profitability for airlines over the last several years remain consistent as far as low jet fuel costs. However, if you think about just the volume of travel, it's likely to decline. And, I worry about government oversight. We sold our Boeing position for that reason. And frankly, I don't really want the government to be my partner as an investor. And therefore, we would be looking for an appropriate exit point over the next several weeks.
All right. Great thoughts on the airlines there. Thank you guys very much. Let's now get out to Bob Pisani, who's tracking the major moves in the ETF market in today's big rally. Bob, what are you seeing?
Well, the SPY has moved, the spider has moved 15 points since Cuomo talked about the possibility of plateauing today. But I just want to point out, we're seeing some signs that this massive volatility in the last few weeks is really calming down a lot. Here's two of the big ones. The SPY is the biggest ETF out there. The Russell 2000 IWM, we've seen volume declines in them rather noticeably in the last week or so, about 30% lower than it was in the prior 2 or 3 weeks. That's a good sign. Volatility is also lower. We've noted the VIX has gone from 80, into the mid 40s here. There's a VXX, which is a ETF for volatility, tracks the front month VIX futures contract. That's been dropping, and trading volume in that has also been dropping. And the ETFs most beaten up in the recent 3 or 4 weeks, they're the ones that are rallying the most today. Retailers up 10%, that's the XRT. First positive day in 7 there, best day since March. Regional banks up about 8%, their best day since March 26th, when the KRE gained about 8.5% there. That's a good sign. Home construction up, is that right? 14%. I just looked quickly at my screen here. It's first positive day in 7 as well. Best day since March 25th. For more ETF Edge, we're going to be talking about a lot more going on here. Our live show is at 1 p.m. Eastern Time on etfedge.cnbc.com. We'll talk to the man behind the first actively managed, non-transparent ETF. These just started tracking and trading in the last week or so. We'll dig into some of the action in the oil market as well. That's all in the next 20 minutes. Dom, back to you.
All right, Bob Pisani, thank you very much for that update on the ETF markets. Straight ahead on the show, the top trends in technology coming out of the coronavirus crisis and the best stock ideas on how to play it. Our experts will debate it in just 2 minutes.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving, soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
It's TuneIn Sports on this day. April 6, 1992, Duke's men's basketball beats Michigan 71-51, winning back-to-back titles for the Blue Devils.
And here comes Duke on the break. Behind the back, Hurley, the hill. Why not? That's the play that was available. Nobody back for Michigan because they're sending 5 to the board.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
This is Dr. Sanjay Gupta. Join me for CNN's new podcast, Coronavirus, Fact versus Fiction. We know you have questions, and we want to help you find answers. And send me your questions on social media at Dr. Sanjay Gupta.
Make sure to search and listen on TuneIn today.
Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. Wait a second.
Keep up with insurance.
Welcome back. Evercore is out with a note today highlighting their top 10 tech trends to watch in a post-COVID-19 world, along with their top stock picks to play those trends. Names on that list include Salesforce, Apple, Cisco, NVIDIA, Josh. Do any of those names or others make you feel somewhat tempted right now in this market?
So it kind of reads like a list of large cap tech stocks, which is fine. I'm in NVIDIA. I own a bunch of these. The one that intrigued me, which I'm going to do some work on, is DocuSign. We're actually a customer of DocuSign. And I actually disagree with what we were talking about in the prior segment with business customers rushing back onto planes. Not a chance. The NBER just put out a study saying they think as many as 30% of all U.S. jobs can be done remotely. And I suspect it could even be more than that when you think about the type of people that normally travel for business. Everything from sales to even management. So I do not foresee the airlines being able to count on business customers traveling to get to meetings. And getting things signed physically is another example of that. So just as a for instance, using DocuSign, we've been able to onboard dozens of new customers since the market peaked February 19th We can't see anyone in person, but we're processing forms digitally all day long, all the time. And that's a mega trend. It's secular. It's beyond just the aftermath of COVID. So DOCU has an incredible technical trend, bounced off the rising 200-day flawlessly around March 18th when the market was at its worst. The buyers came racing in. That's exactly where they should have. I really like this chart. I'm going to do some more work on the company. It's not cheap, but you have to pay up right now for companies that are literally undisturbed and benefiting from the mayhem that's happening out there in the real economy.
All right, a possible secular trend shifting and taking place, a paradigm shift, if you will, guys. Thanks very much for that one. Now, our experts are ready to weigh in and answer your questions. That's coming up next. To reach out to us, just go to cnbc.com/halftime or tweet at us. We're back right after this break.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk.
Created the open market, a market with over 1,700 participating credit trading institutions worldwide, helping each other find liquidity and deliver best execution, saving liquidity takers over $380 million in transaction costs in the last year. With market access, you're not just in the open market, you're in the market.
Interactive Brokers charges 1.75% for a $100,000 margin loan. Do you know how much your broker charges? Upwards from 7.82% at Fidelity or Schwab to as high as 7.45 to 8.5% at E-Trade or Ameritrade. Move your account to Interactive Brokers and save at least $5,700 or much more if you're trading big bucks.
Discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Hey everyone, it's Tremaine Lee, MSNBC correspondent and host of the new podcast, Into America. In our latest episode, Republican giant and longtime Senator Lindsey Graham is for the first time ever facing a real challenge to his Senate seat. Can a relative newcomer to the scene, a black Democrat in a red state, win this fight? I head to South Carolina to find out. Search for Into America wherever you're listening right now and subscribe.
This is Dr. Sanjay Gupta. Join me for CNN's new podcast, Coronavirus, Fact versus Fiction. We know you have questions, and we want to help you find answers. And send me your questions on social media at Dr. Sanjay Gupta.
Make sure to search and listen on TuneIn today.
It's TuneIn Sports on this day. April 6, 1992, Duke's men's basketball beats Michigan 71-51, winning back-to-back titles for the Blue Devils.
And here comes Duke on the break. Behind the back, Hurley.
Dollars off.
Breaking news coverage continues tonight on CNBC with a special report. Markets in turmoil. That's tonight, 7 p.m. Eastern Time, right here on CNBC. Well, the traders are answering your questions. First up, we've got Weiss for Weiss, JJ in Canada. In light of the turmoil in the markets, what is a retail investor to do? Stocks, bonds, cash, or gold? Thanks. Be safe. Steve.
Well, look, it always pays, I guess, to have a diversified portfolio. It depends what your age is also. I'm much more heavily weighted towards equities. I just don't see the upside in bonds. I think that there'll be a money-losing proposition as we get out of this, given where rates are. If you're a retail investor in terms of equities, just ride the wave. It's going to go up. It's going to go down. It's too late to sell. Right now, it's too late to buy. Just be patient and follow a plan that you set.
All right. Next up for Josh Brown from Christian in Oklahoma. I've heard Josh and a few of the other traders mention the debt and bond market as being a great place to invest right now. How should the average investor approach investing in these markets?
So I don't know if I would agree with the blanket statement the debt market is great. There are going to be blow-ups in corporate credit. We all know they're coming. We don't know the severity or how much the government's going to help out. So we use bonds very specifically in our client portfolios as the ballast that gives you dry powder so that when it's time to rebalance into an equity downturn, you have something left that you can do that with. A 60-40 portfolio went down 20% at the bottom of the stock market, and that's only happened 3 times in history. So I think that was a unique opportunity for firms like mine to say to clients, this is when we make that switch. And so that's why you're investing in bonds, not necessarily for upside. Weiss is right. Upside will be limited. You could pretty much say over 10 years on even a treasury, you could pretty much expect annually to make what the coupon is. It's a pretty tight relationship, so don't get excited there.
All right, Joe Terranova from Jenny in Las Vegas. Joe often talks about buying in the credit markets. Could you please tell me how to go about doing so? Thank you.
That's basically a similar question to what Josh just said. Listen, I'm not a believer in doing it yourself. Pay the 50, 75, 100 basis points. Work with Josh and Riddles, and that's how you mine for opportunity to buy quality credit.
All right, and Shannon from Tina in Rochester Hills, Michigan. For Shannon Sakosha, can you explain Raytheon Technologies?
Sure, it's a combination of Raytheon and United Technologies, combining defense with traditional commercial exposure. The one cautionary note that I would make here is that don't be surprised if there's some hiccups here, as analysts and investors are expecting a lot of synergies from this merger, and they may be less than expected.
All right, Michael Farr, you get the last word. 10 seconds to you. What are you thinking about this market?
Increasing quality in your portfolio. Names like Pepsi, Johnson & Johnson, and Microsoft are good cores. Wait for a pullback and sell your speculative stuff now. This is going to take a while, but hang in there. We'll get through.
All right, hang in there for sure. Thanks very much, everybody in the investment committee. Kelly Evans picks up our breaking news coverage, and she does so right now.
Thank you, Dom, and hi, everybody. Welcome to The Exchange. I'm Kelly Evans, and we have a massive rally on Wall Street today. I'm not used to saying the word rally. The number of coronavirus cases in the U.S. has appeared to slow down a little bit. We'll get you the latest in a moment, but the Dow's up 1,200 points. We're back above 22,000. That's nearly a 6% increase right now, and similar gains for the S&P 500 and for the NASDAQ today. Now, we did move to session highs after New York's Governor Andrew Cuomo said the latest numbers could suggest a potential flattening of the curve. In the U.S., while we saw a big increase in the number of new cases, that increase went from more than 33,000 on Saturday to just over 28,000 on Sunday. So again, stocks looking for a little bit of better news wherever they can find it these days. Let's get more on all of this action with Bob Bassani, who joins us now. Hi, Bob.
And we are just off the highs for the day and a rather titanic upside day. We saw some 5% downside days a few weeks ago, but upside days on 5%, haven't seen that very often. I want to show you the S&P 500, Kelly, because we rallied 15, 16 points in the middle of the day as Governor Cuomo talked about a possible flattening of the curve, plateauing, whatever you want to call it. But the market definitely responded to that. Volume spiked up a little bit. Sectors, all the worst sectors in March are the ones rallying today. Home builders up almost 14%. Banks, retailers, industrial names, consumer staples, interestingly, are lagging. We even had some at the open that were down, those big consumer staple names that worked so well a couple weeks ago, the Kroger, Clorox's, Campbell's, General Mills, all of them, as you can see here, flat to slightly down, or maybe up 1%. The market trends still intact, lower volume. The VIX is at 44, down from 80. Intraday price swings of 2 to 3% until today, Kelly. And now we got one big one, up 5% on the day. Kelly, back to you.
Bob, do my eyes deceive me? Did that just say that the home builders as a sector is up 15% today?
Yes, ITB is up 15%. And remember, these were the groups that were most beaten up on concerns overall that, first of all, people wouldn't get a mortgage or people couldn't afford to buy a house given their circumstances in the last several months. And obviously, people are now, it's the glass half full rather than the glass half empty. So I would say the U-shaped crowd that are arguing that we can have a little bit of a better upturn sooner than expected is having a bit of a moment right now. Up until now, I'd say the L-shaped crowd has really had the upper hand.
All right. Well put, Bob. We appreciate it. Bob Pisani with the latest there. Stocks are rallying on these hopes that coronavirus may at least start to level off soon. But these efforts to flatten the curve are taking a major toll on the economy. Here's former Fed Chair Janet Yellen voicing her concerns about this earlier on Squawk on the Street.
Probably now, if we had a timely unemployment statistic, the unemployment rate would probably be up to 12 or 13% at this point. For the second quarter, at an annual rate, we're going to be looking at a decline in GDP of at least 30%.
Joining me now are Rich Weiss. He's the Chief Investment Officer at American Century Investments, and Scott Wren is Senior Global Equity Strategist at Wells Fargo Investment Institute. Welcome to you both. Rich, I know you've been very cautious, let's say, about the performance of the economy. It sounds like consensus has certainly caught up to you. What's your latest thinking?
Well, yeah, I think we're in agreement with former Fed Chair Janet Yellen, and she was, I believe, invoking what's called Oken's Law. Arthur Oken, the Yale professor, came up with that rule of thumb based on his historical relationship between unemployment and GDP, basically dictating a 1% rise in unemployment coincides historically with a 2% drop in GDP. And that's where you get those kinds of numbers. So it's very possible that the fly in the ointment there, of course, is that relationship historically is very strong in the normal or typical ranges of unemployment, not when you start hitting double digits. So right. We'll have to see if it holds. But we're still very cautious here. The market seems to be very anxious to believe in a V-shaped, quick recovery here, certainly a strong second half. And there's a lot of downside and vulnerability here, both medically speaking and economically speaking, to turn this into a U or worse. So we're a little more cautious.
You know, I thought it was interesting that you said you see potential everywhere, but the tougher question is when. You know, what makes you so sure that it's better to wait as opposed to, moving on that opportunity that you do see in front of you?
Oh, because what's happening, for example, today, there's some good news on curve flattening, both in China and now in New York. But even with good news on the virus front, the economy could still be vulnerable with secondary effects, secondary and tertiary effects, supply chain disruptions, defaults and bankruptcies and credit downgrades to come. So financially, the fallout could be much worse, even if the virus were to trend off here. So we do see a lot of opportunity, and of course, the old adage, buying on the dips, it really works. But I've never heard anybody say buy on the recessions, and we're still just starting into a pretty bad recession.
Well, let me bring you in, Scott, on that note. If you want to respond to kind of the way that Rich is approaching this, I see here that you also would stay away from the small caps right now, which in the last week or so, we've heard different voices saying maybe there is some value there. It doesn't sound like you're one of them.
No, Kelly, I tell you, we've been underweight small caps for a long time, typically late in the cycle. They're underperformers. You can see that today they're outperforming by about 100 basis points relative to the S&P. So they would typically, in a normal cycle, whatever that is, halfway through the recession into the early years of the recovery, small cap and value outperform. So I don't think we're there yet. But we're certainly trying to pay close attention. For us, we've been recommending that clients, to stick a toe in the water on big down days. They can be patient. We've had obviously a really good bounce off what I would call a panic low. We've been here at 2730 three times in the S&P 500 over the last, let's say, 5 or 6 trading days. So there's resistance there. There's resistance up at 2750. If history is any example, you're going to have a pretty good bounce, but then you're going to have a pretty good, meaningful pullback. So, we continue to think that this is an opportunity. We expect a sharp but relatively short recession. We want our clients to stick with large cap, growth type, quality stocks right now.
Okay.
Tech, consumer discretionary. We like communication services. So for us, we're looking at this as an opportunity that we want to actually take action on and leg into on these big down days.
So, yeah, you are starting, like you would say, to kind of tiptoe into these markets. And I thought Rich's point was interesting that, he says you don't want to buy going into a recession, but we know you do want to buy coming out of one. In 2009, I think the market bottomed in March, but the recession technically, Scott, didn't end until June. So, if this is a short event, we could already be needing to think about coming out of it, or is that too early?
Well, you can tell the market's thinking about it today with the small cap outperformance, I think, and really sector-wise today, and today's of course only one day. It's a little more mixed in terms of sectors, but certainly at some point here, it's going to be these more cyclical sectors. It's not going to be defensive sectors, staples and utilities that lead us out of, eventually out of this bear market and take us higher. It's going to be things that are sensitive to the economy. So that's what we want to be paying attention to. And like I said, we expect a sharp, very sharp, but relatively short recession here where you see positive GDP in the fourth quarter, and then you see some better news. Not wildly better, but better news for 2021.
Rich, quick final word on that. If we are talking about positive GDP, clients need to be thinking about kind of gingerly starting to buy here.
If you have speculative money, powder dry, for sure. If your risk tolerance, your tolerance for risk is very high. But if you're talking about your 401ks, retirement savings, again, treat them like your face. Don't touch them.
All right. Thank you both today. We appreciate it. Richard Rice and Scott Wren with their thoughts on these markets. Meantime, the number of workers filing for unemployment benefits broke a new record last week with 6.6 million new claims. If my next guess is correct, we're about to break that record again this week. So when can we expect this curve to crest? Joining me now is Jesse Edgerton from JP Morgan's Economic and Policy Research Team. Jesse, it's good to see you. Certainly caught a lot of attention last week with this forecast that we're going to hit 7 million new claims this week. Is this as bad as it's going to get?
I would hope this might be as bad as it's going to get, but it's hard to know for sure. If you look at past really sharp events like September 11th or something like that, the level of unemployment claims stayed elevated for something like 4 or 5 weeks right afterwards. So we're just in the third week here on this event right now.
So if that's the case, 9/11 comparison is a relatively hopeful one. There are a couple of things that are different this time. One is that the unemployment benefits themselves come with a big incentive, the extra $600 to try to help people get through, and the wider array of people who can get them, freelancers and gig economy workers for the first time. How much are those factors, you think, increasing claims relative to what the economy itself would be generating?
Well, I mean, honestly, I think there are millions, tens of millions of people that would be filing for benefits anyway, even without these extra incentives, right? You've got 12 million people that work at restaurants. You've got another 10 million people that work in non-essential retail. million people that work in non-essential manufacturing and construction. So, even without these kind of special factors right now, there's easily tens of millions of people that are at risk of getting laid off here.
Right, and you just, I think, 12, that's 32 million people right there you just referenced. So if claims do hit 7 million this week, plus 6.5, 13.5, what was it before that? 3.5, that's 17 million. So we're only about halfway through this thing. Do you think that's about right?
That might be a little bit on the pessimistic side, right? There's easily, say, 50 million jobs at risk from the shutdowns here, but we don't know exactly how many people are going to get laid off, right? We don't know if restaurants are going to lay off 50% of their employees or 90% or what. I think we're kind of getting close to that 50% level at this point. So I would kind of hope that we slow down after that.
And obviously, all of these forecasts are contingent on what happens with the coronavirus. I'm curious if you think the claims is relatively tracking the coronavirus curve in real time or with a lag of a week or two. Any early indications there?
It's definitely got a bit of a lag of probably a few weeks. A month ago, we were tracking things like the movie box office numbers and the number of people riding the subway in New York and hotel occupancy and things like that. So those things were already starting to plummet, maybe 4 weeks ago. And then we've just been getting the claims numbers hitting kind of for the last 2 weeks here. So I think the claims numbers are one of our most timely indicators, but they were still a little bit behind these things that were kind of directly hit right away by the virus itself.
And what's your total at this point for the number filed?
I would guess we'll get to something like 25 million here over, that would be the last 2 weeks plus the next 2 or 3, something like that.
Yeah, and from there, then we'd like to see it drop as quickly as possible and continue claims.
Well, there was a little bit of a puzzle last week where the entire rise in initial claims from the previous week didn't show up in continuing claims. I would kind of guess maybe that's just like a processing lag, and we're going to see the vast majority of these initial claims show up as continuing claims at some point there.
Absolutely. Jesse, thanks for joining us. We appreciate the information.
Sure, you're welcome.
Jesse Edgerton is senior economist at J.P. Morgan. And coming up, the White House is saying it's already approved 130,000 loans for a total value of $38 billion to small businesses. It's unclear how much of that has actually made its way to those who need it, and we'll get you the latest next. Plus, biotech company Vir is laying out a hopeful timeline to develop an antibody drug for the coronavirus. We'll speak with the CEO ahead. And oil unable to rally today, despite hints that Russia and Saudi Arabia are very close to a deal. Crude's down 6.5%. We'll look at the twists and turns of this battle for control of the oil market. Stay with us.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app. Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
You love listening to ESPN Radio live on TuneIn, but did you know you can also listen to favorite ESPN shows on demand? Get the latest takes from Stephen A. Smith,
dynamic duos all over the place,
Dan LeBatard, and Garlic and Wingo when it fits your schedule, and listen to episodes of Pardon the Interruption.
Pardon the interruption, but I'm Israel Gutierrez, and I love hosting the show with my humble...
Around the Horn and Highly Questionable as podcasts anytime you want. Search ESPN to see all the podcasts on TuneIn.
Hey everyone, it's Tremaine Lee, MSNBC correspondent and host of the new podcast, Into America. In our latest episode, Republican giant and longtime Senator Lindsey Graham is for the first time ever facing a real challenge to his Senate seat. Can a relative newcomer to the scene, a black Democrat in a red state, win this fight? I head to South Carolina to find out. Search for Into America wherever you're listening right now and subscribe.
It's Tune In Sports on this day. April 6, 1992, Duke's men's basketball beats Michigan 71-51, winning back-to-back titles for the Blue Devils.
Fired, and here comes Duke on the break. Behind the back, Hurley, the hill, why not? That's the play that was available. Nobody backed off.
Welcome back. Let's get to the very latest coronavirus headlines. Over to Sue Herrera. Hi, Sue.
Good afternoon, Kelly. Good afternoon, everyone. Here's the latest numbers as we know them. Global confirmed cases are nearing 1.3 million, and the death toll is now over 70,000 worldwide. That is according to data from Johns Hopkins. New York's Governor Andrew Cuomo reporting a decline in the total number of hospitalizations and ICU patients. Signs, he says, the curve could be starting to flatten, but he warns that state's healthcare system continues to operate at maximum capacity.
The engine is at red line, and you can't go any faster. And by the way, you can't stay at red line for any period of time because the system will blow.
Xerox teaming up with Vortran Medical to step up production of inexpensive disposable ventilators usually used by first responders. They will not replace the ventilators used in hospital ICUs, but they would serve as a stopgap for patients with less severe symptoms. As always, you can get more on CNBC's coronavirus coverage by going to CNBC.com. Kelly, back to you.
Okay, Sue, thanks very much. Shares of Vir Biotechnology are soaring today. They're up about 29% on a new partnership with GlaxoSmithKline to develop potential COVID treatments. Glaxo is also taking an equity stake in Vir. Checking on shares of Glaxo, they're up about 2% as Vir hits 30% higher now. Meg Terrell is here with all of the details for us. Meg?
Kelly, well, these two companies are going to be working together on multiple approaches to coronaviruses and, of course, most urgently for the one that causes COVID-19. Now, that is driving Vir's stock up quite a bit today with the news of that $250 million equity stake from GSK. Now, what Vir focuses on is targeting antibodies isolated from survivors of disease, and in this case, both SARS and from COVID-19. And they find the best ones, then they engineer them to make them into optimal medicines. So these companies are going to be working together. They say they have 2 antibody candidates that they aim to bring into human testing in a phase 2 trial within 3 to 5 months. And this comes, of course, as we mentioned, with GSK making that equity investment in Vir. And let's get right to our guest, who is the CEO of Vir, Dr. George Scangos, to tell us more about this partnership and the timelines. Dr. Scangos, it is great to have you with us. Tell us about the timelines, getting into human testing, and how long it could potentially take to get a drug for use more broadly.
Sure, Meg. Well, first of all, thanks for having me. Appreciate the interest. We're working together with GSK now. We have a huge amount of respect for GSK and the capabilities they bring. We have 2 lead antibodies, as we've said before, targeting COVID-2. They bind to it potently, and they are potent neutralizers of the virus. They are currently being manufactured at WuXi, and we have a process development going on together with Biogen, and we hope to be able to have those antibodies ready for clinical testing within 3 to 5 months. So it's a very accelerated timeline, recognizing the urgency of the situation and the need to get some relief as quickly as we can.
What does the timeline look like after that? Once you get this into, and you're skipping right over phase 1, it sounds like, going into humans in phase 2, what do the timelines from then look like?
Yeah, well, we will test the antibody in a couple of different ways, right? First, we want to understand if the antibody, or to what extent the antibody, can prevent people from getting the disease. So we'll test it as in a prophylactic setting. And we also want to understand whether or not the antibody can treat people early in the disease and prevent them from progressing to respiratory distress. We are also likely to do a trial in patients who are sick and in respiratory distress to see if we can help to reverse that. So we'll do those 3 trial designs. There'll be, the time of a clinical trial is dependent on the time to enroll the patients and then how long you have to follow those patients. We are planning to do these trials on a worldwide basis so we can enroll very quickly. The follow-up period is typically will be 30 days or a relatively short period of time. So we're hopeful to get through the clinical trials in a matter of months, and then assuming the antibody works, to make that available to people as quickly as we can. I think everybody involved in the process, certainly GSK and we and the regulatory authorities, as well as clinicians who will be doing the trials, understand the urgency and are doing everything we can to accelerate the program, consistent with, of course, assuring patient safety.
Mr. Skangos, it's Kelly back here in the studio. Thanks again for being with us. And a early congrats again on what might be a big breakthrough here. So here's my question. Number one, I understand that the antibodies kind of come from blood donation, especially if there's people who've already had coronavirus. I looked at trying to give blood lately. It's not that easy as you might imagine right now. I'm not even clear to me if it's safe. Can you tell us if you need more of that and what people should be thinking about? And related to that, can you talk about the competitive landscape for bringing this product to market? Are you guys first? Do you think your technology is the best, and why?
Sure. Well, we like the way we like the way we generate antibodies. We get these from patients who have recovered from the disease. So these are fully human antibodies made by people, and they are circulating in people already. So we believe they are likely to be safe and well tolerated. We'll, of course, have to test that, but we would anticipate that to be the case. In this case, we isolated these antibodies from patients who recovered from SARS, not from COVID-2. Those are related viruses. So these are antibodies that neutralize SARS, and we screened a collection of SARS antibodies that we had previously isolated prior to this epidemic, and we screened them for their ability to neutralize COVID-2. Some of them are potently neutralizing for COVID-2 as well. And so these antibodies would recognize both viruses. Obviously recognize something that is the same in both viruses. It's been conserved over all the years that these viruses have evolved separately. And so that portion of the virus is probably harder for the virus to alter and therefore escape the antibodies. So we think this is a very good way to isolate antibodies, and they have some potential advantages in being able to prevent viral escape. Right. We also have engineered what's called the FC region, a different part of the antibody, so that it in a way that in animal models induces a T-cell response, so a long-term response that protects the animals even after the antibody's gone. And so we're going to test the ability of the antibodies to have the same effect in humans. And if they do, then the antibodies can hopefully provide protection in the short term and leave the patient protected over the long term as well. So both the therapy and the vaccine.
Well, Dr. Skangos, it's such an important approach, and we're excited to hear the update today, and we hope to continue getting to hear updates as these trials proceed. Thank you so much for being with us today.
Okay, thanks for having me, Meg. Appreciate it.
George Skangos and our Meg Terrell. Meg, thank you so much. We appreciate it. We've got some breaking news coming in. It's on Airbus. Phil LeBeau has that story. What's going on, Phil?
Kelly, Airbus is suspending production at its plant in Mobile, Alabama. That's a plant that builds the A220 and the A320. Also suspending production at two of its plants in Germany. All of this is because of the COVID-19 impact, taking safety precautions. By the way, Kelly, this move comes one day after Boeing said that its plants out in the Puget Sound area, out in the Seattle area, they're going to be suspending production indefinitely. No indication when that production will resume. Kelly, back to you.
Wow. Okay, Phil, we appreciate it. Phil LeBeau. Now let's get back to the government's Small Business Emergency Loan Program, which has been live since Friday, and demand has been fierce. Here's what Larry Kudlow told CNBC's David Faber earlier.
It's a monumental undertaking, and I think we have to give Secretary Mnuchin and SBA a lot of credit. This thing's not easy. I just came as of 9:30 this morning, David. Their commitments for $38 billion worth of loans. The loans, 130,000 loans themselves, 2,400 lenders. So that's a terrific start.
Our Kate Rogers has been following all of this from the small biz side, and she joins us now. Kate, how has the process been so far for the people trying to get money?
Hey there, Kelly. Well, from the information that's been made available to CNBC, we understand the process
works like this. Small business owners would contact the lenders that they have relationships with and submit their PPP application from SBA.gov to the bank. New applications were released late last week, which meant that some small business owners had to resubmit applications to their banks. The bank would then verify that information on the application and submit that form to the Small Business Administration. The SBA then gives each application an SBA loan number from the E-Trans system. With that loan number, which is sent back to the bank, the SBA says the banks have delegated authority to make these loans. But according to industry sources, more information is needed. Many small businesses we've heard from say that they have not received their funds as their banks are awaiting guidance from the SBA. Now, as you said, Larry Kudlow told CNBC this morning the SBA had given out 130,000 E-Tran loan numbers for a value of more than $38 billion. But as we've said, it's unclear how much of that $38 billion has made its way to Main Street so far. Lenders will take those next steps in depositing loans into small business owners' accounts. The SBA declined to give CNBC a lump sum number of how much of that $38 billion has actually made its way into the hands of small business owners. We'll continue to push, but someone has to be tracking this. This is a $350 billion program. A lot of small business owners we're hearing from are concerned. It's first come, first served. So who's getting access to this money and when is really crucial in this time, Kelly.
Yeah, it sounds like, though, as of now, I mean, are they still planning on Friday to give access to the independent contractors and others if there's funds still available?
That's right. We haven't heard any change about independent contractors and self-employed businesses being able to apply Friday. We also know Secretary Mnuchin said on our air he does plan to go back to Congress if the $350 billion runs out. So there is a promise of more money coming down the line. But as we keep saying and hearing, first come, first served, that's a scary proposition to small business owners who may have submitted applications to their lenders, may not have heard back from their bankers yet. They're kind of in queues waiting to have their loans processed. 2,400 lenders are on the platform now. Hopefully more will join. But again, it's a waiting game right now for Main Street.
All right, Kate, thanks. Our Kate Rogers. Coming up, Zoom video has seen a 70% rally in the past 3 months as more and more people work from home, and some of us group chat with our friends using it. But we've got an analyst who says that this big run for Zoom won't last, and we'll tell you why that is. Plus, the fintech companies could soon be included in the small business lending program. We'll speak to the co-founder of Square about the role they could play in helping to get money to companies. And a week back into the job, JP Morgan's Jamie Dimon says there are things about this crisis that remind him of 2008. We'll tell you what those are. Remember, you can always watch or listen to us live on the go on the CNBC app. The Exchange will be right back.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
It's TuneIn Sports on this day. April 6, 1992, Duke's men's basketball beats Michigan 71-51, winning back-to-back titles for the Blue Devils.
Fired, and here comes Duke on the break. Behind the back, Hurley, the hill, why not? That's the play that was available. Nobody back for Michigan because they're sending 5 to the board.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
Welcome back to The Exchange. Here's a look at some of the biggest calls on the street today. First up, Jefferies is upgrading Tesla to a buy, but lowering its price target to $650. The firm saying it's the only original equipment manufacturer in the auto space that's legacy-free, has been doubling market coverage, and leads the industry's technological transformation. Shares of Tesla are up 5.5% to just about $507 today. Credit Suisse downgrading Zoom to underperform today, even while raising its price target by $10 to 105. The firm saying Zoom now has an ultra premium valuation, in fact, the richest in the software space. And the recent surge, they warn, will prove short-lived and comes from users that are difficult to monetize. Credit Suisse also worries about Zoom's growing competition. ZM down nearly 9%, trading about 117 today. And finally, Guggenheim is upgrading eBay to a buy with a $36 price target. The firm says at these levels and in this environment, the risk-reward is favorable. eBay has a strong balance sheet, robust cash flow, and has been implementing operational enhancements recently. eBay, which we haven't talked about in a little while, having a better than 5% rally today. But then again, so is everything. eBay's up to just under $31. Still to come, lots of drama, lots of changes, and plenty of saber rattling. That's the state of the oil market as leaders can't agree on what their next move is. We'll have the latest on the state of play in the energy markets after this. Plus, I really messed up. That's what the CEO of Zoom is saying. In fact, as the company continues to face backlash over security issues, we'll look at its plan to get back on track. Stay with us.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app. Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
You love listening to ESPN Radio live on TuneIn, but did you know you can also listen?
Now part of one company. An all-in-one membership for your cyber safety that gives you identity theft protection, device security, a VPN for online privacy, and more. And if you have an identity theft problem, we'll work to fix it with our $1 million protection package.
There are new cyber threats out there every day. So protecting yourself isn't a one-time job, it's an ongoing need. Now is the time to make sure that you have the right plan in place. Don't wait.
Norton 360 with LifeLock. Use promo code GET25 to save 25% off your first year and get a free shredder with annual membership. Call now to start your membership or visit lifelock.com/TV.
Battleground 2020, CNBC's exclusive survey. Has the coronavirus shaken up the race in the critical swing states that'll decide the next election? States of play. Special reports tomorrow. Watch and listen live on the CNBC app.
Welcome back. Let's get a check on the markets. We have a big, broad-based rally today. The Dow's up 5.6%, just under 1,200 points. Similar increases for the S&P and NASDAQ. NASDAQ's up 400 points. This coming off, again, just a difficult stretch for the last couple of weeks. All 11 sectors are higher today, led by utilities, materials, and consumer discretionary. Within the Dow, all 30 names are higher. American Express, Boeing, Visa, and Dow Chemical, or Dow Inc., I should say, those are the big winners. American Express and Boeing are up more than 12%. Retail is also leading the S&P today. Capri Holdings, Kohl's, PVH, and Nordstrom. Look at these increases. We're talking about 25% or more in some cases. So huge rallies, and that's pushing the markets overall up more than about 5% today. But it's not oil. Oil itself is down about 6%, and it's on track to break a 2-day win streak. This is coming despite reports that a deal may be getting closer for Russia and the Saudis. Let's bring in Brian Sullivan, who can help explain, Brian, what is going on in the oil market these days.
I hope I can.
because there's about 600 things going on, Kelly. All right, so this Saudi-Russia deal that the president referred to, they're talking about 10 million barrels a day. The reality, two countries alone are not going to go to 10 million barrels. I mean, it's almost impossible, if not impossible. Any deal would have to include everybody. There was supposed to be, Kelly, an OPEC plus virtual meeting today. We know that got moved. My source is telling us likely to Thursday. There's reports about possible G20 action on Friday. The president now talking about potential tariffs on imported oil as well. There is a ton of things that are going on. Can OPEC get together on Thursday? And if they do, can they agree on anything that's going to be big enough? Kelly, you might have heard about OPEC Plus, which is Russia. This is anything, Kelly, that we do, we'll have to take in OPEC plus. We're talking about OPEC, Russia, Norway, Mexico, Canada, and by the way, the 9,000 or so American producers. If you don't get everybody on board, the Saudis, they've told me over the weekend, they're not going to do anything. It's got to be a cut for all or a cut for none.
A cut for all or a cut for none. Brian, stick around. On that note, for more on all that's happening in the oil market, let's bring in Paul Sankey. He is managing director and lead oil analyst for Mizuho Securities. Paul, it's just been, an awful stretch here for the sector. Is there any hope?
Oh, yeah, there's hope because I think we're hopeful that demand will snap back pretty quickly. And I'm sure you're aware of what the New York governor was saying, Mr. Cuomo, this morning, that the end, to an extent, or at least the peak, is in sight. So I think things will come back. There will be an overhang of inventory, which is really the focus on the OPEC Plus agreement. I don't think anyone thinks you can solve today's oil market problem. But what we're hoping is that some sort of throttle back, particularly by Saudi, will avoid a total overflow of inventories, basically on a 4 to 6 to 1 year view.
Right, Paul. If there were people who came to you and said, "Look, I think energy is oversold, or I think it's going to, finally experience a rebound, and I want to know where I can put my money to work in the space that is relatively safe," and what would you recommend?
Well, we're very much in the Permian. We're in the best quality acreage. We do think there's potential for consolidation amongst the very best names with low leverage. So names like Pioneer, Diamondback Fang, Parsley, Concho, they all offer, we think, long-term attractive valuation and long-term sustainability. The problem is whether or not you want to risk buying something with a lot of debt on the basis that the market surprises to the upside. And that's a knotty one. And I wouldn't advise that necessarily into, as Brian said, the potential for no agreement from OPEC.
Right. So, Brian, I want to bring you in with that question as well. I imagine some of these talks must already be taking place, or are the companies hoping they can just ride it out? Because we've seen the bankruptcies already beginning.
Yeah, and by the way, shout out to Paul. Paul, by the way, is one of the only sell-side analysts that I've ever seen at an OPEC meeting. Most just do it from New York. Paul actually gets on a plane and goes. And it matters. I'll tell you why it matters. Like Halima Croft and Paul and others that actually physically go there, because you get to learn the nuance of the language that they use. We parse these Fed statements for every change in wording. The Saudis, they're the same way. They talk about a fair agreement. That means that's code for U.S., you need to practice what you preach as well. Behind the scenes, I'm sure a lot of people are making a lot of calls. The head of the IEA has been active on Twitter saying, I called Canada, I called Norway, all these countries trying to get together. But to Paul's point, if there's demand destruction of 30 million barrels a day, and even if everybody gets together and cuts 15, Kelly, you don't need to have gone to Virginia Tech's amazing engineering department to know that there's 15 million barrels a day still of oversupply. It will slow down that excess fill of inventory that Paul referred to. It won't stop it. The only thing that can stop it, truly, is if this stupid virus gets killed sooner than later. Yeah. We just put it away, and the U.S. economy comes back up, and demand comes back. Half of all gasoline demand is gone in a month. One half.
No, it's wild. So, Paul, in that, give us the two scenarios. If there's no deal, or if there is a deal or a sign of one, where does the oil price go?
Well, I think we're finding support definitely here. But the other thing that we're looking at closely is that the physical markets are trading much below the paper markets, which is obviously a major concern. And we'll actually be rolling the oil contract this week. So do be careful of that one. I would throw in there that there is a bull case for natural gas here, because clearly you're going to have to reduce U.S. supply as part of this overall process. And then ultimately, if we do get an agreement, the reality is the Saudi barrels are already on the water, and they're going to keep coming right through May and into June pretty much. So I think that we're at best going to bounce around here until we get through COVID and into driving season, hopefully, and everyone has very happy staycations at local hotels, or rather distant hotels.
Yeah. Would you, Paul, be going back to OPEC once, when to you is the all clear that it's okay to go to these meetings in person again?
Well, firstly, let me shout out to Brian, who Brian naturally stands out at the OPEC meeting, not just because he's a good couple of inches taller than almost anyone else there. I'm happy to go straight away. I'm very, very frustrated for my teenage kids. I feel it's a really rough situation for my soccer-playing son, Harry, and I'm desperate for us all to get out there. In fact, I misinterpreted what Mr. Cuomo said today. He said, let's go out for a walk and relax in the sun, and I was all ready to head out before he suddenly said, no, that's not the way you're meant to be thinking. I'm fairly fatalistic about this. I realize the risk to people, but I'm more than ready to head to Vienna. It's just that, as Brian can testify, the headquarters are still shut, and so as long as everything's shut, there's not much we can do.
Yeah. Well, Paul, best of wishes in the meantime, and we appreciate it.
Thanks a lot.
Brian, thanks to you as well. Superstar of the OPEC meetings there, Brian Sullivan and Paul Sankey. Ahead, the New York City school system becomes the latest to ban the use of Zoom over security concerns. We're going to talk about how the company is responding and whether investors will begin to look elsewhere. Also, take a look at the S&P sector heat map, where you see green across the board. In fact, we're pretty much near session highs right now for these averages. We're back in 2.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under Your New Episode section. Happy listening.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
This is Dr. Sanjay Gupta. Join me for CNN's new podcast, Coronavirus, Fact versus Fiction. We know you have questions, and we want to help you find answers. And send me your questions on social media at Dr. Sanjay Gupta.
Make sure to search and listen on TuneIn today.
It's TuneIn Sports on this day. April 6, 1992, Duke's men's basketball beats Michigan 71-51, winning back-to-back titles for the Blue Devils.
And here comes Duke on the break. Behind the back, Hurley.
Welcome back. Square's CEO Jack Dorsey voicing his support of mobile payments to get aid to small business owners who are facing a crisis with stores shut down. Dorsey tweeting on March 26th, quote, "People need help immediately. The technology exists to get money to most people today, even to those without bank accounts. Square and many of our peers can get it done. U.S. government, let us help." Joining me exclusively here on The Exchange is Jim McKelvey. He's the co-founder of Square and a former CNBC disruptor, also the author of The Innovation Stack, about what it takes to build a resilient company in a changing world. And we need some resilience right now, Jim. It's good to have you here. And this morning, by the way, on Squawk Box, the American Banking Associations had sounded like they were going to allow fintech companies to participate in this program.
Well, we certainly hope so, because we have a lot of technology that's relevant. It can move money very fast, and a lot of these systems are, frankly, safer than paper-based systems. So we hope that that'll be their decision.
What do you think you guys, or let me say Square, could achieve that the current structure is not able to accomplish right now?
Well, there are two basic things. First of all, we have very efficient means of transmitting money, so it can be done very quickly. One of the things that we're looking at the Fed and at Treasury are people who are being really hurt very quickly, and so we want to be able to respond quickly. Well, if we have electronic payments, we can make a very quick response, and that's what electronic payments allow us to do.
I was thinking about your business model because I want to say something like half of the revenue is coming from small business loans lately, right? I mean, am I in the ballpark? In other words, go ahead.
So we've got a pretty diversified revenue stream at Square, but certainly we do a lot with small business, yes.
So right now, the reason why we're trying to go through the bank is so that people know, hey, what is 8 weeks worth of pay for a small business? You know, they don't want them to necessarily just go into a portal and type in a number. So Square, would you guys be able pretty instantaneously to say, thanks to our point of sale systems, we can tell you exactly what, 8 weeks of cash flow or whatever would look like and be able to make that disbursement quickly and in a trustworthy way?
Well, for the basically everything's on the table. We have very good data on the people who are Square sellers. We also have systems that have been proven and that could, we think, be scaled up to help in general. But basically what Square is doing is we're just trying to help, and the government's taking the lead on this. So it's whatever Treasury and the Fed and the IRS want to do. We're just trying to make sort of modern tools available because sending out paper checks is probably not the best way to help some people.
Well, and I know that, I mean, for you, the idea of Square itself comes from why couldn't an iPhone be used to process credit card payments when, if American Express isn't accepted, for example. So, I mean, there's a lot of things I think you'd look at today and say, why should this be working this way? Can't technology make it better, right?
Yeah, ironically, Square was founded in the depths of the last recession, 2008, 2009, and that's when things were pretty dire. And Jack and I decided to, build a system to help small merchants, and we're still sort of on that path.
Yeah, and so finally, just to return to the concept, if what the government wants to know is, what is 8 weeks of cash flow and how quickly can it be demonstrated, do you think Square could play a role right now more quickly than pushing small business administration loans through the existing banking system, especially for people who might not, have that relationship or that documentation at the ready?
Oh, yeah. I mean, but again, it's not just Square. Any electronic payment system is going to have a huge advantage over sort of the traditional paper-based banking system. But when speed is of the essence, you want to use the modern tools.
Yeah. Well, we appreciate you joining us, Jim, and congratulations as well on the book.
Thank you.
It's a good timing.
It's an ironic time to be publishing a book on disruption and how to handle crises.
Right, and corporate resilience. Yeah.
Yeah.
Thanks for your time today.
Thank you.
Jim McKelvey is the co-founder of Square. Still ahead, shares of Zoom are down. Well, let's talk about this right now, actually. They're down about 8% as the backlash against video conferencing grows. New York City is now banning Zoom for its schools out of security concerns. Deirdre Bosa is here with the latest. Deirdre, I can tell you myself, I just used it for the first time. I think it's better than a lot of the rivals, but security concerns are cropping up.
Yeah, and I think that's what it's built on, that ease of use. But it turns out that Zoom isn't immune to some of the same problems that have plagued other very popular platforms like Facebook and YouTube. That is security and privacy concerns. Now, it's ease of use, what you were talking about, Kelly, that is what has made Zoom so popular. It's now looking like a liability. Now, video recordings have showed up on public websites, and the FBI has warned against Zoom bombing. I hope you haven't experienced that. Now, in addition to New York City schools banning the app, that's a measure that will affect more than 1 million students. New York's AG is also looking into the company's privacy practices, and Tesla and SpaceX have also banned the service for its employees. Now, CEO Eric Yuan is on an apology tour saying that he, quote, messed up and moved too fast. He's freezing new feature releases while focusing on fixing those issues. But Kelly, rivals, they will not wait. Over the weekend, Microsoft Skype announced a new feature called Meet Now. It's very Zoom-like. And you've also got Google's video conferencing app Duo upping the number of users allowed in one session. So yes, you mentioned Zoom is up 70% year to date, still outstanding, one of the hottest work from home plays of the year. However, take a look at the last week. is now down 20% over the last 7 days. Kelly?
And we remember when market leaders like TiVo, all of a sudden the technology gets commoditized and it's a DVR and everybody has it. I know Zoom doesn't want things to go that way. So as I mentioned, I think the interface is great. It's easy to use. Some of the other ones have annoying features to me that I won't bog everybody down with. With the early, at first it featured these Zoom links where you could basically send it to anybody, or if you just tried to come up with it yourself and type in a sequence of numbers, like you said, you could Zoom bomb an existing chat. Now I notice when I host them, there's options like a waiting room that you have to kind of click to accept people into. They're talking about more password protections. Are there security concerns about Zoom itself that go beyond that, or do you think making those tweaks will do enough?
There are security concerns beyond that. What you're talking about is they're changing the default, so you have to have a password. There is a waiting room, but Zoom before had said that there was this end-to-end encryption, which wasn't necessarily the case. So they are working on that back end, which is extremely important. CEO Eric Yuan also said that this was an app meant for enterprises, but given the coronavirus outbreak, you've got yoga teachers, you've got students, you've got a whole host of people socializing on the app. So these weren't necessarily purposes that they had in mind when they created it. So they're playing catch up now, and in a big way when you consider that daily active users has gone from 10 million to 200 million. That is a major task, and I guess now we have to see if Zoom is up for it, especially as these rivals are already on its heels.
Yep, 10 to 200 million. That is really amazing. Deirdre, thanks very much. Deirdre Bosa. Up next, JP Morgan's Jamie Dimon is back on the job following his major heart procedure, and he's got a pretty grim outlook for how the banking sector is going to weather coronavirus. Those details when the exchange returns.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
It's TuneIn Sports on this day. April 6, 1992, Duke's men's basketball beats Michigan 71-51. Winning back-to-back titles for the Blue Devils.
And here comes Duke on the break. Behind the back, Hurley, the hill. Why not? That's the play that was available. Nobody back for Michigan because they're sending 5 to the board.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. Wait a second.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building. But
For these and more, search sports and scroll down to the world of wrestling.
A car insurance.
Welcome back. JP Morgan's Jamie Dimon is back on the job after a recent heart procedure and is out with his annual shareholder letter. He discussed the coronavirus crisis, the role of the banks, and a subject most CEOs don't want to touch, which is cutting the dividend. I'm joined now by CNBC.com's Hugh Sun. Hugh, what do you think jumps out most? I mean, he was, I don't want to say dire, but maybe realistically concerned about the impact coronavirus is going to have.
Yeah, I mean, I think that was not surprising. I think the real one hard news headline out of this report, and as you mentioned, it's sort of a must read every year around April, and we're really glad he came back in time for this. But essentially he's broaching the topic that they could potentially cut the dividend. And as you know, you've had people like David Solomon, James Gorman, Michael Corbett, the CEOs of Citi and Morgan Stanley and Goldman Sachs go on all air in the past 2 weeks and say, no, the dividend is safe. So for Jamie Dimon, the head of the number one bank in the United States, to actually broach that topic, I think that's really interesting. And if ultimately down the line, and we could talk about this, but if JP Morgan, if the dividend is not safe at JP Morgan, it is not safe at any bank.
Right, which is why I'm not sure whether to even take this at face value, Hugh, or to contextualize it by saying, well, this is an investor letter where I don't know if he's required to lay out outcomes, but he certainly has to say to people putting their money into JP Morgan, look, if this really dire scenario plays out, then we'd have to go this route. I mean, do you think other CEOs would say any different?
I mean, this tells me, I think this tells me a couple of things. One, that the situation is so dynamic and it's so fast moving that, that perhaps the other CEOs can be forgiven for not saying this. But the other thing is, if it's coming from JP Morgan, and we all know that they are sort of the blue chip, the standard bearer for the industry, and Jamie Dimon has been the chief spokesman for the industry. If it's coming from JP Morgan and Jamie Dimon, then perhaps he is giving the rest of the industry permission, to broach this topic. Mm-hmm. And in coming days, it'll be more acceptable. Now, you recall that they as a group, decided we're going to voluntarily bring back our stock buyback. And they, as a group, have done a couple other things, including tapping the discount window. I think this is him saying that, if the situation deteriorates, and by the way, the extreme adverse scenario that he's talking about, in which we would potentially talk about cutting the dividend, 35% decline in GDP and unemployment at 14%. Where Janet Yellen just talked about that today as actually what we are in currently. So I don't think this situation is as unlikely as you think.
Right. Maybe the difference would be if it's sustained. But again, like you said, the idea that it couldn't happen, well, it certainly could happen at least in a quarter. Hugh, thanks. We appreciate it.
Thank you, Kelly.
Hugh Sun from CNBC.com. Well, next hour, new fears that the mortgage market is on the edge of disaster as millions of borrowers don't have the money to make their payments. Diane Oleg will join us with the former head of the Mortgage Bankers Association to explain why they're sounding the alarm. Checking on markets, we're near session highs at this hour, nearly 6% rally for the Dow Jones Industrial Average, 1,250-point gain. We're back in a minute.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
You love TuneIn for live breaking news from CNN, MSNBC, Fox.
Cooler without the planet getting warmer. At Emerson, when issues become inspiration, focusing core strengths to create a better world isn't just a result, it's a responsibility. Emerson, consider it solved.
Restaurants are facing a crisis, and they're counting on your takeout and delivery orders to make it through. Grubhub. Together, we can help save the restaurants we love.
At Southern New Hampshire University, we're committed to making college more affordable. That's why we're keeping our tuition the same through the year 2021.
I knew SNHU was the place for me when I saw how affordable it was.
Find your degree at snhu.edu.
divided by distance, united by business.
This is the new reality we're all in.
Essential breaking news, global market moves, helping you navigate the new normal. Squawk Box, 6 a.m. Eastern. Watch or listen live on the CNBC app.
Welcome back. Our breaking news coverage of the global pandemic and the markets continues right now on Power Lunch. Tyler Matheson will join us in just a moment. A big rally on the street with the Dow up more than 1,000 points, more than 1,200 points right now. We're just about at session highs on hopes and a peak in the number of coronavirus cases. There are nearly 340,000 cases here in the U.S., and about a third of those are in the state of New York, where the infection and fatality rate is showing some signs of slowing down. Meanwhile, oil is in the red today after last week's big rally as Saudi Arabia and Russia feud over production cuts. And the two countries will try to come to an agreement this week, but we'll have to get the latest details to see if that's possible. The oil market taking a hit today. And we do have full team coverage of these markets for you. Bob Bassani and Rick Santelli covering the action in stocks and bonds. Steve Leisman on the latest economic fallout from the virus. Bob, we'll kick it off with you and this rally that just keeps building.
Yeah, and it started early on. We gapped right up, great overseas numbers. And then when Governor Cuomo started talking a couple hours ago, we moved up on, of course, his comments of hopes for a possible plateau, all that very carefully couched. But the market took it positively. You don't see these kinds of days very often. I just want to point out that I call it markets in the middle. We are now 20% off of the lows with that 6% move in the S&P 500. So from the February 19th high, we're now down 22%. Remember, at one time we were down 35%. That's a long ago number here. From March 23rd low, now we're up 20%. So a bull market to a bear market to, I don't know how to characterize this anymore, but we're 20% off of the lows that we hit on March 23rd here. We're having a great day. A lot of ETFs, most beaten up, are rallying the most. The retailers are all up big today. Wayfair, for example, all up. Dillard's, Groupon, Kohl's, Macy's, all on the upside. The regional banks, or KRE, is up 8.5%. Best day since March 26th for the banks here. Some of the regional banks all up 4 or 5%, as you can see here. And the home builders are just on fire. The ETF, they're up 14% overall. Lennar and Pulte all rallying heavily today. Staples are the big lagger. Remember the big leadership group? Kroger's up every day. That's not happening today. They're all lagging. Clorox, Campbell Soup, and General Mills all up, but not participating much in the rally. Guys, back to you.
Yeah, I can't believe it turning negative. Bob, we appreciate it. Thank you, sir. Bob Bassani. Okay. Let's get over to Rick Santelli now for the latest on the bond markets. Rick?
Yes, Kelly, we are seeing yields move up a bit, but up a bit. 7 basis points. Look at a 2-day chart. We're in the mid-50s. Now we're slightly above the mid-60s, and we do have a bit of a cushion. I keep pointing out 54 basis points, the all-time low yield close, and we're still at a distance that makes many investors a little nervous. Sometimes lower yields are more of a caution sign than anything else. A year to date of the investment grade Barclays, always fascinating to watch this. And the reason I'm alluding to it is even hovering under 300 basis points. At one point, it was close to 400 basis points. But do remember, at the end of last year, coming in this year, it was under 100. And it's very competitive at these levels, especially when you look at the new issuance market that have come alive. TY VIX, it's like the VIX for stocks, except for this is for the 10-year part of the curve. And you can see how it's gone from 16 to 6% finally. 2-day of the dollar index, it's losing a little bit of its steam here, getting close to unchanged. Can't seem to break through 101. But do remember, it wasn't long ago we were under 95, which means we've had a 4% rally in basically 5 weeks. Kelly, back to you.
Yeah, I hear 95, Rick. I don't know if you're talking the dollar, the 10-year. I mean, the levels that, anyway, in that case, like you said, it's all about the greenback. We appreciate it. Let's get to some breaking news from the Fed and a rapid update on the economy. Steve Leisman, what is this breaking news we are talking about?
So the Fed just announced that it will create a facility, Kelly, by which it will buy these small business loans from the banks that are part of this PPP, or Paycheck Protection Program. It said it will provide term funding, and it will announce the details in just a few weeks. This answers a question that we've heard about from the banks, which is, well, if they juice up their balance sheet with all these loans, they're going to reach a cap at some point in time. Fed's going to fund them, take them off their books, I assume, the way this facility will work. In other news, we've been tracking the outlook for the economy, the downturn, and the upturn together, and it has taken a turn for the worse. Basically, what's happened here is those worst-case scenarios that were grabbing headlines, 30%, 25% declines, now become the consensus scenario. So if you look at the survey we've done of 8 economists now looking for a 27% decline in the second quarter, that is the average, followed by 2 decent quarters of a rebound that's looking a little bit like a V, 14% and then 10%. And if you look at the next chart, what you see is how much that outlook has deteriorated from the survey we did we went back to the 19th of March, and how much worse it's gotten, both with the expansion of the shutdown as well as the concerns about contagion. First quarter now more deeply negative, second quarter, but of course the harder they fall, the harder they come, the better they come back there with a better second quarter rebound. Janet Yellen talking an exclusive interview with CNBC, talking about her hopes for still a V-shaped recovery.
A V, which is what we're all hoping for, is really a best case scenario. And if activity could begin to resume, as many assume, in June, and maybe be back to something more normal by the summer, I think a V is possible, but I am worried that the outcome will be worse. And it really depends, to my mind, on just how much damage is done during the time that the economy is shut down in the way it is now.
It also depends on government aid. All the forecasts I showed you earlier of that third quarter and fourth quarter rebound rely upon additional government aid, but Goldman's saying that more is going to be needed than what's already put out there now, especially, Kelly, aid to the states. Back to you.
Yeah, Steve, let's go back to this news out of the Fed for just a moment. Would this be additional lending to small businesses, or this would encourage the existing lending program?
No, this is going to encourage the existing lending program. So this is going to really use this 350 that's out there, and it's going to give an individual bank more capacity to do more of that lending, so that they shouldn't get cut off because of balance sheet constraints, I would imagine. I haven't seen the facility yet, but my best guess here is that what it's going to do is be able to take the loan. Now, the legislation does provide for the ability to sell these loans. This should be a way for the Fed to either fund them or buy them in some way that creates additional capacity on banks' balance sheets so they can provide more loans. It doesn't increase the cap. However, there is, as you know, Kelly, a massive chunk of funds from this legislation, $450-odd billion that's going to go to the Fed, that can be grossed up. And ultimately, and we'll talk about this maybe more tomorrow, this is going to be 10 times bigger than the small business lending program once the Fed gets going with its Main Street lending facility. I'm told it's a top priority over there to get that facility together.
Absolutely. And I'm glad for our own ability to process all this. They're kind of happening one at a time, but obviously we want it all to get up and running. Steve, we appreciate the clarification and the news. Thank you, sir.
Pleasure.
Steve Leisman. The major averages are rallying pretty hard this afternoon on some hopeful signs out of Europe and other U.S. hotspots like New York about a slowdown in virus cases and deaths. Is the market right to believe this crisis may be getting under control? Vahan Janjigian is CIO of Greenwich Wealth Management. He joins us now along with Brian Jacobson, who is multi-asset strategist with Wells Fargo Asset Management. Vahan, are you encouraged? I mean, obviously we want a slowing in the number of new cases, not an increase in the number of deaths, but what more would you like to see here?
Well, I am encouraged. Obviously, the markets are encouraged today. And the bottom line is nobody's really paying attention to the economic numbers, looking at death tolls and new cases. And that's how they're trying to determine when the economy can get back up and running again. So it certainly would be extremely encouraging news if we see that flattening of the curve. Today, we have some evidence that perhaps we're near the peak. And as long as investors believe that there's a good chance that the economy people will get back to work in another month or maybe 6 weeks, then I think we could go higher. I think we've seen the bottoms. But if this takes a turn for the worse, and I think it's too early to tell, but if it does take a turn for the worse and investors begin to believe that it's going to take another 2 months or even longer before people go back to work, then we will test those lows of March 23rd.
All right. Tyler?
Kelly, good to see you and welcome everybody. We had a little trouble with the shot here from my home, but I'm with you now. Brian Jacobson, why don't you react to what Vahan just said? And specifically, what if things do not come back all that quickly? It isn't a snapback.
Well, that is one of the dangers, is that if you do get a resumption of economic activity, is what does that actually look like? What is that path to recovery? It's obviously been a very abrupt slowdown. You can liken it to being like we're going through an economic winter at the moment. The key question is whether or not this will become an economic ice age, where it's going to last multiple quarters, and then what does that thawing of conditions look like? Our best guess is that it's going to probably look very unique, very unusual. We've seen in the past snapbacks in economic activity from recessions. We've seen long trudges higher. So we're really positioning portfolios for kind of that more sawtooth pattern, just because there is a risk that if you get economic activity resumed too quickly, you could get a bounce back in terms of the number of infections if there isn't a vaccine in place. So it is very conditional as to whether or not when they resume activity, is there a vaccine in place? And that likely isn't going to happen for a while.
No, I think that's one of the things that people all worry about, as whether there's going to be either some breakthrough therapeutically or in terms of a vaccination. Brian, I guess one of the things that I worry about economically is the return of the consumer and the consumer's willingness to get out of their houses and go out and gather and spend and do the things that they did. The consumer, it's an article of faith that it's 2/3 or more of the American economy. And if that doesn't snap back quickly, not only either because people don't have jobs or because they're just gun shy about going out and spending, that could really slow things down, even if the virus is largely recumbent within a few months.
Yeah, you're absolutely right that is a risk. However, the consumer is going to do what the consumer does best, which is consume. Thankfully, it seems like the policy response has been proportionate to the problem, as far as expanded unemployment benefits, sending out checks to households to maybe prop up consumption. But there's not a lot to spend it on right now if you can't go out to various businesses. So I think that consumers are going to consume. It's just going to be in a different way. And that's the way that a lot of our equity portfolio managers are trying to figure out is exactly how will consumer consume, what will that look like going forward? We're going to probably get that bounce back. It's just what will they actually spend it on?
Vahan, energy has been hardest hit among all the sectors, basically. Is it time to start nibbling at energy stocks, and if so, which ones?
Yeah, I think it is time. And of course, energy has been hit for a long time, even before the coronavirus started to spread. But if you are a long-term investor, then I think it would be time to start adding some energy stocks to your portfolio. And this is a bit of a contrarian point of view, because the way I'm thinking about it is that right now we're in a world where we have a glut of oil and not enough demand. So I could see, for example, a scenario where companies start shutting in production, the economy then starts coming along, and then all of a sudden inventories get drawn down and the price of oil goes up. I don't think that'll happen for at least another year, but I can see that scenario. So it would make sense, in my opinion, to add those stocks. And the safe way to play it is to add the large integrated companies, perhaps the Exxons and the Chevrons. But if you want to take a little bit more risk, you can add a stock like Murphy Oil, which is a exploration and production company.
Right. Vahan, thank you very much. Vahan Jangigian and Brian Jacobson, we thank you very much for that. All right, let's go over to Meg Terrell. A new partnership to treat the coronavirus using antibodies was announced today, and we just spoke to the CEO of one company behind that effort. It's Vir Biotech. Spoke to him last hour, and Meg has more on that. Hi, Meg.
Hey, Tyler. Well, Vir Biotech is a young biotechnology company that's partnered now with British drug giant GlaxoSmithKline. Now, the focus that they're working on, at least initially, is an antibody treatment. And what this involves is actually looking for antibodies from people who have recovered from infections with the virus that causes COVID-19, as well as SARS, sort of the original coronavirus that affected us 20 years ago. Now, they have two antibody candidates. They say they plan to start a phase 2 trial within 3 to 5 months. GSK is also making a $250 million equity investment in Vir as part of this partnership. And they're going to be testing a couple different approaches, essentially looking at whether this treatment can prevent the disease, whether it can prevent the disease from becoming severe, and whether it can treat severe disease. We talked with George Skangos, the CEO of Vir, about all those approaches and the timelines. Take a listen.
We are planning to do these trials on a worldwide basis so we can enroll very quickly. The follow-up period is typically will be 30 days or a relatively short period of time. So we're hopeful to get through the clinical trials in a matter of months. And then assuming the antibody works, to make that available to people as quickly as we can.
So these timelines, guys, are faster than really we've ever talked about before, but nothing about the situation we're in is normal. Tyler and Kelly.
Absolutely not. Meg Terrell, thank you very much. All right, and coming up, stocks in rally mode with mortgage mayhem. The former head of the Federal Housing Administration will join us to explain why he thinks trouble is brewing in the housing market. That's next.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Hey everyone, it's Tremaine Lee, MSNBC correspondent and host of the new podcast, Into America. In our latest episode, Republican giant and longtime Senator Lindsey Graham is for the first time ever facing a real challenge to his Senate seat. Can a relative newcomer to the scene, a black Democrat in a red state, win this fight? I head to South Carolina to find out. Search for Into America wherever you're listening right now and subscribe.
You love listening to ESPN Radio live on TuneIn, but did you know you can also listen to favorite ESPN shows on demand? Get the latest takes from Stephen A. Smith,
dynamic duos all over the place,
Dan LeBatard, and Garlic and Wingo when it fits your schedule. And listen to episodes of Pardon the Interruption.
Pardon the interruption, I'm Israel Gutierrez, and I love hosting the show with my humble...
Around the Horn and Highly Questionable as podcasts anytime you want. Search ESPN to see all the podcasts on TuneIn.
This is Dr. Sanjay Gupta. Join me for CNN's new podcast, Coronavirus, Fact versus Fiction. We know you have questions, and we want to help you find answers. And send me your questions on social media at Dr. Sanjay Gupta.
Make sure to search and listen on TuneIn today.
Student loans.
Welcome back, everybody, to Power Lunch, and let's get over to Sue Herrera now for the latest on the coronavirus. Sue?
Thanks so much, Ty, and good afternoon, everyone. Wisconsin's Governor Tony Evers has ordered a 2-month delay of that state's primary vote, which was set for tomorrow. Wisconsin Republicans, though, say they will challenge that order. Evers, a Democrat, has been unable to strike a deal with Republicans to reschedule the election. In Europe, France reporting a new surge in deaths from the coronavirus. They are now up by more than 830 since yesterday to more than 8,900. But here's an event that isn't being canceled. Lady Gaga announcing a One World Together concert will be televised on April 18th to help raise money to fight the pandemic. The star-studded lineup includes Elton John, Paul McCartney, Stevie Wonder, and Chris Martin. There you see the head of the WHO, Mr. Tedros. The entertainment industry, she says, has already made some big donations.
Proud to say that over the past 7 days, we've raised a total of $35 million for the Solidarity Fund. This money will include essential PPE, supplies, and testing kits around the world, and will help improve lab capacity to rapidly process tests. It will also coordinate research development.
We'll have more for you next hour. We expect a news conference from New Jersey's Governor, Mr. Murphy. And as always, if you want more on the coronavirus coverage, you can head to CNBC.com. And Kelly, we expect some new numbers from New Jersey shortly. Back to you.
Okay, Sue, thanks. The director of the National Economic Council, Larry Kudlow, said earlier on CNBC that $38 billion in loans have been approved for small businesses. Question now is, when will that money get into the hands of the business owners? Kate Rogers is here with a look at that for us. Kate?
Hey, Kelly, that's right. We do know as of right now, 130,000 loans have been given an SBA loan number for a value of more than $38 billion. But as you said, the question remains how much of that $38 billion has actually made its way to Main Street. Remember, this is a first-come, first-served program. So we're hearing from many small business owners who are anxious. We've heard from some who've been turned away from banks. Some are waiting in queues. Some have been contacted by their banks to move forward with this process, which is good news. We've even heard from two business owners that have gotten loan numbers from the SBA, but were told by their bank that they needed next steps and guidance from the administration before the loan could actually be dispersed. We've seen some tweets from the SBA talking about small business owners that have actually accessed their money and their cash, but we have asked how much total has been lent out to small business owners from banks. We haven't yet gotten an answer to that. We do know more than 2,400 lenders are now a part of this program. That's good news, and it's up from last week when there were just 1,800 lenders that were a part of this program. The SBA also has a lender hotline, they told us, that will be up and running today to help onboard more lenders and hopefully get more cash out the door. But once again, first come, first served. A lot of business owners want to know how much money has gone out and how much still remains. Guys, back over to you.
All right, Kate, we appreciate it. Kate Rogers. Ty?
All right, Kate. Well, we got the Dow up about 1,200 points. Kelly, energy stocks lagging the broader rally today, as they have on many days lately, as oil continues to fall. Halliburton, the latest company to lay off some employees. We got much more on that right after this short break. Plus, the mortgage market could be turned upside down if borrowers stop paying their bills. And we'll look at what the potential damage could be with the former head of the Federal Housing Administration. That is next. Stay with us.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
The world and how we interact with each other is changing, but that will never change who we are at Lexus.
Now, more than ever, you and your needs come first.
Find out what service options are available in your area at lexus.com/people first.
When you look at the critical issues facing our world, what do you see? We see breakthrough medicines getting to patients in record time. We see harnessing natural gas, unleashing the promise of clean energy. We see engineers simulating the future to improve today. At Emerson, when issues become inspiration, focusing core strengths to create a better world isn't just a result, it's a responsibility. Emerson, consider it solved.
For many of our members, being prepared won't be a new thing. And it won't be their first experience with social distancing. Overcoming challenges is what defines the military community. USAA has been standing with them for nearly 100 years, and we'll be here to serve you for 100 more.
Our retirement plan with Voya gives us confidence.
They help us with achievable steps along the way, so we can spend a bit today knowing we're prepared for tomorrow.
Wow, Dad. Do you think you overdid it, maybe?
I don't think so. What do you think, Peanut?
Nope.
Honey, you think we overdid it?
Overdid what?
See? We don't think so, son.
Technically, grandparents can't overdo it. That's impossible.
Well planned, well invested, well protected.
Voya. Be confident to and through retirement.
Let's do this.
I want to be a rock star so bad.
Shark Tank We Heart Music Marathon, tonight 8 Eastern, CNBC. Get yours and catch Trolls World Tour in theaters and at home on demand April 10th.
Welcome back. The mortgage market is at risk as hundreds of thousands of borrowers apply for the government's homeowner bailout amid the coronavirus outbreak. The former head of the Federal Housing Administration will join us in a moment, but let's get to Diana Olick first for the details on what's happening here. Diana?
Well, Kelly, on Saturday, a broad coalition of mortgage and finance industry leaders issued a plea to federal regulators for desperately needed cash. Requests from borrowers for the federal mortgage forbearance program are flooding in at an alarming rate. Servicers are granting those monthly payment deferrals with no questions asked as required, but the servicers still have to pay mortgage bondholders. The coalition said the scale of this forbearance program could not have been foreseen by mortgage servicers or fully anticipated by regulators. It is therefore incumbent upon the government to provide a liquidity facility for single-family and multifamily servicers. Any further delay could lead to greater uncertainty and volatility in the market. Now, I spoke with Jay Bray, CEO of Mr. Cooper, the largest non-bank servicer in the nation with close to 4 million, mostly government-backed loans. It alone has already granted over 86,000 forbearances. Bray helped regulators to set up the plan and was told there would be federal cash for servicers, but it never made it to the final act. He says without it, there is going to be complete chaos. Servicers will go under, leaving even more borrowers in the lurch. Joining us now for his take on this is David Stevens, former FHA commissioner during the subprime mortgage crisis and former CEO of the Mortgage Bankers Association. Dave, thanks so much for joining us.
Good to be with you, Diana.
Now, you disagree with the way this whole forbearance plan was set up, that borrowers don't have to prove any financial hardship. I'm told it was set up that way so borrowers would get relief immediately. What's your issue with that?
Well, I think there's a tension here where you don't want to be using federal dollars at a time like this to give it to people who do not need it. The forbearance program is an extremely effective way to help those who have real job loss and can't make their mortgage payment. But the way this is being rolled out, it's fraught with moral hazard. It's open to anybody, whether they're wealthy and have paychecks and can continue paying their mortgage, as well as those who truly need the money. And unfortunately, that's just going to balloon up the total size of borrowers who execute and take the forbearance plan, put in an extraordinary burden on the private sector and ultimately the taxpayer.
And for the servicers, why do federal regulators who set up this plan not see the disconnect here, that servicers can't afford this kind of massive spike in payments that they now have to come up with for the bondholders?
Well, that's the real shocking part about this. And not only is this a unique forbearance plan because anybody can get it and all you have to do is go to your mortgage, where you make your mortgage payment, go on the website and click a button and skip 6 months worth of payments, maybe another 6 months. But the hard part about this for the private sector is the sheer size and scope of this was given no support by particularly Fannie Mae and Freddie Mac and their regulator, FHFA, who has the authority to create this liquidity advance for the private industry, could have done so, and they didn't. And it's inexcusable, in my view, that federal government did not step in after creating such a massive program and provide the support for industry. It's getting worse, Diana, I'll just give you just one example. I've spoken to a variety of lenders today across the country. Mortgages are drying up, especially for first-time home buyers and those that need a mortgage the most, because of all of this uncertainty, the question of whether these companies are going to be able to survive. We need to back up what we do as a federal government, whether through congressional legislation and through the regulatory community, by rolling out these programs to make sure that industry can survive and continue to provide liquidity to the housing market, which we will desperately need as we start coming out of this recessionary period, at least coming out of being locked in our homes and going back to work.
Right. Commissioner Stevens, it's Kelly back here in the studio. I just want to clarify something, because it seems that a big part of what's happening in the mortgage market is also because low rates are causing huge prepayments and refinancing. So it's kind of a double whammy right now for investors. So understandably, they're pulling back. For the people who forego payments for a few months, as my understanding is that gets added to the principal. So it's not clear to me why a lot of people would want to choose to forego that for a few months if they're going to have to pay it off at some point anyway, and they do have the means. So just like your thoughts on that as you respond with, what else authorities could do here to make sure the mortgage market doesn't dry up altogether.
Yeah, so I was the Federal Housing Commissioner during the last Great Recession, and we required what's called hardship. You had to prove that you had lost your job and you could no longer make your mortgage payments, because we were concerned about protecting taxpayer dollars at the time and not giving it to people who did not need it. But to your point, it's interesting how the repayment programs will work. FHA, for example, you really don't have to repay the loan, the advances, until you pay off the home. They simply get tacked on the back of the loan in what's called a secretary's lien, which is the formal term for it. No interest, non-interest bearing, and it just becomes something owed down the road. So I guess for people who even can afford to make the payments, being able to get sort of interest-free money, thanks to what Congress has permitted here, is a really questionable step. And so while we're hopeful, and Director Calabria of FHFA has said publicly he's hopeful people will be honest, and if they can afford to make their payments, they will, I'm hearing stories from real estate agents and others across the country who are telling me that's not always the case.
And Dave, is the FHA particularly vulnerable here? I mean, you were there during the subprime bailout. FHA really saved the market in that sense. They are getting some liquidity, though, from Ginnie Mae, are they not?
They're getting liquidity from Ginnie Mae, but understand how this works. Well, FHA guarantees all these mortgages. And after the servicers outlay 6 months' worth of payments, which they'll make to the investor, they can submit what's called a partial claim to FHA, and FHA will reimburse the servicers for all of those payments. Now, 6 months is a really long period for forbearance generally anyway. It's longer than usual. It can be extended for another 6 months. The MBA, Mortgage Bankers Association, has estimated the cumulative impact here. If 25% of all eligible borrowers opt in for this, it could cost somewhere between $75 to $100 billion of advances. The portion that's FHA's will ultimately have to be reimbursed, and they already got in trouble once before. We remember that. We don't need to repeat this same problem that happened in the past.
All right. Commissioner Stevens, thank you so much for your time, sir. We appreciate it. And Diana Olick, our thanks to you as well. Such an important story. Ty?
All righty, still ahead. Oil set to snap its two-day winning streak, despite reports that the Saudis and the Russians are nearing a deal on production cuts. What's next for OPEC and its allies and its frenemies? And finally, as the death toll in the coronavirus pandemic keeps climbing, we will talk with Bishop Robert Barron about how he is handling the malaise that is permeating society. A crisis of faith coming up. And remember, you can always watch or listen to us live on our app, the CNBC app. Get us on the go. We'll be right back. Our special breaking news coverage continues after this.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving, soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
You love TuneIn for live-breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. Wait a second.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building. But
For these and more, search sports and scroll down to the world of wrestling.
This is Dr. Sanjay Gupta. Join me for CNN's new podcast, Coronavirus, Fact versus Fiction. We know you have questions, and We want to help you find answers. And send me your questions on social media at Dr. Sanjay Gupta.
Make sure to search and listen on TuneIn today.
It's TuneIn Sports on this day. April 6, 1992, Duke's men's basketball beats Michigan 71-51, winning back-to-back titles for the Blue Devils.
And here comes Duke on the break. Behind the back, Hurley, the hill. Why not? That's the play that was available. Nobody back for Michigan because they're sending 5 to the board.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
Welcome back to Power Lunch. Let's get a check on the markets right now. We've been green across the board all session, and we're close to the highs. We've erased all of last week's losses already. The Dow's up 5.5%. So is the S&P and NASDAQ, and the Russell 2000 small caps are up more than 6% today. All 11 sectors are higher. Utilities, materials, and tech is your leadership today. Utilities up more than 7%. And all 30 Dow stocks are higher, led by Boeing, Raytheon, American Express, and Visa. We have moves now of more than 15% for Boeing. Also, some big moves in the retail sector today, including Wayfair, which is up a whopping 38%, PVH, Nordstrom, and Capri Holdings all up more than 24%. Tyler?
All right, Kelly, thank you very much. The oil market is closing for the day. Crude finishing lower by almost 8%, snapping a two-day win streak. This is questions remain on whether Russia and Saudi Arabia will reach a deal for production cuts amid very, very seriously dropping demand. Brian Sullivan joins us now with that story. When you look, Brian, at the demand destruction that has occurred as a result of the shutting down, basically, of the American economy and economies around the world, it's really breathtaking.
It could be 30 million barrels a day. I mean, that's 30% of global demand, Tyler. It's about 100 million barrels. The United States uses about 20 million barrels a day. About half of that is for just driving around. Of course, nobody's driving around. So gasoline demand is way down. So you're looking at 25 to 30 million barrels, depending on your estimates, taken out. Now, a lot has been discussed about this potential deal to get 10 million barrels. The market's got a lot of hope on 10 million, which, by the way, is not 30 million. And I'm kind of going back and forth. People, they say, well, you know, Russia and Saudis can do 10. Others say no way. Let's walk through some math. What I've done, guys, is I have math, not bath, although I probably need that as well. Here you go. I've walked through, aggregated a bunch of research reports, and everybody's trying to figure out where this 10 million may come from. These are estimates based on everything I'm sort of reading, okay? Saudi Arabia maybe can do 4 million barrels a day. The rest of OPEC, you call that, I don't know, 2 million if we're being optimistic. Russia, probably 1.5 million. The U.S., 1.5 million, and then Norway and Canada, as I call it, another million. That's how you get to 10. It's possible some could do more, some could do less, but that's kind of the basic math around this 10 million, but that's still not 30.
All right, Brian, hang on, because I want you to participate in this next discussion as we talk a little bit more about the oil market and what's playing out there with Francisco Blanch. He's the head of global commodities and derivatives research for B of A Securities. Francisco, welcome. Good to have you with us.
Thank you for having me.
Yeah, it's great. Oil has come up in recent days, but is down today, even though the sector seems to be holding in, at least the equity parts of it, holding in reasonably well. What do you see as we move forward, and how much hope do you put on the Russians and the Saudis being able to reach some kind of production agreement?
I think the Saudis and the Russians are probably going to agree onto something. It was always our baseline scenario that we're going to see both of the players come back to a negotiating table. The big question mark here is whether the U.S. is going to agree to some prorated cuts through, for example, rationing by the Texas Railroad Commission or the province of Alberta. And there is a precedent for that 15 months ago, where the province of Alberta issued mandatory cuts across all producers. Or alternatively, we're just going to have to see the lower prices, the price declines, force shut-ins across America, and that's effectively what's been on offer. So we don't know exactly the shape of the U.S. response, but I do think that Russia and Saudi Arabia are definitely getting a lot closer.
For those of us who do not know, Brian, I'll get you in just a sec. For those of us who do not know, why is the Texas Railroad Commission central to this?
Well, because the authority to order production restrictions lies at the state level in many instances. So unless you're talking about federal lands and essentially areas that are controlled by the federal government, most of the arrangement and certainly the number one producer in the country across the states is Texas. So the Texas Railroad Commission is central to this because it's been basically managing oil licenses and oil leases for over 100 years, and that's why it's such an important body here.
Fascinating, Brian. Jump in.
Well, by the way, so the two companies that originated that motion that Francisco is talking about, Pioneer Natural Resources and Parsley Energy. The head of Pioneer Natural Resources is Scott Sheffield. He's pushing for this. He is on Fast Money with us tonight. We did an interview with him recently, very vocally outspoken about everything that's going on. He thinks that Exxon and others are trying to destroy the mid company. So he'll be on at Fast Money tonight at 5 o'clock. Tune in for that. Parsley Energy, the former CEO of Parsley is Brian Sheffield, his son. He's not the CEO anymore, so a little family action going on there, but they're pushing the Texas Railroad Commission to institute these cuts. I mean, it truly is a remarkable time when you've got the oil industry basically begging a regulatory body to control output. Tyler, what's amazing to me, I did not know this, Rystad Energy, respected research firm out of Norway, says there's 9,000 different American producers, from ExxonMobil all the way down to some guy with a small well in his backyard producing a barrel a day. You ever try to wrangle 12 kids? 9,000 oil producers. Trying to get them to agree on anything could be tough.
All right, gentlemen, we're going to leave it there. Francisco Blanche of B of A Securities and Brian Sullivan, thank you very much. Kelly.
All right, up next, the global crisis from the coronavirus. It's cast a cloud of death, despair, and extreme financial anxiety across the whole world. And as we now look to begin Holy Week and the observance of Passover, our faith and spiritual mettle is being tested like never before. When we return, a conversation with Bishop Robert Barron.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
This is Dr. Sanjay Gupta. Join me for CNN's new podcast, Coronavirus, Fact versus Fiction. We know you have questions, and we want to help you find answers. And send me your questions on social media at Dr. Sanjay Gupta.
Make sure to search and listen on TuneIn today.
It's TuneIn Sports on this day. April 6, 1992, Duke's men's basketball beats Michigan 71-51. Winning back-to-back titles for the Blue Devils.
Fired, and here comes Duke on the break. Behind the back, Hurley, the hill, why not? That's the play that was available. Nobody back for Michigan because they're sending 5 to the board.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
There are no fewer than 19,000 funeral homes across the country. and all of them are bracing for double the number of deaths they typically handle at this time of the year. And, of course, it is all because of the coronavirus. Contessa Brewer has more on the steps they are taking to prepare for this onslaught. Contessa.
Tyler, even in small villages, they are bracing for what's to come. Inside this funeral home in Saugerties, they are begging suppliers for masks and the face shields they desperately need. And the situation in New York City is difficult to comprehend. So are the pictures, and we're going to show you some of these now. As mobile morgues, dozens of them are lined up outside of hospitals in New York City, being filled with bodies as we speak. FEMA is sending even more of those mobile morgues coming in. A city councilman says soon the morgue freezers will be full and temporary burials will likely take place in trenches in city parks. Cremations now take place around the clock, and the National Funeral Directors Association has put out a nationwide call for professionals to volunteer across the country. Social distancing means an end to funerals as we know them.
We're trying to find any possible way to give people comfort, that they're not getting. Keep in mind, people are not being able to say goodbye to their loved ones in the hospital.
Many families are now opting for funerals, that is, on these online platforms where as many as 100 mourners can participate in the ceremony. And those few immediate family members who were allowed to attend a memorial service inside this funeral home today were greeted by signs reminding them no handshakes, no hugging, and if you feel sick, you should stay out. Tyler?
So tough. Contessa, thanks very much. Contessa Brewer there. Throughout this coronavirus pandemic, we as a network have been covering both the tragic loss of life and the epic collapse of our global economies. But as we begin Holy Week now and the observance of Passover, we want to take a step back and look at how this crisis is testing our faith. Faith in our institutions, faith in humanity to some extent, and for some, even their faith in God. Here to help shepherd us through these troubled waters, Bishop Robert Barron is founder of Word on Fire Ministries and auxiliary bishop of the Archdiocese of Los Angeles. Bishop, it's a pleasure to have you, an honor to have you here. Welcome. Bishop Barron, if you can hear me, I'm curious what your message would be to our viewers during this time. Well, we'll try that link again in just a moment. Get the Bishop back online. Ty?
It'll be a fascinating conversation, and we'll get him back if we can. The markets, of course, rallying today. That's the good news amidst all of this trouble, up by better than 1,100 points. The ETF that tracks retail stocks climbing more than 9%, but it is still lower by about 35% from where it started the year. We'll tell you, however, about some select names to buy, and there are some. That's next.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raised Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
This is Dr. Sanjay Gupta. Join me for CNN's new podcast, Coronavirus, Fact versus Fiction. We know you have questions, and we want to help you find answers. And send me your questions on social media at Dr. Sanjay Gupta.
Make sure to search and listen on TuneIn today. /TV.
All right, welcome back, everybody. A big rally on Wall Street to welcome in the new week. The major averages having their biggest gains in 7 days. The Dow right now up more than 1,200 points. So is it safe to dip your toe or maybe even a whole foot back into the market? And what are some of the best opportunities out there right now? Well, Matt Roddy is here to tell us. He's Vice President and Portfolio Manager with Rockland Trust. Matt, welcome. Good to have you with us as we're up 1,245 points. What do you think here? Is this a false bottom or the real thing?
Good afternoon, Charlie. Yes, thanks for having me. I actually think we've put in the bottom, Tyler. If all indications are the news with the coronavirus continues to show that the worst-case scenarios are maybe no longer on the table, I think we spent much of March hearing about how we missed the opportunity to prevent the crisis. However, I think we're starting to hear now news that we are on the other end of the spectrum, looking better to avoid the worst-case scenarios as we see Italy and some other countries improving and our own growth curve starting to come in line with what they did when they went through a similar period. So I'm getting optimistic that, when we hit that 35% or so sell-off, that was the bottom. Now, it doesn't mean we can't retrace a little of that as the news ebbs and flows. I don't think every day we're going to hear good news for sure, and you can't underestimate the human tragedy and then the way that plays on people's psyches. But I think in the long term, not even the long term, maybe even by the end of this year, we're going to look back at this as a larger human tragedy, quite frankly, than the long-term financial damage that it may have inflicted on our economy. I think that'll be a little bit more short-term in nature.
I'm sure we're going to see a lot of very painful images over the next few weeks, and among them will be people frustrated at their inability to get unemployment checks or waiting on telephone lines for hours and hours and hours to get through to their states, which would suggest to me that maybe the consumer economy comes back a little more slowly than other parts of the economy. What are the sectors you like most right now?
Well, in this sector, I think the banks have been really beaten up, and I think part of it is just there's so much in the crosshairs of trying to get this stimulus money out. Than the net interest margin. So I think they've been, unfairly probably beaten up a little too much. I think there's some value in the banks for sure. Consumer discretionary certainly comes to mind too. There's some names there. I'm not talking about the ones that may not survive, but there's some names there that got thrown out with the baby with the bathwater, if you will.
All right. Got to leave it there, Matt. Thank you very much. Matt Roddy, Rockland Trust. We appreciate it very much. We'll have you back again soon. Kelly.
All righty. The coronavirus pandemic, like we said, is testing people's faith and technology as well. We're going to try to speak to Bishop Robert Barron about that next. Stay with us.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under Your New Episode section. Happy listening.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving, soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Stop breaches. Try it free today. providing a layer of protection you can count on. WeatherTech features non-porous surfaces that can easily be wiped with germ-killing disinfectants and can easily be washed out for complete protection, front, back, and even up the sides. It's not so easy with carpet mats. Stay safe with WeatherTech, the ultimate protection for your vehicle. Order today at WeatherTech.com.
We cannot do all the good that the world needs. But right now, the world needs all the good that we can do. To all of our employees and everyone working to keep America strong, thank you.
Welcome back. As we said, it's been such a trying time for everybody getting through coronavirus. Here to help shepherd us through these troubled waters is Bishop Robert Barron, the founder of Word on Fire Ministries, the auxiliary bishop of the Archdiocese of Los Angeles. Bishop, can you hear me?
I can hear you fine.
Wonderful. Welcome, and we would love to know what is your message to our viewers, especially with Holy Week now and heading into Passover. What is your message during these difficult times?
If I could put it very simply, it's to enter into what we call the Paschal mystery, which is the dying and rising of Jesus. In a way, to come face to face with the darkness of life, with death itself, that's essential to this Holy Week. But death leading to resurrection is the great rhythm of the Christian life. And so, in a way, this is a Lent we'll never forget. This is what we do. We face death with the confidence of the resurrection.
What do you say to people when they say, Bishop, and again, you're somebody who's so well versed in the stuff that's on social media and on the internet. You were one of the first to put up YouTube videos that's led to your position today. So, and you often really enjoy to engage with people and are very effective in engaging with people on these subjects. So what do you say when people say to you, why would God let these pandemics happen, Bishop? Why?
The short answer is, I don't know, and no one does. God has a providential plan. God is provident over all things. God wills and God permits. Now, what's the ultimate purpose of all that? I don't know, and no one knows this side of heaven. But whatever happens, or whatever God permits, there's an opening of a door to love. There's the possibility of love, and that's what we look for, especially at the dark times. What is my opportunity right here, right now, to love? That's what God wants. That's cooperating with God's will.
One of the topics that even, is a point of discussion in my own family is the decision some churches have made to close during this time. And not just to close masses, but in some case in my area to close their doors altogether, to suspend things like baptisms and in some cases funerals, except in extreme emergencies. And even the Papal Secretary to the Pope has warned that if the church turns its back on people in this time of crisis, they'll turn their back on the church. Are you concerned about that?
Yeah, and I've been around the table. It's not been my decision to make ultimately, but I've been around the table when we discuss these things. And it's been painful. I mean, no church leader wants ever to close the doors of our churches. That's our whole reason for being. But we just perceive that this thing is so dangerous, and gathering people together in one place, especially a lot of elderly people, who tend to come to church, we just felt this was putting people at too great a risk. We hate it. No one likes it. We hope it's over soon, but we felt this was the most prudential decision at the time. My hope is that when the day comes, I hope it's fairly soon, when we can come back to church, we do so in a very festive way. But for the time being, I think we had to do it.
Bishop Barron, Tyler Matheson here. I'm very interested. I was struck by your mentioning Lent, where Christian believers often give something up, and we've all been asked to give something up. And also the confluence of Passover this week, which is a holiday that also has its dark side as well, but both end up in the light. But I'd like to come back to something Kelly asked a moment ago about why does God allow these things to happen? Does God intend these things to happen, bad things to happen, or does he or she permit them to happen?
Yeah, and the tradition uses both those terms. I think sometimes God does actively will things to happen, But at the very least, God permits. And in the case of evil, we use that language. That God doesn't create or cause evil, but God permits it. Now, that does beg the question, well, why? Well, sometimes we can see. Sometimes out of evil comes a great good that wouldn't have come otherwise. Now, what is it in this case? I don't know, and no one knows. Maybe we won't know for 100 years. But in any case, we have an opportunity to love, and that's always cooperating with God's will. So permission when it comes to evil is the right language to use.
Well, Bishop Barron, we again, appreciate your time and you joining us today and everything you guys are doing. I know you have movies on St. Francis of Assisi, among a lot of other free resources right now, so people can reach out and find those. Thanks for joining us.
God bless you all. Thanks.
And you. Tyler, closing bell has to pick up after that. How do you think they feel? That's a tough act to follow.
That's a spiritual note, and this really is a spiritual test for everybody, whether you've been affected directly by this illness or tangentially by it. It is a spiritual test, a test of the heart, a test of the will, and of the spirit. Thanks for watching our breaking news coverage, and we continue now into the last hour of the trading day with the folks at Closing Bell.
Tyler and Kelly, thank you. Hard to follow that, Bishop, indeed. But welcome, everyone. I'm Sarah Eisen here with Michael Santoli today, who's in for Wilfred Frost. Stocks are snapping back in a big way today. Major indices up more than 5%. Sectors like retail seeing their best day in over a decade. Let's look at what's driving the action higher on Wall Street. New data from the state of New York and around the world showing the spread of the virus may be leveling off, indicating extreme measures may have begun to have an impact. Encouraging signs of progress on both a vaccine and treatment options over the weekend. But there are more warning signs as well. China, for instance, reporting an increase of cases, and U.S. officials warning this week will be the toughest yet as hospitals struggle to maintain and expand their capacity.
And coming up on today's show, Blackstone is donating millions of dollars to support healthcare workers and first responders in New York. We'll speak with Blackstone CEO Steve Schwartzman about that move and his thoughts on this volatile market. Plus, we'll be joined by the head of the Transport Workers Union about his concerns that enough isn't being done to protect his members on the front lines.
59 minutes left of trade. Let's focus on the big stories we are watching right now. Meg Terrell with the latest on treatments for the virus. Peter Cicchini from Kenner Fitzgerald is with us to talk about the volatility in the oil market in particular. But first, Mike, wanted to get your take on today's rally and where this puts us.
Yeah, Sarah, actually a pretty crisp rally. You can't really argue with that. But where it takes us to is actually perhaps one of the most interesting things in terms of levels. A one-year chart of the S&P 500 right here, 2630-ish on the S&P 500 is exactly where we close on March 30th. So you remember that was that big three-day rebound rally off of those lows from March 23rd. 2630, it's been a little bit of a ceiling, and look at what we did today. Rushed right up to that test. Now, what are the tests up beyond that? I'm going to point to these areas around 2700 and just above there. 2700, if you believe March 23rd is plausibly the low for this phase right now, it really fell off a cliff and became a disorderly overshoot to the downside around that 2700 level. We had a 12% down day. That's what we'd probably have to get back up to say that this is a little bit more than a reflex bounce, but it obviously has been broad. Just wanted to take a little bit of a glimpse of the leadership today. Since the market highs, it has been obviously very much a defensive outperformance is what we've seen in the markets here. So here's the consumer staples and the large cap techs and the QQQ, but this is small caps and that is the banks. Obviously, very wide performance spread, but look at today and you'll see an inversion of that. So when the market gets a little more confident, when people feel like maybe it's gotten over to the downside, it is the most beaten up stuff that tends to do better. You see the staples being underperformers in a pretty pronounced way. So that's pretty much to be expected when you do get one of these rushes for the risky stuff that's been left behind, Sarah.
Really liked your column today. The waiting is the hardest part. Tom Petty and investors. I mean, it speaks to the fact that nobody has an edge here in terms of what the economy and what the virus is ultimately going to look like. And therefore, it's really hard to make a market call.
Right, Sarah. I mean, essentially what the market normally does is looking at this huge set of leading indicators, how economies normally react. Right now, we have this interplay of an epidemic and policy that's extremely hard to handicap, which I guess is why, one reason anyway, why the market has seized on these, tentative, uncertain, contingent signs that maybe we've seen some flattening out of those infection curves. It makes sense sense, at least when the market is so oversold, to react to the upside in this way. But it's probably fair to assume we're going to get overshoots and undershoots on a day-to-day basis in both directions.
All right, Mike, thanks. Some glimmers of hope emerging in the battle against the coronavirus as hard-hit countries like Italy and Spain have reported a slowing in death and infection rates, and progress is being made on treatments as well. Meg Terrell with more on the response from the pharmaceutical industry. Meg, after another busy weekend of reading for all of us.
It was, Sarah. And one of the nearest term drugs that people are really watching for is Gilead's remdesivir. We got an open letter from Gilead CEO Dan O'Day posted on Saturday night about the supply of that medicine. Now, this is a complex drug to manufacture. They've been able to ramp up supply to now what they say is enough for about 140,000 treatment courses available by the end of May. And they're making that available at cost as it goes through the clinical trial process. They hope to get up to 500,000 treatment courses by October and more than 1 million by the end of the year, potentially several million next year if required. Now, Dan O'Day, the CEO, is saying, quote, "These are intense, ongoing efforts, and while they continue, we must await the data from the clinical trials before we know whether remdesivir is a safe and effective treatment." We're hoping for that data, the first of which in the next few weeks. Meanwhile, we also want to tell you about some news this morning from a small biotech company called Vir Biotech, partnering with GlaxoSmithKline on an antibody approach. Now, they say they're going to take 2 antibody candidates into human trials within 3 to 5 months. As part of this, GSK also making a $250 million investment in Vir, sending that stock up quite a bit today. And Sarah and Mike, these are the kinds of drugs coming in succession, different technologies that we've heard Scott Gottlieb talking about so much. We need different approaches to potentially start to tackle this thing. And we are hoping to see these data from Gilead by the end of April. They will come from China trials first and might be a little bit confusing to decipher. It might not be super clear immediately, but we'll see Gilead's trials after that, guys. And everybody will be very closely watching them, of course. Back over to you.
I guess taking it as a good sign that they're ramping production even before they're talking about the efficacy. Meg, what about hydroxychloroquine, which, you know, unfortunately has sort of become politically charged because the president talks about it. But is there any more data coming out on that and how widespread it's being used in hot zones like New York?
Well, by all accounts, it's being used very widely. We don't yet have good clinical trial data to tell us how well it's working. And so that's what we're waiting for. We know that the New York state trial of that started in March, hoping to see that data. I think Governor Cuomo was talking about it today, over the next few weeks, potentially, or months. The current data that exist are flawed, and they're what Dr. Anthony Fauci calls anecdotes, not data. So we really need those controlled clinical trial results, experts say, to know if the drug really does work.
Meg, thank you very much. Talk to you again soon. I'm sure oil falling today, despite earlier comments from the CEO of Russian Sovereign Wealth Fund, RDIF, hinting that an oil deal between Saudi Arabia and Russia is close. This comes on the heels of oil posting its best week on record and ahead of a potential meeting between OPEC and its allies on Thursday. Well, let's bring in Peter Cecchini. He is global market strategist and head of cross-asset strategy at Cantor Fitzgerald. Pete, it's good to see you. Thanks for being here. Now, obviously, huge rally in oil, as we mentioned, has not really given back very much of it. I mean, it rallied up to 29, giving back a couple dollars here. What's your view on whether anything is really going to change on the supply front, what it means for the crude price?
Well, I've taken a bit more of a cynical, nuanced view of the dynamic in the oil market right now. And I'm really, frankly, not all that convinced that this is an all-out fistfight between Saudi Arabia and Russia. I think it might be a little bit more of a veiled attempt, frankly, by both of them to take a swipe at U.S. E&P while U.S. E&P has been shut out of the capital markets. And the dance that they're doing right now around this upcoming Thursday meeting, I think is just that. I think it's a dance, and I think it creates the narrative that they want most people to believe, but I'm not sure that it's quite true.
So that implies not much upside from crude from here, if any. I mean, obviously demand is down tremendously and looks like it'll stay that way for a little while. So where does that bring you in terms of a broader kind of investment strategy for the energy sector and other parts of the market?
I think, look, I do, by the way, think on Thursday we get some sort of a some sort of a deal that just makes it look as if there's cooperation afoot. But let's face it, at oil prices this low for U.S. E&P, it doesn't really matter very much because even the Permian producers have break-evens in the low 40s. And so I think, unfortunately, the next bit of pain now will come from the defaults that are likely to arise, especially because now capital markets are closed. And for that reason, even though obviously valuations in the sector are depressed, I think it's actually time to sort of wait and see relative to who the survivors are in the space, and then wait to fix spots after the damage has been done in full.
Are you not convinced, Peter, that President Trump can intervene in a bigger way? I mean, he's already said he's spoken to both of them, that they will make a deal. He's met with the energy executives. He's clearly focused on this issue.
Hi, Sarah. Nice to see you. Yeah, look, I don't really think that he has perhaps as much influence as one might think in this situation. If we remember at a G20 meeting not all that long ago, there's quite a bit of camaraderie between the Saudis and the Russians. The Russians are well positioned to withstand this. Yes, it does hurt them in the short term. Yes, it does hurt the Saudis in the short term. But I think this is a bit of a longer game for them than it is for us. And I think their interests, in fact, are quite aligned relative to what it's going to do to U.S. E&P companies, unfortunately.
Peter Cicchini, nice to have you. Thank you.
Thank you.
After the break, Jamie Dimon out with his annual shareholder letter with a fresh warning about the impact of the pandemic. We'll bring you those highlights next. And later, Blackstone CEO Steve Schwartzman joins us for a First on CNBC interview, his take on the market volatility, plus Blackstone's big philanthropic move announced today in New York. That's coming up.
CNBC Sector Sword is sponsored by Sector Spider ETFs. Sector Spider ETFs. Visit us on the web at sectorspiders.com.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
It's TuneIn Sports on this day. April 6, 1992, Duke's men's basketball beats Michigan 71-51, winning back-to-back titles for the Blue Devils.
Fired, and here comes Duke on the break. Behind the back, Hurley, the hill, why not? That's the play that was available. Nobody back for Michigan because they're sending 5 to the board.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
Hey everyone, it's Tremaine Lee, MSNBC correspondent and host of the new podcast, Into America. In our latest episode, Republican giant and longtime Senator Lindsey Graham is for the first time ever facing a real challenge to his Senate seat. Can a relative newcomer to the scene, a black Democrat in a red state, win this fight? I head to South Carolina to find out. Search for Into America wherever you're listening right now and subscribe.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raised Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on .com/ED.
There are about 46 minutes left to go in this session. Here's a check on the markets. All the indexes trading pretty close to their highs for the day. You see a 6% rally for the Dow, just under that for the S&P and the NASDAQ. Let's take a look at some individual market movers. Spotify getting hit with a downgrade from Raymond James on quarantine concerns. Firm says concert delays and extended time indoors could be a risk to Spotify, adding that this could mean a user shift to Amazon Music, given increased smart speaker listening instead of smartphone, presumably. And Wayfair says its business is booming as people redecorate while staying indoors amid the coronavirus outbreak. The online furniture store announcing that when it entered March, gross revenue growth was just under 20%, which was similar to trends during January and February. But by the end of the month, growth had more than doubled.
We're getting some breaking news here, Mike, out of the UK. Sue Herrera with the news for us. Sue.
Thank you very much, Sarah. Here's what's happening, everyone. We now know that the Prime Minister, Boris Johnson, who came down with coronavirus last week, his condition has worsened. He has been taken into intensive care at this point. This is from 10 Downing Street. Over the course of this afternoon, the condition of the Prime Minister worsened. On the advice of his medical team, he has been moved to the intensive care unit. The Prime Minister has asked Foreign Secretary Dominic Raab, who is the first Secretary of State, to deputize him where necessary. They say that basically Mr. Raab will be taking charge of the government at this point. Interesting enough, this morning, Mr. Raab was asked that very question, whether or not he was ready to take over the government. He said the Prime Minister is fine and is fully in charge. Obviously, that has changed over just the past couple of hours with the Prime Minister's condition worsening. He's in intensive care. And for all extents and purposes, Dominic Raab, the first Foreign Secretary of State, is now in charge in the UK. If we get any further updates, Sarah, we will give them to you. But right now, Dominic Raab is in charge in the UK. Back to you.
Sue Herrera, of course. We pray for the people of the UK and for the Prime Minister on that sad development. I just want to also draw your attention to the British pound, which got hit pretty hard on this news. Obviously a shocking headline, which raises the uncertainty factor for the UK. The pound versus the dollar, you could see the intraday drop as Sue was coming out there reporting that news. That Prime Minister Boris Johnson will be admitted to intensive care, and the Foreign Secretary will be leading in the interim. Meantime, JP Morgan CEO Jamie Dimon publishing his annual letter this morning, which almost exclusively addressed the coronavirus impact on that bank. Dimon predicting a bad recession and elements of financial strain like he saw in the 2008 financial crisis. In his letter, Dimon also applauded the Fed's overwhelming actions, which, quote, dramatically reduced financial stress. Dimon was confident that the bank remained strong. It would not need federal relief, he said, and would continue to lend to customers. Interestingly, he did spell out a severely adverse scenario, GDP growth of negative 35%, unemployment of 14% still in the fourth quarter, under which the bank's board, he said, would likely consider suspending its dividend. And actually, that dividend of banks was a topic I brought up earlier with the former Federal Reserve Chair, Janet Yellen, in an exclusive interview this morning. Here's what she said about that topic.
I would be in favor of asking the banks to suspend dividends and stock buybacks. They worry that it will make them look as though they're vulnerable and that there's a reason that they have stopped dividends, that they see that they have difficulties. But if the regulators ask them to do that on the grounds that we need a banking system that's able to meet the credit needs of the economy, and we don't know how severe or long-lasting this pandemic will be, I think that's a different situation.
So, Mike, clearly Yellen's in favor of the Fed telling the banks to suspend their dividends. It's obviously a sensitive topic because we had Morgan Stanley CEO on this program last week. Goldman Sachs CEO was on Squawk on the Street, and a number of others, Citi, Mike Corbat, all saying, they're not going to suspend their dividends. It's obviously a
difficult topic for them.
Sure.
And what would happen to these bank stocks if they did have to do something like that?
Well, it's interesting. I mean, it's not surprising that JP Morgan, according to Jamie Dimon's letter, would have self-administered a tougher stress test than, in fact, the regulators do. And under that scenario, maybe if things stay worse than expected, then obviously it has to be on the table, really, to preserve capital. I also wonder if banks would look for a collective way to do it if it came down to that, as they did with the buyback, so that it wouldn't seem as if one institution was worse off than others in having to do that. But I do think the dividend question is probably still a little ways off before we really know the depth and duration of what we're dealing with.
Too bad Wilfred's not here. He would have loved to weigh in on this topic. He'll be back tomorrow, and I'm sure we'll still be talking about bank dividends. We've got about 40 minutes left of trade, and take a look at stocks. Still flying higher here. The Dow's up 1,226 points, a gain of almost 6%, almost 5.5% for the S&P. Every sector now in the green, and banks are among the best performers. Utilities and materials also at the top of the list. Retail's doing well today as well. After the break, the lockdown has hit brick and mortar retailers hard. We're going to discuss the fallout for commercial real estate with one billionaire real estate mogul who owns some of the most well-known properties in California. That's next.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Hey everyone, it's Tremaine Lee, MSNBC correspondent and host of the new podcast, Into America. In our latest episode, Republican giant and longtime Senator Lindsey Graham is for the first time ever facing a real challenge to his Senate seat. Can a relative newcomer to the scene, a black Democrat in a red state, win this fight? I head to South Carolina to find out. Search for Into America wherever you're listening right now and subscribe.
This is Dr. Sanjay Gupta. Join me for CNN's new podcast, Coronavirus, Fact versus Fiction. We know you have questions, and we want to help you find answers. And send me your questions on social media at Dr. Sanjay Gupta.
Make sure to...
Welcome back. E-commerce warehouse companies seeing a boost today on the back of a surge in demand. Frank Holland has that story about this delivery-centric economy, Frank.
Hey there, Mike. Shares of Prologis up more than 6.5%. During a business update today, the global leader in e-commerce warehousing saying lease signings, those are up 16% year over year in March. That rise largely sparked by online buying during the pandemic. Also, short-term leasing is up 44%, and the CEO said the short-term surge in demand is real for e-commerce warehousing. Blackstone, with a large e-commerce warehouse investment trading higher along with Duke Realty and Torrento, Prologis added it expects inventory levels to rise at U.S. stores as much as 10% this year, also increasing demand. Back over to you.
Maybe we can ask Steve Schwartzman about it next hour. Frank, thank you.
Thank you.
Frank Holland. Well, while some online sales are certainly seeing a bump, more retailers are announcing furloughs today, including home furnishing business RH and Michael Kors' parent company, Capri Holdings. Workers from these two companies join the hundreds of thousands of other retail employees that have been furloughed from companies like Macy's and Ross Stores over just the past week as these retailers grapple with the effects of the coronavirus pandemic. Joining us now for his outlook is Rick Caruso, CEO and founder of Caruso. Caruso is a California-based real estate company that owns and manages a number of shopping center retail properties like the Grove in Los Angeles. Rick, it's good to see you. Thank you for joining us.
Thank you, Sarah.
You know, we announce these furloughs every day. It's a devastating number. How do you think about these jobs? Are they lost or will they come back?
Well, I hope they come back. I think some are going to be lost. Listen, the retail environment is tough out there right now. I think the important thing to think about is that the biggest threat to brick and mortar retail is really the current version of themselves. Many of them have to evolve. Many of them have to change because the consumer is going to change. This crisis, I believe, is going to change consumer culture, their expectations, what they want from retailers in a really significant way. And so there's going to be winners and there's going to be losers. I think the winners are going to be very connected. They're going to be curated. They're going to feel more local. They're going to feel more personalized. And they're going to have a better value proposition. And there's many out there that were doing that before this crisis began, and they'll continue to do it. And I think be rewarded with great success. And hopefully they will drive a lot of hiring. And there will be more retail jobs coming back into the current economy.
Rick, this change perhaps in consumer culture, will it not include maybe a less willingness just to go out into stores, into malls altogether? I mean, it's hard to project exactly how the aftermath is going to shape up here from all this, but are you worried about that possibility?
You know, I'm not personally worried about it for my portfolio because my portfolio is all outdoor. And I think people after isolation have a great appreciation for outdoors and fresh air and seeing trees and a blue sky. So I think we're in a very good position. I do think that people are going to want to have more physical space. I think they're going to operate differently. Listen, 9/11 fundamentally changed our habits as human beings. But the one thing that is always crystal clear is we're human souls that want to have a sense of connection and community, and our properties provide that. The challenge for retailers inside their four walls is going to be to meet the customer where the customer wants them to be. And so the very innovative, very smart retailers, I think, are going to do very well. Now, when you get to crowded restaurants and things like that, I think they're going to have to change how they operate. Movie theaters may have to change how they operate for a while. There's certainly going to be a shift. But what we have seen is that isolation gets very tiring very quickly. So I think people are going to want to come out and they're going to want to celebrate life and they want to connect with their community.
Rick, are your retail and restaurant tenants paying rent right now?
You know, some are and some aren't. And the ones that I worry about the most and I care about a lot are the smaller ones, the entrepreneurs, the people that have started a small business, a small restaurant. And we're leaning in with all of those to support them. I'm a big believer that the economy is built off the back of the individual entrepreneur, and we're going to support them to get them reopened so they can rehire and move forward. The tenants that are more creditworthy and credit tenants, which is a big chunk of our portfolio, they have been paying. My expectation is that I think they should, given these times, so that we can put more resources, obviously, into the smaller businesses, which clearly will need our help.
Yeah.
What does that mean? Are you forgiving them are you giving them actual concessions and not making them pay rent right now?
We're meeting with each of them individually. It depends on certain circumstances, but we're going to give them concessions on rent. We certainly may give them concessions and investment in terms of TIs and maybe upgrading their stores, whatever they need to do. But, you know, our properties are very popular for a number of reasons, but one of them is the small retailers, the entrepreneurs, the restaurateurs, they're the soul of the properties and they're the fabric of the properties. And we need those to survive. And so what we don't want to do is have successful properties that are just full of national retailers. National retailers could be great, but they don't have the same connection to the community and the same soul that a local entrepreneur has. And those are the ones we're very focused on supporting and working with.
All right. So hope that does work out, Rick. Thank you very much.
Thank you.
Caruso. Still ahead, the virus hunter is back. The Columbia doctor who contracted the coronavirus himself will join us with the latest in the battle to slow the spread and the lessons to prevent the next pandemic. And as we head to break, here's a check on the bond market. Yields moving higher to start the week, pretty much across the board. The benchmark 10-year currently yielding about 0.2%. Our special coverage is back right after this break.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raise Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
Hey everyone, it's Tremaine Lee, MSNBC correspondent and host of the new podcast, Into America. In our latest episode, Republican giant and longtime Senator Lindsey Graham is for the first time ever facing a real challenge to his Senate seat. Can a relative newcomer to the scene, a black Democrat in a red state, win this fight? I head to South Carolina to find out. Search for Into America wherever you're listening right now and subscribe. Longtime Senator Lindsey Graham is for the first time
on this day. April 6, 1992, Duke's men's basketball beats Michigan 71-51.
What you could save.
29 minutes left to the close. Broad market up about 6%. Here are the three things driving the action. New data from the state of New York and around the world show the spread of the virus may be leveling off, indicating extreme measures perhaps begun to have an impact. Encouraging signs of progress on both a vaccine and treatment options over the weekend. But China has reported an increase of cases, and U.S. officials warn this week will be the toughest yet as hospitals struggle to maintain and expand capacity.
Time now to get a coronavirus update with Sue Herrera. Hi again, Sue.
Hello again, Sarah. Hello, everyone. Here's what we know at this hour. New Jersey reporting total deaths have now surpassed 1,000. Total cases are now above 41,000. Governor Phil Murphy says the curve of new cases is, quote, beginning to flatten, but this is no time to remove restrictions.
If we relax our social distancing and we put ourselves on the higher curve, we will overwhelm the system to the point that all of our contingency plans and then some will need to go into effect. That is a nightmare scenario on a good day. But in a sustained pandemic such as this, it would be literally disastrous.
In Texas, officials are screening people arriving from hard-hit Louisiana. Checkpoints are set up along the border to let travelers know they should self-quarantine for 14 days. Ireland's Prime Minister Leo Varadkar has re-registered as a medical practitioner to help out during the pandemic. He was a doctor for 7 years before becoming a politician, and he is giving 1 week every month to the cause. As always, you can get more on the coronavirus coverage by heading to CNBC.com. Sarah, back to you.
All right, Sue, thank you. We're getting some breaking news on NBC Universal, our parent company. Julia Borston with the story. Julia.
Sarah, NBC Universal is issuing a report on video consumption in the wake of the coronavirus crisis, saying that overall TV usage has increased by 25% for 18 to 49-year-olds, with the vast majority of that usage on digital. NBCU says it is leading all media companies in total linear consumption, with its streaming up 29% versus a 7% increase on average for the industry. The most significant increases in viewing are coming from streaming bundles, saying that viewership is on Netflix is up nearly 30%, Amazon up over 20%, and Hulu up about 16%. I'm sorry, and so that the increase for NBCU outpacing is up 27% versus 7% for an industry average. Just want to clarify that, up 27%. NBCU also saying that they're seeing video game and social media platforms see a seismic increase in usage. Comcast share is now up over 6%. Back over to you.
Julia, thank you. We've got just about 26 or so minutes left before the closing bell. Here's where we stand, higher sharply across the board. The Nasdaq's now up 6.25%, so we've been gaining some momentum here into the close. The S&P is up 6.1%. Every sector is higher. Coming up, Blackstone Chairman and CEO Steve Schwarzman joins us for a first on CNBC interview. We'll get his take on this volatile market and Blackstone's big new pledge to healthcare workers in New York. That's straight up.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox.
Don't get mad. Get E-Trade, dog.
You enter the market, only to find unpredictability around every corner. That's why the wise investor turns to one of the most secure investments on Wall Street, Ready Street. Assured Guaranty, the proven leader in municipal bond insurance.
AT&T has connected us every day for over 100 years. And we're here for you, especially now, doing everything possible to keep you connected. Through the resilience of our network and people, we can keep learning, keep sharing, keep watching, and most of all, keep together. It's the job we've always done. It is the job we will always do.
Let's do this. I want to be a rock star so bad.
Shark Tank We Heart Music Marathon, tonight 8 Eastern, CNBC. Get yours and catch Trolls World Tour in theaters and at home on demand April 10th.
Let's take a look at the markets. All the indexes pretty much at their highs for the day. The Dow rallying over 1,300 points. All the major indexes up more than 6% on the session. Sarah.
Yeah, down almost 22% now from the high, which is a lot better than where we were a week or so ago. This is the last commercial we are going to take before we take you into the close. Up next, uninterrupted coverage of the final minutes of trade when we go inside the market zone. And as a reminder, you can always watch or listen to us live on the go on the CNBC app. We'll be right back.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
It's TuneIn Sports on this day. April 6, 1992, Duke's men's basketball beats Michigan 71-51, winning back-to-back titles for the Blue Devils.
And here comes Duke on the break. Behind the back, Hurley, the hill. Why not? That's the play that was available. Nobody back for Michigan because they're sending 5 to the board.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
You love listening to ESPN Radio live on TuneIn, but did you know you can also listen to favorite ESPN shows on demand? Get the latest takes from Stephen A. Smith,
To Steve Austin's No
Dan
Holds Barred.
Lebazard, and Golic and Wingo when it fits.
Our retirement plan with Voya gives us confidence.
Yeah, they help us with achievable steps along the way, so we can spend a bit now, knowing we're prepared for the future. Oh,
Surprise!
We renovated the guest room, so you can live with us.
Oh, well, I'm good at my condo.
Oh, I love her condo.
Nana throws the best parties. Well planned, well invested, well protected.
Voya, be confident to and through retirement.
You should be mad at leaf blowers. You should be mad your neighbor always wants to hang out. And you should be mad your smart fridge is unnecessarily complicated. Making ice. But you're not mad because you have E-Trade, which isn't complicated. Their tools make trading quicker and simpler so you can take on the markets with confidence. Don't get mad. Get E-Trade and start trading commission-free today.
The Market Zone is sponsored by E-Trade. Get $100 on us when you deposit $5,000.
Quick look at where we stand right now. Pretty much at the highs of the day. All the major averages up more than 6% on the session. Investors seeing hopeful signs, a slowdown of death rates in Europe and a possible flattening of the viral curve here in New York. Joining us now is J.J. Kinahan, Managing Director and Chief Market Strategist at TD Ameritrade. J.J., good to have you. Tremendous two-way volatility we've had in the last few weeks here, as you know. So a lot of opportunities to get it right or wrong. What themes are you seeing in your client base right here in terms of risk appetites, how they're playing things?
Sure, Mike. So we released our IMX, which is we call our Investors Movement Index, which actually measures our clients' actual activity for the month. And, takes everything, puts in a volatility factor. And it was actually our clients' exposure to the market was lower. But the reason is they were actually net buyers of equities, net buyers of fixed income. The reason their exposure was lower, they went away from sort of the high beta stocks into the lower S&P 500 type stocks that have the lower beta that would perform with the market overall, that most importantly probably are well capitalized. I know you've talked a lot the last couple of weeks about how investors have been very attracted to companies that have been through the storm before, that have strong balance sheets. And we saw that last month. Stocks like ExxonMobil, Disney, two of the biggest ones that we saw in there. Ford, which, it's an inexpensive stock in terms of pure dollars, so that one also comes up. And then you have Boeing. Now, Boeing being one of the most interesting. And the really interesting pattern, Mike, the first 2 weeks of the month they were selling things, but it was like some sort of shotgun went off or something halfway through that said now's the time to buy, because the last 2 weeks of the month, the buying was so strong.
And what about on the hedging side of things? JJ, we take a look at the fact that the volatility index had this huge high above 80. It has backed off a lot. Are traders basically just now protected on the downside?
Well, I think what it is a lot of people, to your point, did their hedging. We just had an expiration last Friday where I think some of that came off. People didn't necessarily re-up quite yet to maybe see where things go. And let's face it, the cost of hedging right now, as it usually is, as you know, as things go down, the cost of hedging gets more expensive. So I think we're in a little bit of this mid area right now, not quite under 40 on the VIX. So people are waiting to see, do we have a little bit more of a breakout as we go higher before they need to hedge again. What I would think is if we have any kind of break, especially today with this amazing rally or early tomorrow, I think people will come in immediately to hedge. And yes, a lot of our clients do trade derivatives, so they have been hedging themselves along the way as things got worse.
JJ, one of the questions we usually ask you, and something you track, is retail by age group. You have a good millennial indicator, for instance. Are you seeing different sort of behavioral patterns, buyers versus sellers, depending on the age group?
Yeah, absolutely, Sarah. And, our millennial clients were attracted to the cruise lines, Royal Caribbean, and as well as Carnival, and then Uber. So at first you may be like, oh my God, that seems like a terrible idea. But again, if you're a millennial client, you may look at that and say, oh, okay, you know what? Longer term, these make sense to me. Many of them, you and I have talked in the past before, Sarah. Uber has been a stock that our millennial clients have been attracted to anyways. But for the cruise lines, just anecdotally, talking to some of our clients, what I see is this. They think long-term it's going to be good. And to be honest, they may be some of the first customers who are willing to jump back in to do cruises because when you're young, you're like, what do I have to lose? And it becomes very affordable. So they may actually be the target market there. The most interesting thing about our millennial clients, though, Sarah, was that this is the first time we've seen a lower reading from our millennial clients than our more traditional client base. And the reason I think you're seeing that is as adults, this is the first true financial crisis many of them have lived through. So I believe they scaled back a little bit last month due to that.
Yeah, it's always good to remind folks, I think, that millennials are now between the ages of like 23 and 39. So they actually have maybe have a little more to lose in that respect.
Absolutely, but I like the fact that some of the things they do, Michael, also are more longer-term investments, because sometimes when people see these numbers like, oh, why are they doing that? Well, again, these are products they're going to use for a long period of time. I don't think Uber's going away even after this crisis, and it's something that many, not only millennials, but everybody, but I would say millennials probably more so, use every single day, or use certainly more frequently than their older counterparts.
Yes. My channel checks indicate that is true about millennials. JJ, thank you very much. Appreciate it.
15 minutes left in the trading day. We are looking at session highs, and we are going straight into the closing bell market zone. Commercial-free coverage of all the action going into the close. Today, we've got Allied Chief Investment Strategist Lindsay Bell back as well. On a day where markets are rallying, as I mentioned, the Nasdaq's up 6.44%. All the major averages up more than 6%. Former Federal Reserve Chair Janet Yellen joined us earlier on CNBC today with a somewhat optimistic take on the economic recovery. Here's what she said.
A V, which is what we're all hoping for, is really a best case scenario. And if activity could begin to resume, as many assume, in June, and maybe be back to something more normal by the summer, I think a V is possible, but I am worried that the outcome will be worse. And it really depends, to my mind, on just how much damage is done during the time that the economy is shut down in the way it is now.
She talked about shocking jobs numbers, depression-like jobs numbers, and also talked about GDP falling, it's much citing forecasts around 30% or even more annualized in the second quarter, Mike. So it was sort of a realistic almost take, though she was careful to draw big distinctions between now and the Great Depression in terms of how long it could last. Obviously hoping for a V, but
yeah,
considering it may take a few months longer than that and even years to get the economy back into shape.
Sure, no, Sarah. I mean, talking about how much damage is done, if you just think about her tenure as Fed chair, it was, stubbornly low growth. Are people actually going to come back into the labor force? So it seems like a lot of that progress, maybe on paper anyway, gets wiped away for a few months. And the question is it longer than a few months? But also, we have never front-loaded, a recession with this much support and potential stimulus. So it's got to be tough to actually handicap exactly what the shape of this rebound might be.
No, and that's a big theme for investors, Lindsay, right? I mean, how much can the Fed do here to stem the pain, both in financial markets and in the real economy? What do you think?
Yeah, I mean, the Fed's doing everything they can, really, to make sure that the financial markets are functioning properly, and they've done a good job. We did see a little bit of a freeze in the credit markets when we hit close to the bottom in the equity markets, too, and so that helped kind of get things moving again. Investment grade yield spreads, as well as high yield spreads to the Treasury, they have come in significantly since the market bottom, so they're doing their part. And obviously, like Mike said, that government stimulus package of $2 trillion on top of what many are expecting to be another stimulus package coming down the road really also is fueling some of the optimism I think we're seeing today, in addition to obviously the coronavirus case numbers and death toll numbers that we're seeing in Europe and here. But I'm with Janet Yellen. I'm hopeful for a V-shaped recovery, but I'm going to be a little more cautious here because we don't know what the damage from the virus is going to be on the economic environment just yet. And we don't know what the recovery is going to be like, and we don't know what it's going to take, how we're going to restart the economy here. We need a solid plan to make that happen smoothly.
For sure, yeah. Behavioral changes, always tough to predict, of course. And meanwhile, airline stocks higher as carriers continue to slash their routes. Phil LeBeau has those details. Phil?
And, Mike, the airlines are waiting for the Treasury Department to tell them how much money they're going to get from that $25 billion in immediate cash grants. And at the same time, the DOT is expected perhaps later today to finalize the rules for reduced schedules. We've seen a mixed day so far for the airlines as they're awaiting not only the news from the DOT, but also from Treasury. But they're not even waiting to cut their schedules. Look at what they're doing into the New York airports. And we're talking about JFK, LaGuardia, Newark, the production cuts that are going into effect and are going to be there at least through April, likely into May and June, 90 or 95% production cuts. One other piece of news today, guys, Airbus halting production at its plant down in Mobile, Alabama, where they build the A220 and A320. Yet another sign that manufacturers are going to have to amend their schedules because of what's happening with coronavirus. Guys, back to you.
Hey, Phil, for the airlines, when they're cutting back their schedules so dramatically, when before, ridership was so low, even on the flights they were carrying out, I mean, is it even a financial hit if they're saying we're not just going to fly empty planes?
It'll make a difference in the bottom line. Look, I mean, you're going from approximately 271 daily flights for American all the way down to 13. So that's how much of a cut they're going to be making there. And remember, this is in place because the DOT said last week, these are the new rules in terms of when you're serving certain metropolitan areas, we're going to allow you to bring those schedules down. Those are the rules, by the way, that are expected to be finalized either later today or tonight.
Phil, thank you. Lindsay, what do you do with the airlines? Would you be a buyer on all this weakness?
I mean, the airlines, it is difficult. They are interesting at this level for sure because, air travel has become so popular in years past. I do think that we'll get back to that trend where most Americans want to travel for vacation and they want to fly places. But I think it's going to take some time. Once again, like I said, once the economy comes back online, I think airlines is going to be one area. It's going to be a little more difficult for people to just immediately want to jump on an airplane and travel, whether it be for work or for vacation or pleasure. So, I think I would want to give it a little bit of time, but I do think you will see these come back to life over time.
Dow charging even higher here, up 7.4%, as you can see, 1,562 points higher right now, and Boeing is in the lead. Speaking of consumer behavior changes, shares of Carnival Cruise Lines getting a big boost today. Seema Modi is here with the story. Seema.
Sarah, that's right. Saudi Arabia's sovereign wealth fund has built an 8.2% stake in Carnival, making it the third largest shareholder in the struggling cruise operator that has seen its stock plummet this year amid suspended sailings, high-profile quarantines of multiple cruise ships. That has certainly attracted a lot of negative attention. U.S. cruises have also suspended sailings due to the ongoing virus till mid-May or further out. Now, the Saudi investment comes after Carnival raised over $6 billion in debt and equity last week. Shares on pace for its biggest one-day gain on record. Sarah?
Seema, thank you very much. Mike, how did you read this sort of surprise announcement that the Saudis are big owners here?
I mean, obviously, it's a distressed asset, and, it's if you make a big enough investment, it's self-fulfilling in the short term. In other words, you've backstopped it from a worst-case scenario, and they already did raise a certain amount of capital. But it is a very interesting bet on, on the persistence of this industry, which I think a lot of people, including even right now, have not really sure exactly what the future looks like there. So I don't think it's necessarily one of these things where you always follow a sovereign wealth fund like this into an investment, but for a while it can act as a backstop.
Lindsay, so you don't want to touch the airlines right now. What about the cruise ship operators?
The airlines look more attractive to me than the cruise lines right now. I'll say that. I think it's going to be difficult for these guys. And with Mike, I don't know that I would just jump in following a sovereign debt fund into Carnival at this point. It's a $10 stock. It's still down 80%. And I just don't know when. I know JJ was on talking about the millennials buying into this stock, and we've seen that on our Ally Invest platform as well, too. And they may very well be the first to get back on the boat. But the older generation is a key generation and client base for the cruise lines. And I don't think they're going to be going back anytime soon.
They also, Mike, they were excluded from the $2 trillion stimulus relief package from Congress, even though they're among the hardest hit.
Yeah, exactly. It's not one of those bailout bets that you're seeing in other industries at this point. Meantime, mobile payment volumes have been spiking as the coronavirus spreads. Kate Rooney has those details. Hey, Kate.
Hey, Mike, contactless payments are getting a boost as we become more aware of what we're touching during this virus outbreak. Some new data from credit card issuer Marqeta shows a 75% jump in mobile payments from the end of February to the end of March as the outbreak worsened. The company works with DoorDash and Instacart, among others, and in its food delivery segment, Marqeta saw a 10x increase in tap-to-pay options. Despite some reports that cash can be a virus spreader, the World Health Organization says there's no evidence of that happening. But analysts say people's perception of cash or even credit cards is risky, could add momentum for Apple Pay, Google Pay, Square, and PayPal. Guys, back to you.
Kate, thank you. Lindsay, I wonder about the investment implications here on some level. One, is it just kind of, move to the benefit of Apple? And also the payment networks are already the ones who kind of handle the back end of it. So arguably, you've been given a chance to get in at lower prices in those stocks.
Yeah, no, I think you've definitely had an opportunity to enter some of these stocks at a lower price. Actually, a colleague of mine and I were looking at PayPal this morning. It's only down 15% on a year-to-date basis, which is in line with the technology sector, but much better than the overall index. And it's trading at about almost a 20% discount to its historical multiple, or at least its 5-year average multiple. It's still at 30 times, so it's a hefty multiple. But you get that at a discount versus the MasterCard or a Visa, which really haven't done too much and still have held their valuations pretty steady over this period. But definitely better entry points for
Lindsay,
all of them.
We've sort of been wavering between the short-term implications for consumers and behavior of switching to mobile payments or away from cruise lines and airlines, and then the longer-term sort of structural changes that are going to happen as a result of this pandemic. So all the research notes on consumer staples that I've been reading show that grocery online delivery is going to become bigger for Americans because they're getting more comfortable doing that. And that's going to be one of those permanent changes, at least according to the analysts. How do you think about mobile payments in that context?
Yeah, no, I think online shopping in general, not just for groceries, which is obviously a huge opportunity when you think about what percentage of sales at Walmart and Target grocery are. It's more than 50% at Walmart. This is a huge opportunity for the payment space because if you're not online and helping these retailers out, you're definitely missing out. There's obviously a big shift. The payment space has been disrupted over the last couple of years, and I think that this is just bringing an acceleration forward of that disruption to online and a cashless system. So I think that this is a very interesting place to be now. I just think consumers in general and older consumers also have gotten used to shopping online in this quarantine period.
By the way, stocks have really taken off here. The Dow's now up 1,700 points, and we're looking at more than 7% gains across the major averages, 8% for the Dow. There you see it. The S&P 500 up 7.36%. The NASDAQ up 7.5%. We're seeing a highs of a day and a real sort of tick higher as we go into the close. 3 minutes left of trade. Goldman Sachs expecting S&P 500 buybacks to fall significantly this year. The firm estimating a 50% drop in repurchases to $371 billion. While major airlines and banks have already suspended their buyback programs, Goldman also expects declines from semiconductors and pharmaceutical companies. Mike, is this already reflected in the share prices?
I think to a large degree you would have to think. I mean, when the S&P 500 itself is down over 20% from its high, fell 30%. Obviously, this is a cyclical thing, and one of the big drivers of the bull market, or a few of the big drivers, right? Generous credit markets, very consistent buyback activity have been running in reverse. And I do think you wouldn't confuse it, though, with whether the markets can, in fact, bottom and recover without buybacks, because if you look back to 2009 buyback totals were a fraction of what they were in 2007, and they didn't really come back even that much the next year, but the market did start to recover very strongly in early 2009. So once you've been kind of beaten up this much, it seems like the drying up of selling is the thing that really gets the market to bottom.
Does it ever come back, Lindsay? Are buybacks kind of out for good, or when do they come back?
Well, investors certainly have been spoiled over the last couple years with the amount of capital appreciation that they've received in the form of share repurchases and dividends from companies. So investors, I'm sure, are a little bit sad to see that go, but it's important right now. I think shareholders are happy to see companies really take their capital and think through what they're doing with it and preserve that capital to utilize it to either, shore up their balance sheet first and foremost, help their employees or their customers in any way they see possible over the next 3, 6, 9 months as we make our way through this crisis. But one buyer that you're not thinking about that is stepping into the market at this point in time when companies are pulling back on their corporate buybacks are insiders. You've seen insiders jump back in at these lower levels with force to a level that we've seen we saw back in 08 and 09. So that's one encouraging sign.
All right. And as we head into the close, take a quick look at some of the internals. The New York Stock Exchange up versus down volume, almost 90% to the upside. That's pretty much almost a shutout. That's usually what technicians like to see. And also, it's been a beta chase. High beta stocks outperforming after underperforming quite a bit. As we head into the close, just about at the highs, though a little bit of a back off at the bottom, up almost 7% for the S&P 500. The Dow just under about 1,600 points as a gain. Sarah, over to you.
Thanks, Mike. Welcome, everyone. If you're just joining us, I am Sarah Eisen, along with Mike Santoli in for Wilfred Frost today. Big surge on Wall Street. Take a look at how we finished up the day. The Dow closing up by about 1,600 points, 7.5%, just off session highs, but you really saw a tick higher into the close there, the final half hour. A lot of buying. The S&P 500 closing out the day up just under 7%. Every sector in the S&P was higher, with technology in the lead, up 8.7% for information technology. Utilities right behind, up about 8%. 7% gains for materials and consumer discretionary and real estate as well. Also financials having a good day. Worst performing sector was consumer staples, and they closed up almost 4%. Check out the NASDAQ with that tech buying today as a major theme. The NASDAQ up 7.33%, and the hard-hit Russell 2000 index of small caps closing up 8.15%. It was an outperformer, even though it's been an underperformer. So if you're just keeping score, we are now 21.5% off the highs for the S&P 500, but we are also 21% off the lows as well. Coming up, we're going to speak in a First on CNBC interview this hour with Blackstone Chairman and CEO Steve Schwartzman about all this market volatility and Blackstone's big push to help healthcare workers in New York. Joining us to talk about the market today is Allied Chief Investment Strategist Lindsay Bell and RBC Capital Head of U.S. Equity Strategy Lori Calvasina to join the conversation by phone. But first, Mike, I'll put it to you on this big buying and the surge that we saw into the close off what appeared to be better numbers, better data that the virus spread is slowing in key hot zones like Italy, Spain, and New York.
Yeah, Sarah, it showed you how investors, traders, very eager to grab on to that sense that as soon as this curve starts to flatten out and roll over, that potentially could be a signal that the footing was going to get firmer underneath the markets here. We did go beyond the highs that we got to about March 30th, so that's one sort of box checked off, I think, for this rally. I would point out one thing, though. We've had 8 days since this setback in the markets began, where the Dow was up at least the S&P was up at least 3% on a day. The next day was down 7 out of 8 with some pretty big losses in there. So if we can basically put 2 days together to the upside, it would probably be a little bit of a break of that pattern, but we just don't know yet.
We're going to talk in a minute about what investors should do amid all of these wild swings. But first, we want to hit some breaking news on Airbnb. Deirdre Bosa with the details. Deirdre.
Hey, Sarah, Airbnb is raising $1 billion even as the coronavirus outbreak continues to hit the travel industry particularly hard. In a press release, Airbnb says private equity firms Silver Lake and Sixth Street Partners will invest $1 billion in a combination of debt and equity to support the startup's ongoing work. Now, the company did not disclose the latest valuation, but according to 2 sources, in early March, it lowered its internal valuation to $26 billion, and that's down from the $31 billion that it last raised money at in 2017. Now, the terms of the round, they were not disclosed either, but a source familiar with the matter tells me that there is no ratchet and the terms are attractive for Airbnb, meaning that there is no terms that make sure that Airbnb has to go public at a certain time or perform a certain way. Morgan Stanley served as a financial advisor to Airbnb. And guys, this still doesn't tell us a lot about IPO plans. Of course, the company had said previously that it had planned to IPO this year, but obviously it's facing a lot of headwinds amidst the coronavirus and now just raising $1 billion. So it could put that timeline further off. Back to you.
Still, Deirdre, it seems like a pretty surprising headline given that the U.S. hospitality industry is basically flat on its back right now, especially the hotel companies. Not to mention the pain that we felt in financial markets in some of these private equity firms for them to actually get this deal done.
Absolutely. And you look at the private markets, too, and you hear a lot of cases about companies and startups struggling to raise money. But Airbnb is seen to be in this unique position. And what Silver Lake and Sixth Street Partners said is that travel is going to come back. And they and a number of other investors say that they believe that Airbnb is very well positioned to come out of this crisis stronger. So that's why they're raising this money right now. However, we do not know the valuation, but you can probably be safe to assume that it's less than that $31 billion they last raised money at, especially when you look at the travel industry, when you look at Expedia, Booking Holdings, and how they've performed over the last month, which is not good. And those would be the comps when Airbnb does go to the public market. So what I'm told, too, by someone involved looking at a lot of these private companies is that there's a dozen or so that are attractive investments right now because they're thought to endure the crisis, and Airbnb is thought to be one of them.
Deirdre Bosa, very interesting. Thank you. Lori Calvasina, I mean, would you be a buyer of some of these public hotel companies and hospitality companies like Deirdre mentioned, Booking Holdings or a Marriott, or you think Airbnb is sort of an exception here?
So, we're underweight the consumer discretionary sector. One of the big parts of that is the hotel, restaurant, and leisure industry. And I'll just say, qualitatively, I do have some questions about how quickly things like business travel, leisure travel are going to bounce back. So generally with this space, I'd be sitting on the sidelines.
And Lori, just in general, in terms of this rally today, did it alter anything in terms of the trend? Did it make it more or less likely that, in fact, we've seen a low for this phase?
What I liked about today was that it was driven by good headlines on the virus. We did an investor survey last week, and one of the things we learned from that survey is that investors want to see an improving outlook for the virus for stocks to stabilize. Now, there were 2 things that we saw in that survey. One, investors told us about 78% said they need the number of new cases to come down to feel better about markets. But the other thing we saw, about 54% said we need to see progress on a vaccine and or treatment for the virus. And I'm not so convinced that we've gotten a lot of good news on that latter point. I would say in general, this is a good day. I think it was driven for good reasons. I don't necessarily think we are out of the woods yet. And beyond the outlook for the virus, I think we need to think about what are the secondary impacts to the economy, to the earnings outlook. My concern is that what's coming up in terms of those issues, investors may not be braced for the worst there yet.
We have some breaking news. Let's get straight to Meg Terrell. Meg. Hi, Sarah. Well, we're just getting word that the president just got off the phone with pharmaceutical executives to talk about their response to COVID-19. Specifically, the call involved not just the president, but the head of the FDA, Dr. Stephen Hahn, as well as other folks in the White House. The 4 executives on the call, according to the Pool report, are the CEOs of Gilead, Amgen, Regeneron, and Genentech, which is a unit of Roche. And now all of these companies, of course, are working on drugs for COVID-19. Gilead, we talked about last hour, is expected to have its first data on the drug remdesivir in the coming weeks. The other companies also working on drugs, either repurposing drugs or developing new ones, or in some cases like Regeneron, doing both. So the president, according to this report, essentially expressing his gratitude for the work that they've done and the progress they've made, and promising to commit the government's resources toward supporting that science. A lot of folks, of course, saying the regulatory process needs to speed these along. Scott Gottlieb in a Wall Street Journal op-ed saying they should be working even faster to be supporting getting these drugs if they show promise to the market guys. So just hearing about this from the biotech sector, really biotech heavy on this call today. Back over to you.
Meg, thank you very much.
Yeah, I was just going to reference the Scott Gottlieb piece. Meg, can I just quickly follow up? Is there anything the federal government can do for these companies to get them moving faster? Are they lacking any sort of resources or approvals that can get these treatments out there? Well, in terms of the resources, the big companies seem okay. Probably the smaller companies do need support, and we are seeing them get that from both the government and private organizations like CEPI, which is focused on vaccine development. But what Dr. Gottlieb was focused on in that op-ed is really the regulatory process, trying to review things almost in real time so that as data are coming in, they can be looking at it and trying to make sure that they can give the stamp of approval as soon as possible. So really just trying to cut down any sort of red tape or barriers that might exist and speed up that regulatory process.
All right, Meg, thanks again. Appreciate it. Let's get to Bob Pisani for a check on which stocks have driven this rally today, Bob.
And Mike, we gapped up right at the beginning, and when Governor Cuomo started talking midday, we took off again, and we never really looked back. 5 stocks in the Dow had double-digit gains in one day. Double-digit gains led by Boeing, up about 18%. That's been rallying back recently. I think the key here is to look at the retailers. I want to show you Dillard's, 38%. That is not a typo. That is not a one-year return. That is a one-day number. And we had Ascena up 29%, Nordstrom up more than 20%. It was amazing in some of these retailers. Also amazing are the home builders. KB Home, for example, up almost 20%. Again, this is today. This is not a one-year return that we're looking at. The REITs all up. The big mall REITs like Macerich up about 20% on top of that. So we had a big move up, and that beaten up group did not participate in the rally. Did anything not? No, it's those old companies that are out there that are consumer staples like Campbell's, which was down fractionally, about 3% on the day. So where are we? Are we in a bull market or are we in a bear market? People kept asking me all throughout the day. Bull market on February 19th, bear market on March 23rd. That was the bottom. We were down 35%, and now we've rallied 20% off of that low. So is this a bull market, a bear market? I don't know. I call it markets in the middle. I think it's a little premature to start declaring a bull market, but technically that's exactly what's been going on. Guys, back to you. It's been an amazing day.
Yeah, that's what I said. 21% off the lows and 21% off the highs. We are right in the middle, Bob. Thank you. Yeah. Earlier on CNBC, Jim Cramer asked National Economics Council Director Larry Kudlow whether the government was considering issuing a war-like bond, a war bond offering amid the coronavirus pandemic to help pay for all of the relief. Here's what Kudlow said to that.
This is a time, it seems to me, to sell bonds in order to raise money for the war effort, in this case, the pandemic effort, in this case, the effort to keep families and individuals and businesses afloat. I am all for it. This would be a long-term investment into the future of American health, safety, and the economy. So from my standpoint, technical considerations aside, I think the concept is exactly right.
Let's bring in Rick Santelli now in Chicago. War bonds, Rick, what do you think?
Well, the war bonds, they've been called defense bonds, baby bonds, Liberty bonds, savings bonds, Series E bonds. I think it's a great idea. And remember, no interest payments. You have to make them zero coupon bonds. You pay less and you get it all back, face back at the end of whatever maturity. The only thing I would caution, Sarah, is you have to have a specific program because we have a lot of Corona bonds now. 2s, 5s, 7s, 10s, 30s. We're issuing debt like it's going out of style. But we need something very specific so maybe people could go online, see how much money's raised and what it's going against. Okay, let's get to the charts. Here's a 60-year chart of 10-year note yields. This is why we're talking about it, folks. It just goes down, down, and down. And if I showed you a 30-year bond, it'd be the same thing. Really low interest rates. So if we're going to borrow, let's borrow in the best possible way we can to take advantage of it. Here's a 1-week chart of 10-year. You can see today rates have gone up. That's called a bear steepener going on, 10s minus 2s. Bear, price goes down, yield goes up. Why do I bring it up? It's only a few basis points because a steepening curve with stocks strong and the dollar hovering, well, this is the way the game is supposed to work, not the way we've seen it where short maturities get drilled and the curve's movement is based on that. Sarah, back to you.
Rick Santelli, Rick, thank you. And just to wrap up the conversation on stocks after this blowout rally we saw on Wall Street, Lindsay and Lori will ask both of you this question. Lindsay, first to you. You know, if you missed out, if you wanted to long-term buy on some of the weakness we have seen in stocks, you believe that we're going to recover and that things will eventually get back to normal and these are good valuations. Did you miss your opportunity now that we've seen this huge rally? Are we going to get it again or would you be buying now?
Yeah, I mean, I think that at these levels, you can still be a buyer, putting some extra cash that you have available to work. I wouldn't put it all to work. I still, I'm maybe one of the few people today in the camp that we could potentially still see some downside. But what we have seen is that once the market hits a down 20% point and hits that bear market level, 12 months later, you're up by about 10%. Once you're down 30%, you're up about 12% 12 months later. So we still think this is a good time to enter the market.
Last word quickly, Lori.
Look, if you're a longer-term buyer, it's definitely a good time to get back in. If you just look at how bearish investors have gotten, typically when they're this bearish, you're up 12 months later in the stock market. Now, that doesn't speak to the question, have we seen the absolute bottom? I think probably not, but if you really are longer-term, I would buy.
Lori Calvasina, Lindsay Bell, thank you both for weighing in. Good to see you both. So many people are working from home, as I am, but transportation workers are still risking their health every day. Up next, we're going to ask the head of the Transport Workers Union how the federal and state governments can help protect these crucial employees. Plus, Blackstone Chairman and CEO Steve Schwartzman on the market volatility and Blackstone's new big push to help healthcare workers in New York. We'll be right back.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest additions under Your New Episodes. Happy listening.
Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. Wait a second.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast or listen to the Steve Love.
While many Americans adjust to life working from home, one group that remains on the front lines are transit workers, essential to keeping our cities running and transporting medical professionals. But some are raising concerns about whether they're getting the necessary protection. Joining us for more is the international president of the Transport Workers Union, John Samuelson. John, good to see you today. What are your specific concerns right now? Obviously, your members are kind of the essential among the essential workers in many ways.
Yeah, so transit workers across America are the absolute essential, and in many, many ways, we're not being taken care of properly. I think you've noted that the ATU and the TW, the two biggest transit unions in the country, have collectively made a vow to defend transit workers, and we're in the midst of doing that right now, fighting it out city by city, municipality by municipality, to ensure that transit workers have the proper PPE and proper procedures in place to take care of them.
What are they getting right now? Anything?
So it's very mixed. Cities like New York, where there's been an extremely aggressive fight back, New York City transit workers are well protected in terms of PPE. There's some other issues going on in terms of density in the system that we can talk about. But other cities such as Atlanta, Columbus, Ohio, Cleveland are not being taken care of in any uniform way. And I think you mentioned before, what can the federal government do? Well, just like the federal government instituted an economic bailout, a uniform economic bailout, industry by industry, certainly the federal government needs to step up, whether that be OSHA or the FTA or on the airline side, the FAA. They need to step up with uniform protections for workers, because right now it's not going on, it's not happening, and transit workers are dying.
When you say it's not going on, not happening, obviously you've been communicating with those cities and systems that you say are not doing enough. What's the response been, and I guess even with the federal government? So the federal government is not a uniform system like it would be in the airline industry. Transit providers are done municipality by municipality. We're asking now for the first time that the federal government institute uniform measures across the board. There's been no response from them yet. State by state, city by city, the response has been mixed, where workers have the determination to fight back and defend their livelihoods. PPE is coming, proper protection is coming. Where workers don't fight back, the companies are having their way with them and people are dying.
So what can you do, John? I mean, obviously these are essential services. They're essential workers. They might not have thought themselves to be that before this pandemic started, but obviously that's the position they find themselves in. Is there talk of a strike or any kind of action you can take?
Yeah, so absolutely, transit workers, we've always recognized ourselves to be essential workers in society. We are the circulatory system in any calamity that gets frontline workers into the fight, whether they be paramedics or home aides or food industry workers. So in the aftermath of the 9/11 attacks, transit workers stood tall. In the aftermath of Hurricane Sandy and various other hurricanes, we've always delivered for society. The obligation is reciprocal, though. Folks must deliver for us. The government must deliver for us and have us work with proper protection. And to answer your question, we will organize fight backs. We are advising workers not to work unless they're given proper protection. It's idiotic for a municipality or any government entity or a private employer, for that matter, to say that they cannot obtain proper protection. The unions themselves have been able to obtain it, and if we've been able to obtain it, the government certainly can. So it's a situation where it's become obvious in some cities that the employers, whether they be government agencies or private entities, simply don't care about the health and safety of transit workers and are really willing to use them as cannon fodder. And we're not going to be used as cannon fodder. We will fight back.
John, we hope you get what you need. Keep us posted. And thank you for joining us.
Thank you.
And we thank, of course, our transit workers and all of our essential workers. John Samuelson. Still ahead, we will speak with Blackstone's CEO, Steve Schwartzman, about his company's big donation to coronavirus relief in New York and the impact the virus is having on the economy and on Wall Street. And as a reminder, you can always watch or listen to us live on the go on the CNBC app. We'll be right back.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today. Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today.
Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. Wait a second.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building.
For these and more, search sports and scroll down to the world of wrestling.
Hey everyone, it's Tremaine Lee, MSNBC correspondent and host of the new podcast, Into America. In our latest episode, Republican giant and longtime Senator Lindsey Graham is for the first time ever facing a real challenge to his Senate seat. Can a relative newcomer to the scene, a black Democrat in a red state, win this fight? I head to South Carolina to find out. Search for Into America wherever you're listening right now and subscribe.
It's TuneIn Sports on this day. April 6, 1992, Duke's men's basketball beats Michigan 71-51, winning back-to-back titles for the Blue Devils.
And here comes Duke on the break. Behind the back, Hurley, the hill. Why not? That's the play that was available. Nobody back for Michigan because they're sending 5 to the board.
To listen to conversation.
Squawk Box, divided by distance, united by business.
This is the new reality we're all in.
Essential breaking news, global market moves, helping you navigate the new normal. Squawk Box, 6 a.m. Eastern. Watch and listen live on the CNBC app.
Third biggest point gain for the Dow ever today. Let's go back to Mike Santoli taking a look at investor positions right now in equities. Where are we at this point, Mike?
Yeah, Sarah, looks like it was pretty washed out before at least we got this rally recently. Deutsche Bank tries to get a composite positioning indicator here. This is fund flows. This is futures positioning. It's hedge fund positions and things like that. And what you see, first of all, is before we started to go down in the markets, we were at pretty close to top of the range positioning, exceeded only once during this bull market. Then we started plunging right around here. It's like, well, the market's looking a little bit oversold. Maybe hedge funds and others have lightened up plenty, and then it just cracked right through the floor. So you see a little bit of a pickup right here. All it really tells you is that the systematic and tactical traders and some of the fund flow folks are basically very, very light. They've vacated the market at this point. A lot of the selling pressure has probably eased up for that reason. I would say if we dialed this back to 2000.